Yes, good morning, everyone. Yes. Okay, just one more minute and then we'll start. Please let me know, am I audible? Okay. Yes, marathon notes will be provided in the link description box. Okay, let's start then. So, we'll be starting with part B today. Since part C is already covered by Harshvardhan sir, part B. First of all, I'll tell you what all we are going to cover. As you all know, the very important topic in your part B is marginal costing, which is also known as decision making. Yes. Second part is standard costing. And the third part is ABC. Right? If you ask me the ranking, obviously I'll give a triple star to marginal costing, that is decision making, because if you go through the past papers, majority of the questions you'll be finding on marginal costing. So I'll be starting with very basics. Very basics. First half an hour it will be like you'll be studying only intermediate, the basic rules, and then we'll go step by step to the advanced questions. In this marathon, I'll be covering the basics also, and also I have made a sheet for all the exam questions, which I will be providing you with my handwritten solutions. So let's not waste any time and start with the basics of marginal costing. Okay. So if I start with marginal costing, the very basic thing which you all know is sales minus cost is profit. Sales minus cost is profit, right? Marginal costing states that this cost should be divided into two parts, and which is variable and fixed. And that's why if you make a cost sheet in marginal, it states that you start with sales, then variable cost will give you contribution, minus the fixed cost will give you profit. Right? This is the basic criteria. That means this contribution is important because it states that decision making should be based on your contribution. You can say variable cost, that is also known as the marginal cost. Decision making should not be made on the fixed cost, because that should actually not be considered in decision making. So what we have to do in this chapter is to focus on the contribution, right? To focus on the contribution. I'll be starting with the basic things. Just one sec. Okay, I'll just first start with the basic things first, like what is the formula for contribution and all, right? Let's start. So contribution, the very basic formula which you all know. PV is contribution divided by sales into 100. This is the very basic formula which you all know, right? This is the very basic formula, contribution. Now, if I ask you the PV ratio, the profit volume ratio, also known as the cost volume ratio. So, can you please tell me what are the another formulas? Any one of you, PV ratio, contribution divided by sales, this is the very basic formula. Can anyone tell me what another formulas do you know about PV ratio? Yes, I'll be checking the comment box for this one. Okay, 100 minus variable cost ratio. Okay, one of the formula, variable cost. Okay. Okay, perfect. Change in profit upon change in sales, change in profit. Okay, fine. Also, the changing contribution upon change in sales is one of the formula, right? So we have the basic formulas, that is change in profit upon change in sales into 100. This is also one of the basic formula to understand the PV ratio. That is, if the two stages are given, we can find out the PV ratio exactly. Right? Okay, so fine. We'll start with one basic question, very basic one. If I have sales of 1000 units, let's say at 50 rupees, right? So I'll get a total sales of 50,000 minus the variable cost. Obviously, it will be of 1000 units into, let's say, 30 rupees. This will give me the answer as 30,000. What we get is 20,000, and this is known as the contribution. This is known as the contribution, which is nothing but 1000 units into 20. Right? This is very basic thing. If I ask fixed cost, let's say 15,000, the profit comes to 5,000. This is my basic profit. Right? This is my basic profit. Yes. So now if I ask you, at what point will I get break even? Will I get break even? So break even is that point at which there is no profit, no loss. No profit and no loss. Now how to find the break even? Only one connection. Break even is entirely dependent upon fixed cost. To understand the basic formulas, break even is fixed cost divided by contribution per unit, or fixed cost divided by the PV ratio. Now why there are two formulas? This one will give me the answer in units, and this one will give me answer in rupees. Is the very basic form. Right. So yeah, if I ask you the questions now, what will be the break even now? Since I know the fixed cost is 15,000 and the contribution, which is per unit, is 20. If I divide, I get 750. The answer will be in units. The answer will be in units. Right. And if I ask you in rupees, 15,000, and now I want the PV ratio. How to calculate the PV ratio? The formula which I gave earlier, PV ratio, is contribution divided by sales into 100. The contribution is 20. The sales is 50 into 100 will give me the answer as 40%. The very basic one. Divide by 40%. So this answer, just 1 second. Yes, it's 37,500. Yes, 37,500. Now, if I go from year to year, it's nothing but selling price. We just need to multiply by the selling price, and we already get the answer. So this is the basic question, very basic question, right? This is very basic. Okay. Now, what do you mean by MOS? MOS. MOS is margin of safety. MOS is margin of safety. Margin of safety means we are in profit now. We are in profit now. Now, what is the exact meaning of MOS? It states that as soon as you cross the BEP, that is the break-even point, right from the first unit, you will start earning. Earning what? So the rule is after break-even, contribution itself becomes the profit. contribution itself becomes the profit. Most of the students go into formulae but ignore this fact. Ignore this fact. For example, if I say there are 750 units, at 750 units, I'll be earning nothing because the profit will be zero because it is the break-even point. You can cross-check by this also. You can make a cost sheet for 750 units. You will get the profit as zero. Below that level, you will be in losses. And above that level, you will be in profit. But if I ask you, if I sell 751 units, that is one additional unit. If I sell only one additional unit, what will be my profit? Without making the cost sheet, can anyone tell me the answer? If I sell 751 units, what will be my profit in this question? Yes, 20 is the perfect answer because the contribution itself becomes a profit. That means if you make a cost sheet for 751 units, the entire concept, this only, for 751 units, 50, 30, 20 and so on, you will get the profit as 20 rupees. That means I can clearly say I don't need any fixed cost over here right now because the fixed cost is already covered till 750 units. After that, only the variable cost counts, and therefore this chapter is known as the marginal costing. That is, the decision making will be based on only your marginal cost, that is the variable cost, and not on fixed cost, because till break even I have already covered my entire fixed cost. And therefore, now, what is MOS? How is MOS related to? MOS means directly profit. Like as I say, break even is connected to fixed cost, but MOS is connected to profit. Again, the same thing. If I want the answer in units, it will be contribution per unit, or if I want the answer in rupees, it will be PV ratio. So if I say this, profit was 5,000, contribution per unit was 20, this will give me 250 units. And if I say profit is 5,000, PV ratio 40%, this will give me the answer as 12,500. This will give me the answer as 12,500. That means if I multiply by selling price, I get the answer in rupees. This is margin of safety. Now, if you closely watch, this 1,000 was actually divided into two parts. The first point was the BEP, that was 750 units, and the second part was MOS, that was the 250 units. That means a total of 1,000 units. This clearly states that my total sales is always divided into two parts. My total sales is always divided into two parts, which is BES plus MOS. If you cross check, 750 plus 250 will give you 1,000 units. Obviously, the answer was in units. If I go in rupees, BES in rupees was 37,500, MOS was 12,500, will give me the total as 50,000. That means if I ask in percentage, 100% is the total sales, what percentage will give me the BEP? Obviously, this is 1,000, this will give me 75%, and this will give me 25% since it's 250. That means I can clearly say if BEP is 75, the MOS has to be 25. If BEP is 80, the MOS has to be 20. If BEP is 60, the MOS has to be 40, and so on. In short, till now, I have concluded about two formulas, which is the break-even and the MOS. Or else I'll write this like this: the break-even and the MOS. Break-even, if I want the answer in units, break-even is only connected with fixed cost, and therefore it is fixed cost divided by contribution per unit. And if I want the answer in rupees, the formula will be fixed cost divided by PV ratio. This is the basic form. If I go with MOS, MOS is purely related with profit. If I want the answer in units, it is always contribution per unit. And if I want the answer in amount, that is rupees, the answer will be in PV ratio. So how to remember this formula is very basic. Break even is directly connected with fixed cost. MOS is directly connected with profit. And if you want the answer in units, divide by contribution per unit. If you want the answer in rupees, divide by PV ratio. And the difference between this is nothing but into selling price. You just need to multiply by the selling price, you always get the answer. Now, there is one more formula associated with it, and that is desired sales. I'll add the formula here only. What do you mean by desired sales? Desired sales is a certain amount of profit you desire already. For example, in this question itself, I ask you, what sales should be achieved to earn a profit of 15,000? I want a profit of 15,000. How many units to be sold? Yeah, what is the sales value to be achieved? So the rule is the combination of both. Just add the numerators, that's it. The logic is fixed cost plus, instead of profit, I'll write desired profit divided by contrib per unit. And the same thing, fixed cost plus desired profit divided by PV ratio. Now if you closely watch, it is nothing but break even is directly connected with fixed cost. MOS is directly connected with profit, and a combination of both will give you the desired sales. Let's see in this question what will give me the answer. Fixed cost was 15,000. I also need a profit of 15,000, desired profit 15,000 divided by contribution per unit. What is the contribution per unit? It was 20, right? And adding up 30,000 divided by 20 will give me 1500 units. 1500 units. So if I sell 1500 units, I'll get my answer, the desired sales. That is, you have to sell 15,000 units so as to achieve a profit of 15,000. If you say in rupees, you can directly multiply by selling price, which was 50. That means you should achieve a sale of 75,000. You can cross check this by PV ratio also. 15,000 plus 15,000 divided by 40%. If you go with this also, you will get the same answer. 30,000 divided by 40% will give me as 750. That is 75,000. So this is the very basic thing. Yes, this is the very basic thing. Yes, Swastika, correct answer. Right. These are the very basics of marginal costing. So this is what you should know, the table. We should go from year to year with selling price and year to year with selling price. So what are the basic rules? Break even is directly connected with fixed cost. MOS is directly connected with profit, and desired sales is a combination of both. If you want the answer in units, divide by contrib per unit. If you want the answer in rupees, divide by PV ratio is the formula. Apart from this, we have also studied the total sales. Total sales, and total sales is nothing but BES plus MOS. The answer may be in units, the answer may be in rupees, or the answer may be in percentage. Everything is dependent on this one, right? Everything is dependent on this one. Okay, fine. Now, we'll head to the second formula, that is the indifference point. Indifference point. Now, what do you mean by indifference point? Indifference point is nothing but where you are indifferent, that is, the decision making cannot be made, or else if I have two cases, both are same for me, it hardly matters which option to choose, right? Can any one of you give me the formula for indifference point? Yes, can any one of you give me the formula for indifference point? Okay, the indifference point is change in fixed cost upon change in variable cost. Now, the rule is, everyone knows the formula. More or less, many of the students know this formula because you are studying, you have already studied through the intermediate, right? You have already gone through your intermediate for group 1, group 2, and you are into finals now. But do you know the exact meaning? Below this level and above this level, which product to choose one? Below this level and above this level, which product should I choose? I want the answer. Suppose I say indifference point is 5,000 units. Suppose, example, 5,000 units. Suppose there are two cases, case A and case B. If I sell 4,800, which product should I choose? If I sell 5,200, which product should I choose? I need the answer. Yes, the concept is hidden behind this. I want the entire concept. I don't want the formula exactly. I need the concept. Below this and above this, which product to choose? Yes. So I haven't given any numericals. No numericals in this question. I just need the concept. What is the concept? Okay, perfect. The concept is very clear. Below this level, that is below the indifference point, I should choose an option which has a lower fixed cost. And above this level, I should choose an option which has lower variable cost. Because initially at the starting phase, I should not go with the higher fixed cost. I should go with the variable cost only. The lower the fixed cost, more will be the profit. But after a certain stage, I will say no. Variable cost should be lesser because I am at a growing pace now, and this level is very important. At 5,000, both my profits will be equal. That means I am indifferent at this point. I don't have any problem. But above and below this level, which product to choose is the decision making. And that's why this is known as decision making. Okay. You can just note down the formulas, and this will surely help you. Although I have included these formulas in my worksheet, all the formulas have been noted there. Okay. What do you mean by shutdown cost? Shutdown cost. Okay. First of all, I'm asking the formula, and then I'll go with the concept. What do you mean by shutdown cost? I need the formula. Many of the students don't know the meaning of shutdown cost also. Why exactly, why this is calculated, shutdown? I'll just give you the concept. Why is this calculated? Okay. Yes, the meaning is correct. Sales level below which a firm should consider to shut down. Okay. So now the rule is, presently I'm incurring some fixed costs. Okay. Let's say I'm having a rent of rupees 80,000 and I'm paying salary of rupees 20,000. That means total of 1 lakh. I'm paying, right? Obviously, rent is my fixed cost, salary is also my fixed cost, right? Both of these are my fixed cost. But presently, due to the market conditions, I'm not in a position to make some profits. So I want to shut down. I want to shut down for a certain period of time. Maybe it's a seasonal business. I should shut down because the sales are not at that peak period. So what should I do? I should shut down or not? So how to decide that? How to decide that whether should I shut down or not? Example, salary, that this rent, I am ready to forego rent. That is, if I shut down, I won't pay rent. But this salary I'm giving to a skilled labor, and losing this skilled labor I cannot afford. That means if I shut down also, I will pay this labor, although he's not working, because I don't want to leave him. That means I'm still incurring certain cost. I'm still incurring certain cost after shutdown also, right? And therefore, I should make that below this level, that is below 20,000 also. If I'm not earning 20,000 also, I should shut down. Above that, I should not shut down. This is the level. So what is the formula for shutdown? What is the formula for shutdown? It is the fixed cost minus, that is the present fixed cost, minus additional fixed cost which will continue after fixed cost, upon, again same, if you want the answer in units, it is contribution per unit, or if the answer in rupees, it is PV ratio, is the formula. Yes. I added additional fixed cost, that is actually shutdown fixed cost. Okay, so this is actually the formula. We'll be learning all the concepts also, the question also we'll be doing on each and every concept. Okay, one main concept is the limiting factor. Very important. Most of the questions are on this one. Very important, limiting factor. Now what exactly is limiting factor? I'll just give an example first. Okay, I'll just keep on adding the question a bit. I'll just keep on holding the question. Okay, so if I ask you, I have two products, or else I'll go with three products, A, B and C, right? The selling price of A is 50, B 40, C 30. Less variable cost, I have 40, 20 and 20 again. I get a contribution of 10, 20 and 10. Okay. Or else I'll make just one thing. I'll make it 5. Okay. The contribution is 5. Right. The contribution is 5. If I ask you, which product will you make first? What should be answer? Yes, I want an answer. If I ask you which product to make first, what should be answer? Will it be A, will it be B, or will it be C? Most of the students will answer B because it is giving me the maximum contribution, right? I am here to earn profits, right? I am here to earn profits because I need the majority contribution, and the majority of the contribution will be given by the product B. Obviously, I should go with B, right? Okay. Now, what if I say they use labor hours? They use labor hours, and labor hours for A, it takes 2 hours to complete one product, or else I'll make 4 hours. It takes 4 hours to complete 1 unit of A. It takes 5 hours to complete 1 unit of B, and it takes only 1 hour to complete product C. It takes 4 hours to make one product. It takes 5 hours for product B, and it takes 1 hour for product C. Still, my answer will be B. You will say, sir, you haven't calculated. Yes, because I haven't added any restricting or limiting factor yet. But what if I say the labor hour is restricting? That is, at certain stage, I cannot increase my labor force. That is my limiting factor. So whatever the limiting factor is, you need to divide by that. That is, whatever contribution per labor hour I will get, the highest contribution I should go with that product. That means I'll calculate contribution divided by the limiting factor, and limiting factor is labor hour per unit. This will give me 10 divided by 4, which is 2.5. 20 divided by 5 will give me 4, and 5 divided by 1 will give me 5. Now my decision changed. Because if I ask the contribution per labor hour, C is giving me the maximum contribution per labor hour, because or else I can say in 1 hour C can earn a contribution of ₹5, B can earn a contribution of 4, and C can earn a contribution of 2.5. Yes, perfect. Okay, so the ranking is I should go with C, then with B, and then with A. This should be my ranking. Okay, fine. I'll continue with the question. Just as I said, I'll keep on adding some questions, a few bits in the question. My present sales as of now. My present sales as of now is A, 5,000 units. B, 3,000 units. And C, 2,000 units. The maximum demand for this is the maximum demand. A, B, and C. The maximum demands. It's 10,000 units. It's 5,000 units. And it's 4,000 units. Okay. What I now want is how many labor hours are there right now? How many labor hours are there right now? If I say the labor hour is a limiting factor, how many labor hours have been used in this question? Yes, I need the answer. Okay, 37,000 is the first one. Okay, let's wait for the others. How many labor hours have been used in this question? Yes, 37,000 is the correct answer. And how to calculate that? Since my present sales are there, obviously, if I'm selling this product, I would have made that. And to make these products, individual hours are already given. So to calculate this is also one of the important steps. Present, that is the labor hours, maximum labor hours, is for A, 5,000 units. And to make it, we have to, we need 2.5 hours, right? B, it's 3,000 units, and to make 1 unit of B, I require 4 hours. And C, 2,000, to make, we take 5 hours, sorry, 1 hour. We take 1 hour. So if you multiply, you have a total of 37,000 hours. You have a total of 37,000 hours, right? Perfect. And now, how to utilize this? First of all, I want the present profit. I want the present profit. This is the question. I need the present profit, or else the total fixed cost I'll also give you. Okay, 5, 10, 15, 60. The total fixed cost is 80,000. Okay, I need the profit, the total profit. Yes, please. Presently, how much am I earning? I need the profit. Presently, how much am I earning? Okay. I got the answer as 40,000. Okay. 50, 60, 10, 120, 40. Okay, 40 is the perfect answer. Check others getting the answer. Okay. So if I go with the contribution, how much am I earning? A is giving me a contribution of 10 per unit, not per hour. Please make sure I'm taking unit. So you have to take contribution per unit. Okay. 10. So that means 50,000. B is giving me a contribution of 20, that means 3,000 into 20 will give me 60,000. And C is giving me a contribution of 5, that is into 2,000 will give me 10,000. 50, 60 and 10, a total contribution of 1,20,000. Total contribution of 120 minus the fixed cost 80 will give me the profit as 40,000. Right. So what is the present profit? The present profit will give me contribution, that is total contribution from A, I am earning 50,000. From B, I am earning 60,000. From C, I am earning 10,000, giving me a total of 120. Minus the fixed cost, 80. The total profit is 40,000. Perfect answer. The total profit is 40,000. Okay. Can I increase my profit without even changing the labor hours? I have a limited capacity of the labor hour, right? Labor hours cannot be extended beyond this capacity. So utilizing the same resources, can I change my decision to earn more profit? Well, the answer is yes, and this ranking will help you. What is the first thing which came into mind if you have the ranking? Obviously, I should go with product C first because it is giving me the highest contribution per labor hour. Since labor hour is the restricting factor, I divided that and I will check what is the highest ranking. The highest ranking is first for C product. That does not mean I'll make it unlimited. I'll make it unlimited. Only produce C because this is giving me the highest number. No, the maximum demand is the restriction. I cannot produce more than 4,000 because if I produce more than 4,000, it won't be sold. The maximum demand for the product C is 4,000. I should go only with 4,000 and not with the other products. So, if I have maximum availability, maximum hours, how much is available? Maximum hours, how much are available? Obviously, this is 37,000 because I have already calculated that using the present sales. First, what will you make? First produce C, product C. But how much? Not unlimited. Maximum. Up to max demand. Up to maximum demand. And how many hours will be utilized in that? How many hours will be utilized that? So 4,000 units and 1 unit requires only 1 hour. And therefore, only 1 hour, that is 4,000 hours will be utilized. So what is the balance hours? I will get 33,000 as the balance hours. So I made first product C because C will give me the maximum profit, maximum contribution. I went with the product C. Now I'll go with product B. Then product B. How much? Not unlimited. Up to maximum demand. If I have the resources, I will go up to maximum demand, not beyond that. What is the maximum demand for B? It is 5,000. And how many hours will it take? It takes 5 hours for one product. That means total you will require 25,000. Do you have 25,000 hours with you? Well, the answer is yes, you do have 24,000 hours with you. And therefore, I will make 5,000 units into 5 hours. 25,000 hours will be utilized for this product. And the balance of hours, which is 8,000 hours, will be utilized for product A. Will be utilized for product A. If I ask how many units of A, number of units of A, so it will be 8,000 hours, and 1 unit requires 2.5 hours. Sorry, 1 unit requires 4 hours. So divide by 4 will give me the perfect answer. Divide by 4 hours. So 8,000 divided by 4 will give me 2,000 units of A. 2,000 units of A. That means by using the available resources, the restricting factor was 37,000 labor hours. First, I will produce C up to maximum demand. Then I will go with B up to maximum demand again. And whatever the balance is, I should go with product C. Clear? Sorry, product A. And now, if I check, what was contribution per unit? What was contribution per unit for ABC? We have already calculated 10, 20 and 5. 10, 20 and 5. I'll write over here 10, 20 and 5. And how many number of units have you made now? I have made 2,000 for A, B 5,000 and C 4,000. What is the total contribution? 20,000, 1 lakh and still 20,000, giving me a total contribution of 140 minus the fixed cost, which is 80. And I have earned something extra by just decision making. I changed my mixing. I changed my product mix. I went for C, then for B, then for A, utilizing the available maximum resources, and I changed my profit to 60,000 by using the same 37,000 labor hours. That is, initially I was earning only 40, but now I am earning 60. Now I am earning 60. Yes, perfect answers. Okay. Right? So utilizing the same resources. So what is the rule? If there is a limiting factor, we should divide by that factor. And whichever the contribution, whatever the contribution is highest, we should go with that product and not with the least product, right? Obviously, I should go with product C because it was giving the highest. Okay. Just as I said, I'll keep on changing the question. What if there was no maximum demand? That is unlimited demand. Unlimited. Whatever you will produce, it will be sold out. Can you please tell me which product will you make now and how many units? There is no maximum demand. Perfect. We'll produce only C. Why? Because it is giving the highest answer. There is the highest contribution per hour, right? And how many units? So obviously, it is taking only 1 hour. So 37,000 hours will give me 37,000 units of C. 37,000 units of C, and 1 unit will give me 5 rupees. So 37,000 into 5 will give me 1,85,000 as my total contribution. Minus the fixed cost 80,000, 1,05,000 will be my entire profit if the demand is unlimited. But again, changing the question, as I said, yes, there is no maximum demand, but the problem is I have to produce minimum to stay in the market. Because if at all I discontinue a product, the problem will be the demand for the other products will also get disturbed. For example, if I stop this pen, making this pen, the demand for my other pens also will get reduced because this is the most running pen, the least profitable. But I cannot discontinue this. I have to make a minimum order. So how to utilize that? If I say ABC has a minimum demand of 1,000 units each. 1,000 units each. If there is a minimum demand, first complete that minimum requirement. You need to complete that minimum requirement first. That is, how many hours will you require for this minimum? How many hours will you require for this minimum? So the answer is, I'll require 4 hours for this, 5 hours for this, and 1 hour for this. 4, 5, and 1. Let's check. Yes, 4, 5, 1. So this is 4,000 hours. This is 5,000 hours. And this is 1,000 hours. That means minimum requirement is for 10,000 hours. You cannot touch this 10,000. You have to produce, means you have to produce, because minimum answer, that is the minimum production, is compulsory. You cannot go below this. You have to produce 1,000 each. Now, whatever the balance capacity is, utilize it as per your convenience. But first, keep aside for minimum. The minimum production should be kept aside first. So I need 10,000 hours for the minimum production. 37,000 I was having in total. I kept aside 10,000 hours. So I can utilize 27,000 hours as per my convenience. I can go with A, I can go with B, I can go with C. Can you please tell me which product to go with? Obviously the answer will be C, because it is giving me the highest one, right? And therefore I should go with 1,000 units of A, 1,000 units of B, and whatever the extra capacity is, I should go with C. Since it is taking only 1 hour, 27,000 units of C can be made from this, and plus 1,000. That means my answer should be now 1,000 units of A, produce 1,000 units of A, 1,000 units of B, and 28,000 of C. If there is no maximum cap available. So the rule is, if at all there is a minimum production, minimum demand, you have to produce minimum. At that time, we have to keep aside the number of hours or the limiting factor for minimum first, and then utilize the balance as per your convenience. Okay. So I hope the points are very clear. How to utilize the maximum one, the max, right, and also the minimum. Okay. Now it is not at all necessary that you should go with only the labor hour or the machine hour. We can go with the limiting factor. Suppose in this question, I'll just add one more column to it. Sorry, one more row to it. The raw material per unit. The raw material required per unit. The raw material required per unit is 2 kg for A. 2 kg for B and 4 kg for C. Okay. The raw material per unit required is 2 kg, 2 kg and 4 kg. And now if I say labor hour is no more the restriction, labor hour is no more the restriction. The limiting factor is raw material because raw material comes from outside, maybe export, from outside India, okay. And there are certain differences about the transport or something. Material cannot be reached on time. So I have a limited material. So now the rule is, what should I produce now? Since my limiting factor has changed, I will divide my contribution with the limiting factor now, and therefore I will divide contribution divided by raw material now per unit. So this will be 10 divided by 2, this will give me 5, 20 divided by 2, this will give me 10, and 5 divided by 4 will give me 1.25. Now which product should I make? Obviously the ranking will be for product B first. Then I should go with A, and then I should go with C. This should be the ranking because my limiting factor has changed. So the answer keeps on changing upon depending upon the limiting factor. Yes, as I said, if there is no limiting factor, contribution itself is my decision making. This chapter is all about marginal costing, right? The decision making, and the decision making should be based on your contribution itself. So if at all there is no requirement, there is no restricting factor, the contribution or the PV ratio will give me the answer, whatever the highest contribution is. But if at all there is a limiting factor, divided by that limiting factor, and whichever product gives you the highest answer, you should go with that product first. Obviously, not unlimited up to the maximum demand. Yes, I hope all the points are very clear now. The minimum requirement also, the maximum also, how to utilize the present labels. If at all anyone is having any query regarding this concept, feel free to ask, or else I will continue with the next point. Yes, Pawan, the formula sheet, the exam questions, the MCQs with my handwritten solutions will be provided. But moreover, I'll say, do not depend upon the formula, but depend upon the concept. So if you know the concept, you can make the formulas by yourself also. Okay, so let's continue with the next concept, and that concept is product mix. The product mix. Suppose I say, I have two products, okay, I have two products. The selling price is 40 and 30. The variable cost is 30 and the variable cost is 18. The variable cost is 18. The contribution for both of them will give me as 10 and 12 per unit individually, right? Okay, just first let me calculate. Okay, and my total fixed cost. total fixed cost is 3,24,000. Okay. And my product mix is 3:2. My product mix is 3:2. I need individual break-evens for A and B. Let's see how many of you can calculate. I repeat my question. I need individual break-even for A and B, and the ratio should be 3:2. Yes. I need an answer. Yes, you can go with units here. Nineteen four forty. Tejashree, the incorrect answer, because if you closely watch, it is not the answer in 3:2. Aboli, wrong answer. Eluru, yes, perfect answer. Just don't forget this ratio. You also have the ratio with you, right? 3:2. That means your final answer, whatever the final answer is, it should be in the ratio of 3:2. No, Aboli, incorrect one. Okay, fine. So basically, there are two formulas for this. Okay, just stop giving answers. First, I'll teach you the concept. What is the entire concept? Okay, if I ask you what is the formula for break-even, you will say so break-even is connected to fixed cost, and fixed cost divided by contribution per unit will give an answer. Now the problem is, what the exact problem is? If I go with break-even directly, fixed cost divided by contrib per unit. Do you have the fixed cost? You will say yes. But if I ask you, do you have the contribution? You will say, sir, I have two contributions with me. Which should I take? If you add up, the answer is incorrect. The answer is incorrect. If you add up, the answer is incorrect. What is the problem? I have only one fixed cost, but I have two contributions with me. So the rule is either make this contribution as one, because I want only one contribution, right? Or split this fixed cost into two parts, for A differently, for B differently. You can go with anything, but the rule is I want one fixed cost, so I want contribution also one. But if I have two contributions, you can split the fixed cost. So the rule is either make the contribution as one or separate the fixed cost. These are the two methods for this concept. I'll teach you one by one, both the concepts. But institute doesn't ask which method to follow. You can follow anything as per your convenience. Both the methods will give you the same answer. So what I'm doing is I'm making the contribution as one. Usually students prefer the second method, but I'll teach you both the methods. Okay. The first method, method one. The first method is make the contribution as one. Make the contribution as one. As one means what? I have two products, two individual contribution, but I don't want two individual contribution. I want one single contribution with me. Now, one single contribution means I will use the word composite contribution. This can also be termed as the average contribution. The composite contribution. That means an average contribution. So, this 10 rupees, whatever you are using, you have to use with this ratio. So, the ratio is 3:2. That means 3/5 and 2/5. So, with A, I am getting a contribution of 10 into 3/5. Plus, from B, I am getting a contribution of 12 into 2/5. And if I go with this, I'm getting a contribution of 6 and I'm getting a contribution of 4.8, a total contribution of 10.8, the average contribution from both the products. The average contribution from both the products. This is also known as the composite contribution, or else you can say the weighted average contribution. This is nothing but the weighted average. Okay, so this is 10.8. Now, what was my concept? I made the contribution as 1 and I know the formula for break-even now. What is the formula for break-even? It is fixed cost divided by contribution. Now, fixed cost is 3,24,000 and contribution is 10.8. If you calculate 324 divided by 10.8, this will give me 30,000. This will give me 30,000. Obviously, for both of them, divide into 3:2. For A, you'll be getting 18,000 and for B, you'll be getting 12,000 units. This is the first concept. The rule is to make the two contribution as one using the product mix, or you can say the sales mix. Right? This is the first concept. Or I also have the method 2 for this one. What is method 2? What is method 2? Split the fixed cost into. That is, you have one fixed cost, right? 3,24,000, but you don't know how much is for A and how much is for B. So you need to split again using this product mix. Now, how to split this? So, what is the contribution for A and B? What is the contribution for A and B? You will say 10 and 12. What is the product mix given to you? The mix given to you. The mix is 3:2. Just multiply them. That is, calculate a product of these two. 10 into 3 will give me 30 and 12 into 2 will give me 24. What you have to do is divide fixed cost in this ratio. Divide fixed cost in the product ratio. Divide fixed cost in the product ratio. So if I divide the fixed cost, how much is the fixed cost total? 3,24,000. I want to divide in 30:24. I need to divide this fixed cost in 30:24, which is 3,24,000 divided by 54 into 30. This will come as, for A, I'm having 1,80,000 and 24 will give me, for B, I'm having 1,44,000. So finally, my purpose has been solved. I made the fixed cost as two separate parts. Now, using the individual technique, so I have for A differently, for B different. Right? What is the formula for break even? You will say, so fixed cost divided by contribution. Perfect. So what is the fixed cost for A? It is 1,80,000. What is the contribution for A? It is 10. What is the answer? 18,000. For B, what is the fixed cost? 1,44,000. What is the contribution? 12. This will give you as 12,000. If you closely watch, this is in the ratio of 3:2. I got the same answers with two different methods. So the logic is, I knew the formula. The formula was fixed cost divided by fixed cost divided by contribution. But the point was, I was having only fixed cost and two contributions. Either make these two contributions as one using the product mix, or split this fixed cost into two parts and make it individual. Yes, is the point clear to everyone? Both the methods. Well, I have added a similar question to my sheet with a solved one. So that will surely help you in your revision. Yes, please let me know, are both the concepts clear? Okay. Okay then. So I'll give you one more question, a small question on this itself. I need a quick answer on this now. Okay. So I'll directly give you the contribution. Okay. I'll directly give you the contribution for A and B. The contribution was 40 and the contribution was 30. The product mix, the mix was in the ratio of 3:4. Okay. Just give me 1 minute. Okay, I'll just change the ratio because it is very odd ratio. You'll get confused. Make it 2:3. That will be very simple one for you. And the total fixed cost is 8,50,000. Yes, find break even for both. Yes, give an answer quickly. Follow any method, whichever you like. Institute will never ask which method to follow. They just need answers. You can follow any method. Ten thousand, 15,000. Okay. So the ratio is matching 2:3. Others, please check. Is it 10 and 15, everyone? Okay. So many of you are getting the answers. I hope the concept is very clear. Okay. So these are the very small concepts which you should actually know. The major concept was the limiting factor. Okay. The major concept was the limiting factor. Fine. The next concept is the relevant cost. The next concept is the relevant cost. Now, this is very important. Why? Because majority of the students are not able to know what do you mean by actually relevant cost. As the name clearly indicates, relevant. That means it is relevant for the decision making. It is relevant for decision making. Now, what exactly does relevant cost means? Look. So the rule is very clear, right? A very small rule. If at all you are paying something, yeah, or else I'll say, if my decision making is getting changed because of this cost, it is relevant cost. If my decision does not change, it is no more relevant for me. For example, a very basic one, okay. I have a shop, okay. I have a shop. I have one shop. So I own a shop and I have two options with me. I have two options with me. First, to start a business. I'll start a business, okay. Obviously, by doing business, I'll earn something. Let's say I'm earning 50,000. I'm earning 50,000, okay. And the other is to rent out. Other is to rent out. And if I give him rent, he will give me 20,000 as rent, right? If I ask you which one should I go for, you will say you should start a business because you are earning more in business, right? Okay. Obviously, I went for earning and earning. Okay, I directly went for earning, right? But if I ask you, I have to pay taxes, property tax. Okay, property tax. 6,000 here also, 6,000, and I have to pay 6,000 here also because it is I own a shop, may it be rent out or I am using the business out of premises. I have to pay property tax, and property tax is paid by the owner itself. If I start business, I have to pay this. If I rent out, still I have to pay this. So will my decision change on this cost? The answer will be no, because in any case you are paying that. In any of the case you are paying that. That means this cost is not at all relevant for you because it is not at all changing my decision. So if the decision changes, it is relevant. If the decision does not change, it is not relevant. Now, I'll give you a few examples on that. Let's start with material itself. Okay. Let's start with material itself. So I'll give you a few examples on that. Okay. I have raw material A. I have raw material A in stock, 400 units. The book value per unit. That means I might have purchased at that value, or whatever the answer is. In books, it is showing at rupees 5 per unit. Okay. In books, it is showing as 5 per unit. And NRV. If I sell this right now, I will earn only 4 per unit. I'll get only 4. Okay. The NRV. And one is the replacement cost. What is replacement? If I purchase another product on apart from this, or else to replace it, I will pay rupees 6 per unit. I will pay rupees 6 per unit. Now, now the decision making will change as per your requirements. Okay. I'm telling you that I need to manufacture. Just understand the concept. The theory is in the notes. Just try to understand the concept. If I manufacture a product X, which requires need of this raw material A, I want to manufacture X, and I already have A in stock. Okay. Now, if I use this A on a regular basis, for other products, that means whatever I have in stock, I will be using there only. Why will I use an X? Because this is not unlimited. There is no unlimited stock with me. This is actually used by another products. May it be example product P. So I'm also making a product P in which this raw material is being used. So do I have anything extra with me? The answer is no. There is no extra. That means to manufacture X, I need to purchase from outside. And to purchase from outside, I need to pay rupees 6. That is the replacement cost. And therefore, the replacement cost will be 6 per unit. Okay. If I say there is raw material B, these are raw material. Okay. This is raw material. I have in stock 500 units. 6 per unit, 5 per unit, and 8 per unit. Okay. Now understand. Now, to manufacture X, I need 800 units of B. To manufacture X, I need 800 units of B. Now, do I have 800? The answer is no. I don't have 800. So I need to purchase, right? I need to purchase. But I already have in stock. How much do I have in stock? The answer is 500. But you will ask whether this is used in another product. If the answer is yes, you are using on regular basis, you have to purchase the entire requirement at market value. That is the replacement cost. But if I say it was in excess previously purchased, I purchased, but it was so bulk that it is in stock for a longer period of time. It is no more in used. That is, I don't want B to be used further in any of the product. So obviously, I will use it in my product X, that is to manufacture X. So I will use it, but at which cost? If I say that I'm not producing X, I need to sell that B because there is no requirement for B at all. So I will sell it. I will sell it which cost? Obviously, I will sell it 5 rupees because cost or NRV, whichever is lower. I will sell it 5. That means I will use this 500, but the unit price will be 5. So I'll use 500 units at 5, but this won't complete my entire requirement. This is not complete my entire requirement, right? Because 800 units, I want 800 units. I have only 500 units. That means I have to purchase 300 from outside, and to purchase it, I'll pay rupees 8, and therefore 300 into 8. Whatever the total is becomes my replacement cost. Yeah, you can say the relevant cost for decision making. Right? Another concept. If I also use product C, that is raw material C. This is in stock for 800 units. Okay, for 800 units. And it is 4 per unit, 3 per unit, and 5 per unit. I need 600 units. I need 600 units. Now, do I have sufficient stock with me? You will say yes. So you have enough stock, 800 units you have in stock. But I will ask, is this raw material used by any of the other products? If the answer is yes, I need to purchase from outside. If the answer is no, obviously you will use in this, right? So I'm asking you, I'm telling you, C is not at all used. Not at all used by any of the products, right? Will I use C in my product now? The answer is yes. I will use C in this product. Do I have sufficient stock? The answer is yes. Now the rule is which cost? Either 4 or 3, whichever is lower. Cost or an arrow which is lower. I will value this 600 into 3. This becomes my relevant cost. What if this would have been 6? Example. If this would have been 6, I would have used at cost or NRV, whichever is lower, that is 4. So the concept is, if you are having a particular raw material in stock, right, and you are already using it for another product, that means you cannot use in the new product. If you are not using in the new products, that means you need to purchase. If at all it is in excess due to previous bulk purchase, you can use this product, you can use this entire product, but at which value? Cost or NRV, whichever is lower. So if I have to purchase from outside, replacement cost. If I am using this product, it is cost or NRV, whichever lower. But whether to use or not depends upon that basis, that is whether you are using that raw material in another product or whether you are not. If it is in excess, use that at which value? Cost or NRV, which is lower. If you are purchasing from outside, use the replacement cost. I hope the point is clear. This is on raw material. If I ask labor, okay. I have two types of labor, skilled and unskilled, okay. I have two types of labor, skilled and unskilled. I have 5 laborers with me. Okay, I have 5 laborers with me, to whom I pay, say 10,000 per month. 10,000 per month. My peak period is April to December. But February, March is not at all my peak period. In fact, there is no business at all. The laborers come, sit and go. That's it. The labor come, sit and go. Yes, Tejashri, I will. Just let me complete this concept. I will give you. Okay. So A to D, that is April to December. The labors are in full use because it's my peak period. January, February, and March, this is idle. Idle means complete idle. In fact, I should remove them. Because 10,000 per month I am paying for one labor. There are 5 labors. That means 50,000 a month I am paying. 3 months. That means 1,50,000 is my extra cost which I am paying for idle time. So I thought of one point. Why not to remove these labors? Why should I pay them? Then I realized that if I remove them right now, I need to hire again in April. That means I still again need a workforce. But to hire them again, hiring cost will be there. I need to hire. That means I need to train them. The training cost will be there. So I thought of engaging them in certain products. I started a new product. Example, new product X, which is not at all profitable for me. I don't want to make it profitable. I just want my laborers not to sit idle. I am ready to give product X at no profit, on cost only. I don't want any profit. That means I am ready to give the product at break even itself. I don't want any profit. I just want that this 1,50,000 should not be a loss for me. I just need to cover this. That's it. Right? Now tell me, if I don't make product X, will I pay this 150? The answer is yes. Yes, because you are paying, because you don't want to remove the labors. If you remove, you again need to hire in the month of April. That means whether or not I make product X, I will keep on continuing to pay this 1,50,000, right? If I ask you are not making product X, are you paying 150? The answer is yes. If you are making product X, are you paying 150? The answer is still yes. Then is it relevant? The answer is a big no. It is not at all relevant cost, because in any ways you are paying this 1,50,000. This is no more a relevant cost for me. This is no more relevant cost. But for making product X, I need to hire two skilled laborers extra. Two skilled laborers. I need to hire two skilled laborers at 20,000 per month each. Is it a relevant cost now? The answer is yes, because you have used this, or else you have hired these two laborers just for this product. This was not the cost which you were actually paying initially. This is just because you have to produce product X, you hired two more laborers at this point. And therefore, the labor cost, that is the relevant cost, will be, there are two laborers, 20,000 per month for 3 months will be the relevant cost, right? This 150 is not relevant, but yes, this labor is relevant. Okay, I'll just make a note for raw material. Okay, this is cost. Yeah, you can say book value, you can say NRV, and you can say replacement cost. Raw material is important, not the labor, but the concept is, if your design gets changed, it is relevant. If your design does not get changed, it is irrelevant. That means should not be included for your decision making concept, right? The above example I gave you for unskilled labor, in any ways I was paying, whether to make or not, it is not relevant, and therefore unskilled labor was not at all relevant cost. But I need to hire two skilled laborers, that was relevant. Okay, cost, NRV, replacement cost. If you have a raw material in stock, which is used by another products, what is relevant cost for you? What is relevant cost for you? The answer is the replacement cost. Because if you have in stock, but suppose I'm making this pen, okay. For making this pen, I need some plastic. I have plastic in stock, but that plastic is just sufficient to produce this pen. Now, if I want to manufacture this calculator, I need to buy the plastic, because if I use that plastic, I need to purchase plastic for this pen then. That means I won't be using the material in stock. I need to purchase from outside, and to purchase from outside, you need the replacement cost. That is nothing but the purchase price from market. But if it is in stock, which is due to excessive purchase, excessive previous purchase or bulk purchase, then what is relevant cost for you? What is relevant cost for you? The cost or NRV, whichever is lower. Are the 2 points. Cost or NRV, whichever is lower, are the 2 points. Okay, I'll give you one more example. Let's check how many of you can answer this. I have two raw materials, okay. I have two raw materials, A and B. In stock, 600 units and 800 units. Kgs you can say, or you can say units. There is a book value, there is NRV, and there is replacement cost. There is book value, there is NRV, and there is replacement cost. The book value of this is 10, the NRV is 8, the replacement cost is 12. The book value is 9, the NRV is 7, the replacement cost is 15. Not 15, I'll say 10. I'll say 10. I'm saying that product X requires product X requires 500 kgs of A and 1000 kgs of B. 500 kgs of A and 1000 kgs of B. A is used regularly by other products and B is in excess due to previous bulk purchase. I need the relevant cost for A. I need the relevant cost for B. Relevant cost for A and the relevant cost for B. I need the relevant cost for A and I also need a relevant cost for B. For A it is 6,000. Okay. And for B it is 7,000. Into 8. Now for B, I guess incorrect answer. Okay. So for A, as I said, A, can you use A? The answer is no, because you are already using another product. That means you need to purchase A. Now the question is how much to purchase. Whatever your requirement is, to purchase that. You need to purchase A at the market price. So for A, what is the relevant cost? For A, what is relevant? You will purchase 500 kgs at the replacement cost, that is 12, which is 6,000. Perfect. But for B, how much requirement is there? 1,000. How much do you have? You have only 800. Can you use this 800? The answer is yes, because it is already in excess. So at which price? 9 or 7? Whichever is lower. So I'll use this B, 800 at 7 rupees. But this does not complete my complete requirement. I still need 200 units, 200 kgs more. Obviously 200 kgs I don't have in stock. I need to purchase that, and what price will I purchase? I'll purchase from market at rupees 10, and therefore 200 kgs into 10 will give me 2,000, and this will give me 5,600. The total relevant cost for me is 7,600 and not 7,000. Yes. Okay, so initially 7,000 was the incorrect answer. I guess students made it 1,000 into 7 itself. But the point was, I was not having that 1,000 in stock. I was having only 800 in stock. 200 in any ways I need to purchase. 200 in any ways I need to purchase. Right? Okay. So I hope the point is now clear. The concept about the relevant cost. Now, why is there a relevant cost basically? I'll just try to explain because you should know the concept. Listen. If I want to set a selling, if this is a new product, okay, if this is a new product and this requires B, this requires raw material B, B is something plastic or something like that, right? Okay. I require B for this product and I also need to set a selling price, or else I should know what is the cost, right? Since it is costing, I should know what is the cost. So I need to purchase raw material for this. If I purchase B from outside, it will be at 10, right? If I purchase B from outside, it will be at 10. But since I already have a product which I actually will sell in the market, I have B and B will only realize rupees 7 if I sell in the market. So instead of selling at 7, why should I not use that? That means I'm using that material at rupees 7. It's something like that. Someone is selling me at 7 because I already have that extra. And the raw material which you have extra, that will realize cost or the NRV whichever is lower. The NRV was 7, as if I have sold a raw material to outside, but from outside I have purchased that at 7 only, because someone was selling at 7. That means for costing purpose, I actually purchased raw material at rupees 7, but I purchased only 800 kgs. What about the other 200? No one was ready to give me at 7. So I had to purchase it at 10. Ultimately, total payment for B I had to make is 7,600, which is relevant for costing purpose. I hope the point is clear. What is relevant? What is relevant? Okay. Next. And the last important concept, I'm just completing the concepts, okay? This does not mean that I'll not taking the questions. I'll be taking a lot of questions because marginal costing is very important. Okay. The last is transfer price. The last is transfer price. I'll give a double star rating to this. Transfer price is very important. Now, what is exactly transfer price? What exactly does it mean? So I'll just say you one thing. I have a company. I have to run a company, and I am the owner of the company. Okay. What is my main aim? To earn maximum profit, right? To earn maximum profit. But I have a lot of divisions, and it is very difficult for me to keep a check on each and every division. What is going wrong or what is going correct? What adjustment should be made in the entire business? I have a lot of divisions. So I'll just take an example of 2 divisions, so that it will be easy for you to understand the concept. I have 2 divisions, divisions A and division B. I have 2 divisions, division A and division B, and I have made a manager, Mr. A and Mr. B. Mr. A and Mr. B are the 2 managers of my 2 separate divisions. And I have told them that you are a profit center now. What do you mean by profit center now? Profit center means they are solely responsible for their profit. They are solely responsible for their profit. Means A should strive only for division A. He will not think of the company. He will not at all think of the company. But B, if I ask with B, B will entire say, I will only check my division because it is my profit. It is my responsibility to earn maximum profit for B. So individual, they are responsible for their profits. Okay. But as a company, I also have to run. Now the rule is, there is one product which A is selling in the market. Okay. Which A is selling in the market. And that product is actually an input for B. That product is actually an input for B. Right? That product is actually an input for B. Now, where can this be purchased? B can purchase either from A or from outside. Right? Input or input. So B has 2 options with us. First is either purchase from outside or purchase from another division of the same company. If I say which will be beneficial, obviously you will say A will be beneficial because A will earn a minimum profit, or at least I'll say no profit. No profit. No profit. Why no profit? Because it is the same division. But it does not mean that I won't earn a profit at any point of time. A will say that I have to earn because it is my responsibility to earn a maximum profit. Now, when will A be commanding? When will A be in command position? Simple rule, very simple rule. If I am A, now think if I am A, and whatever this pens I am making, I am producing, it gets sold in the market easily. And this pen is also an input for B. If it is getting sold, I do not have any extra capacity. Why will I give B then? If I am giving B, I will say, look, if you want to purchase it at my market price because it is already selling in the market. I don't have any extra capacity. But what if I am having a capacity of, say, suppose 1,000 units. Say 1,000 units. And as of now, 600 are sold. Only 600. Do I have extra capacity? The answer is yes. 400. 400 extra capacity. Right? If this is produced, I can give it to B, right? I can give it to B. Now please tell me, to produce this 400 extra, which cost I will incur? Obviously the answer is the variable cost. I will incur only variable cost. I will not incur any fixed cost, right? I will incur variable cost because in any case, 600 I am making and selling in the market. I have a capacity of 400, and if at all there is a requirement of B, I will say B, don't worry, I have an extra capacity. I'll just provide you. Just give me the variable cost. That's it. I'll just give me the variable cost. That's it. I just need to cover my variable cost. Only give me that. If at all you wish to give me certain profit or else purchase from outside, whatever you wish to. But I will give it a variable cost only if I have an extra capacity. What if B is asking for 500 units? Do I have the capacity to give him 500 units? The answer is no. I have just 400 extra. That means I will give it a variable cost. But if I give him 500, that means from this 600 sold, I have to sell in the market only 500, and 100 I have to give to him B. So I will ask B, just because of you, I'm not selling this 100 in the market. That means I'm losing out on something. I'm losing my contribution on this. So at this time, you need to compensate me about this. That means if I'm earning a contribution of say rupees 10, 100 into 10, 1000 I'm losing just because of you. So I also need this 1000 to be compensated by you, and I will add at my transfer price. What is transfer price? The price at which I will give it to B. Now let's explain this with certain numericals. I'll explain this with certain numericals. Okay. All the concepts. So this is A and this is B. Okay. Contribution per unit, or else I will say selling price per unit. Selling price per unit is 40. And my variable cost is 25, earning me a contribution of 15. Now just try and understand the concept, because I will keep on changing the question. Okay, so be focused, because at every point of time the answer will get changed. Okay, so I'm earning a contribution of 15 right now. I have a maximum capacity. I'm not talking about B, I'm talking only about A. Okay, I have a maximum capacity. I have a maximum capacity to produce 4,000 units. I have a maximum capacity of 4,000 units. Okay. And B requires 1,000 units from A. 1,000 units from A. Right. Now I'm telling you whether A will provide to B or not. The rule is very simple. He will give only if he is having an extra capacity. If there is no extra capacity, if he is foregoing some demand, he will ask you for the compensation also. I'll just provide you with the transfer price. Okay. B has an option, or B can purchase from open market at rupees 35. At rupees 35, or I'll say 45. Okay. So I'll make it 40 plus he needs to pay transport of say 5,000. Now the point is, how much B requires? 1,000. B can purchase from open market at rupees 40. Obviously, say suppose there is one supplier, and supplier is ready to give B at rupees 40, and also he needs to pay transport of rupees 5,000. Okay. So this will be the input for B. Now I am telling you from the point of view of A. Case 1. Demand is 4,000 units itself. So the first question, do I have any extra capacity? The answer is no. I do not have any extra capacity. So if I don't have any capacity, that means to provide B, I need to forego on my present sales. My present sales is at 40. So I will ask B, look, it is because of you I'm not able to sell in the market. I'm ready to sell in the market at 40, so you also give me 40, or else I will not give you. I will not give you. If you want, you give me 40, because just because of you, I will not be able to sell in the open market. I want 40 means I want 40. So 40 becomes my transfer price since it was my full capacity. I was utilizing my full capacity and the entire sales was being done in the market. Right? That means what will be the transfer price? What will be my transfer price? Transfer price will be 40 rupees itself, because I was not having any capacity with me. I asked B, if you want, I can give you by not selling in the market, but I'll lose on something, right? So whatever I'm losing, you need to compensate. I'm losing 40, that is minus 50, and 25 is the variable cost. You need to compensate 40. So he gave me 40 rupees. Okay. If I ask you, if you are the manager of B, will you accept at 40? Please tell me the answer. Will you accept at 40? Yes, please give me the answer. If you are the manager of B, will you accept at 40? Okay, Sneha says yes. Yes. Obviously yes. Q. Why? Why is the answer? Because if I take from at 40, there will be no transportation cost. There will be no transportation cost. Obviously, if you are selling from one division to other division, there will be no transport cost. And we will say 40. Okay, I'll pay you 40, because from outside also I'm getting at 40, and I'll save on my transport. So the saving will be of 5,000. I'm ready to pay it at 40. Okay, fine. So this is the answer. First answer. Okay. The second point. Can he demand 42? Can he demand 42? Please tell me. Can he demand 42? Will we accept at 42? Please tell me. Will we accept at 42? Please tell me. Okay. Again, yes. Why? Because if I purchase from outside, what is the total amount I'm paying? I'll pay 1,000 into 40, that is 40,000, plus 5,000 on transport. That means I have to pay 45,000. Right? That means I have to pay 45,000. But if I purchase from A, 1,000 into 42, I have to pay. That means only 42,000. Is 42 also acceptable? The answer is yes. Is 43 acceptable? The answer is yes. Is 44 acceptable? The answer is yes. Is 45 acceptable? The answer is indifferent, right? The answer is indifferent. Is 46 acceptable? The answer will be a big no, because already he is getting the product at 45,000 at his place. Right? At his place. Okay. So if X is strong, he can charge any price above 40 also, but not more than 45. Okay, fine. So this is also known as the bargain method. The second one, case 2. The demand is say 2,500 units. That means out of the maximum capacity of 4,000, I'm just selling 2,500. Do I have any additional capacity to provide B? The answer is yes, I have 15 units. But how much to provide? Only 1,000. To make that 1,000, I will incur only the variable cost. And that itself becomes my transfer price. since I have an extra capacity, right? I have an extra capacity. That means, so I'll just charge, A will just charge the variable cost. A will just charge the variable cost. That means transfer price will be 25. That's it. I'm having the capacity, right? Because I'm making, suppose I am A, okay. I have 4,000 capacity. I'm just selling 2,500 in the market. I have an extra capacity. Why will I not make? I'll just cover my cost and give it to you. You also want, right? You also want. So this becomes my transfer price. But what about the case 3? Case 3 is very important, okay. Case 3 is important because majority of the questions are on case 3. My demand in the market is 3,300 units. My demand in the market is 3,300 units. I have a capacity of 4,000. 3,300 have been sold. How much extra do I have? I have only 700 units, right? Obviously, this 700 capacity I will give it my variable cost, but I'll give it my variable cost. But the problem is, if I have to provide B with 1,000 units, I have to forego on this 300 units. That means I'll be losing out on something, right? I'll be losing because if I have to give to B open market, I can sell only 3,000. That means 300 demand is short. That 300 demand I'll be losing on something. How much will I lose? I'll lose my contribution, right? So I'll ask B, look, I want this contribution to be compensated from you. I want this contribution because this becomes my opportunity cost. This is my opportunity because I could have sold this in the open market and I would have earned. Just because of you, I'm not earning. So it is your responsibility to compensate for the same. So what will be my transfer price? Just have a look. Transfer price will be, I'm providing 1,000 units, right? I'll charge the variable cost, that is 25. I'll say you have to pay 25,000. Yes, you have to pay because I'm giving you 1,000 units. 25 rupees is my variable cost. You need to compensate that plus my opportunity. My opportunity cost, you also have to pay this. This is nothing but the contribution lost. How much did I lose? Yes, how much did I lose? I lost on 300 units, right? I lost 300 units. And how much was I able to earn? The contribution, 15. And how much was in total I able to earn? 4,500 I lost just because of you. I lost 4,500 just because of you by not selling in the open market but providing to you. That means total you will pay me right now is 29,500. This becomes a total. So what is the transfer price? What is the transfer price? It becomes 29,500 divided by 1,000 units. It will give me 29.5 per unit. Case 3 is very important. Most of the questions are on case 3 itself because just to provide my another division, I lost on something. Now that lost on something should be rightly compensated. And that becomes my opportunity cost, or else you can also say the relevant cost for decision making. It's 29.5. Yes, Swastika, perfect answer. Right. Okay, so I'll give you a small question and then we'll shift to the worksheet. I have product A and product B. The selling price is 80. The variable cost is 50. So the contribution is 30. Okay. Now if I say the maximum demand, maximum capacity is 8,000 units. First one. Present sales of A. Obviously I'm talking about A, okay. Present sales of A is 8,000 units only. B requires 3,000 units. Please tell me what is my transfer price. Yes, I want the transfer price. Yes, please tell me. Yes, 80 is the correct answer. Tejas is not 30 better. 80. I will also be charging the variable cost, right? Variable cost obviously I will charge because to make this I am incurring some certain cost. And why will I charge this 30? Because just because of you I am losing out something, right? Presently, truly speaking, presently I am selling it in the open market. I don't have any capacity. And if you want 3,000 from this, pay me whatever the market is giving me. Pay me whatever the market is giving me. The market is giving me 80 rupees, right? 50 for my covering, that is variable cost, and 30 is I'm earning. Whatever the market is giving, you need to give me this because the simple reason 50 rupees you have to pay because the market is the variable cost is 50. And why 30? Because I'm losing on 30. I'm losing on 30. That means you have to pay me 80. You have to pay me 80. Yes, 80. Okay. So the transfer price is 80. What if the second case? In the second case, my present sales is 4,500 units. My present sales is 4,500 units. Yes, please tell me what should be my transfer price. I need the transfer price. Yes, please tell me. $50, okay. Others, please check. Are you getting 50? Okay, Mohit. Yes, the correct answers. Yes, because I'm having the extra capacity, right? I do have the extra capacity with me, and I will say whatever my cost is, just cover me that, and that will be all, right? That will be all. And therefore, just pay me rupees 50. That is the variable cost. Because I'm not at all losing on anything. I have an extra capacity. Just give me my variable cost. That's it. I give it to you. But, what if my present sales? What if my present sales is 6,000 units? Yes. Now this is challenging for you all. I need an answer. Quick. Yes, give me an answer. Let's see how many of you answer this. If you answer this, you understood the concept of transfer pricing, and this is only the concept of transfer pricing. Sneha 70, okay. Aboli 60, okay. 60, okay. Notsuma, Mohit 70, okay. Some of the students are going on the wrong track. Please check. First of all, how much does B require? How much does B require? B require 3,000, right? I asked you one thing. If you have to provide B, obviously you will incur variable cost. Yes. So what is the variable cost you are incurring? Variable cost. You are incurring 3000 units. 3000 units into 50. That means obviously 1,50,000 in any case we will give you, right? We has to pay 1,50,000 because variable cost is 50, right? 1,50,000 they have to pay. Now the question is, are you losing out on something? Are you losing out on something? Presently, how much you are selling in the market? 6,000. So what is the extra capacity do you have? What is the extra capacity? Extra capacity is only 2,000. Extra capacity is only 2,000, but obviously this 2,000 you will give it to B. But B is asking for 1,000. So now I will say, if I give you 1,000, I don't have 1,000 extra with me. Obviously I have to make it from the present sales. I will not sell in the market, but I will give you. That means I will lose on something. How much on lose? I will lose on 1,000 units because 1,000 units I am giving from my present sales to you. So it is your responsibility to compensate that contribution. So what is my contribution lost? What is my contribution lost? I lost my contribution on only 1,000 units because I was having 2,000 units with extra. I was not earning on that 2,000, but on 1,000 I was earning. It is your responsibility to compensate that. 1,000 units into 30 will give me 30,000. So I will ask you for 1,80,000. I will ask you, pay me 1,80,000 for how many units? For 3,000 units. For 3,000 units. So per unit will be 180 divided by 3,000, which is 60 rupees. Which is 60. What are you getting? 43.33. But 60 is the correct answer. Listen, I'll give you the concept again. Okay, I'll give you one concept. What is transfer pricing? Transfer price is variable cost itself. Okay, that's it. That's the concept. So if I'm providing you, you have to pay me with whatever the cost I have incurred, right? Whatever the cost I have incurred, you have to pay me. So if this pen, it has a cost of 20 rupees. If I'm giving you, I'll say you have to pay me 20 because I'm giving this 20, right? So you have to pay me this 20. Okay, fine. This is the variable cost. You have to pay me this 20. But now I am telling you, this pen I can sell in the open market at rupees 25. Will I earn on this? The answer is yes. So if I'm giving in the market, by not giving in the market, I'm losing out on something. How much I'm losing? 5 rupees. So I'll ask you, give me the variable cost plus whatever I'm losing. Whatever I'm losing, it becomes my opportunity. So I'm losing only on 1,000, right? I was already having a capacity of 2,000. I was not at all earning at 2,000. So for 2,000, give me the variable cost only. But for 1,000, I will give you from my present sales. Because if I'm selling in the market, I'm earning something. Now, if I am giving you, I will not sell in the market. That means I lose out on something. You have to pay me that. And whatever I have lost, you have to pay me. That is 3,000. $2,000 units. Okay, just one thing. Okay, you are going on the another formula. Okay, I'll just teach you that only. Whatever you are saying. Okay, this 2,000 at 50, right? Okay, but am I giving only 2,000? No, I'm giving you 3,000. So will you give me variable cost for 1,000 also? Yes. Obviously, 2,050 variable cost true, accepted. What about 1,000? Am I not incurring cost on that? Yes, I incurred a cost of 50. So you have to give me that also. Plus this 1,000. Where did this 1,000 came from? This came from this 6,000. Was I earning on this? The answer is yes. So you pay me that. What was I earning on this? I was earning 30 rupees on that. So you have to pay 1,000 into 30 also. That's it. Listen, 2,000 I was not incurring, I was not earning anything. So I asked you, on this 2,000, I'm not at all earning anything. Just give me my variable cost. Okay, you said okay, variable cost, right? I'm also providing you with 1,000. I also incurred variable cost on that. Yes, give me that also. But on this 1,000, was I earning something? Yes. How much was I earning? I was earning 30. Give me that also. That's it. So this is yes, Tejas, you are correct. So in short, 1,000 into 2,000, So 2000 and 1000 into 50. So I made total 3000 into 50 because in any case, I'm giving you 3000 units. Give me 50 rupees, 3000 into 50. Plus whatever I lost, you need to cover that also. That is 30,000. Total of 1,80,000. Okay. For everyone, I don't know your name, but yes, it is clear. Okay, I'm glad you understood the concept. Okay. So same question. I'm not ending the question. Same question. What if my present sales was 6,800 units? Please tell me now. My present sales was 6,800 units. Now I want a correct answer. I'm expecting a correct answer from each one of you. Okay, Jyoti. I'll calculate first. Okay, a little 68. Okay, 2 ones are 68. Yes, others, speak quick. Okay, Sneha 68. Okay, so how much extra do I have? Extra capacity. Obviously, I'll say 1200 units, right? For 1200 units. That means the balance 1800 I have to take out from this. If I'm taking 1800 from this, I'm losing out on 1800. So my transfer price. Variable cost is for 3000 units because I'm supplying 3000 units to you at rupees 50. 1,50,000 you have to pay me, right? And you also have to pay me on whatever I'm losing. I'm losing on 1800 units, right? I was having an extra capacity of 1200 because that is, I was not earning on this. But on the balance 1800, I was earning. So you need to compensate that. And what is the lost contribution? That is 1800 into 30, which is 54,000. That means total of 2,04,000. And per unit will give me 2,04,000 divided by 3,000. 68 will give me the correct answer. Yes, all correct answers. I hope the entire concept is clear on transfer pricing. Right, the entire concept on transfer pricing. There are small concepts which will get covered in the exam questions as soon as the question comes. Okay, so I'll be covering that also. So what I have covered basics, right? Basics, break even, MOS, the basic concepts, the break even and the MOS, the desired sales concept, the desired sales, desired profit, okay, desired profit, the indifference point, the shutdown cost, the shutdown, right? And then we covered the very important one, the product mix. Product mix, I gave you two methods. Then I gave you the limiting factor. I gave a triple star rating. Limiting factor, very important because the decision making. Again, limiting factor, I taught you up to maximum demand, when there is unlimited demand, and also if there are minimum requirements, right? If there are minimum requirements, that also I taught you. After that, we went to relevant cost for decision making, and then we learned transfer pricing, right? So this is what we have learned till now, right? So what's the time right now? It's 12. Okay, we can continue, and then we'll directly take a lunch break after completing a few questions, right? So I've made a sheet, a few MCQs, and then, so this is the entire sheet. You can see, right? I've given every formula. If you closely watch, PV ratio, PV ratio, PV ratio. Total sales divided into two parts, and the important table. Important table, if you see in units and in rupees, the break even, the MOS, and the desired sales. It's very important. Break even is directly connected with fixed cost, MOS is directly connected with profit, and sales is the combination of both, right? Indifference point, shutdown cost, everything is covered. Basic formulas, okay. So there are, if you can see, I gave a question, product mix and the sales mix, which we have already covered with the two methods. If you closely watch, option 1, option 2, I gave you two methods, right? So I have solved one concept so that you can go with the solution, go through the solution. That will be beneficial for you, how to write the paper and how to get the answers, okay? I have given both the solutions. Next. Okay. So we'll be solving this entire question, okay? We'll be solving this entire question. Let's see how many of you can crack that. I'll be checking the question and I'll be asking a few questions on that, okay? Moon Limited produces product XYZ and has decided to analyze its production mix in respect of these three products XYZ. We have the following information. Direct material per unit and variable overheads per unit. We have direct material and variable overhead. We don't have the labor. Labor is not given right now. We have the per unit here. Per unit is given. So it is 168, 140 and 92. Direct labor, the rate per hour is given 4 and 8. And we have two departments, department A and department B. We have two departments. Hours per unit, X requires 6 hours. Can you please tell me how much X we have to pay for department A for X? Since it is using 6 hours and 1 hour it is 4, I have to pay rupees 24 to department A for X, right? 6 into 4. Again, for 10 hours, 10 into 4 will give me 40 rupees. And for Z, 5 hours, 5 into 4 will give me 20 rupees. So I'm just writing over here how much you are paying, okay? How much you are paying? You are paying 20 rupees. If it is 8 per hour, labor hour is 8 per hour, in X you require 6 hours, 6 into 8 will give me 48. 15 hours, 15 into 8 will give me 120. And 11 into 8 will give you 88 rupees. That means you are paying these departments the individual labor cost. Now I am asking you, what is your total variable cost? What is your total variable cost? Variable cost for X and for Y. You have the direct material X, Y and Z. You have direct material 160, 120 and 80. You have variable overheads of 8, 20 and 12. And you have direct labor with two departments, department 1 and department 2. I already calculated 24, 40, 20, 48, 120 and 88. This is the total variable cost for me. Let's add up 160 plus 8 plus 24 plus 48. This will give me 240. 120 plus 20 plus 40 plus 120 will give me 300. 80 plus 12 plus 20 plus 88 will give me 200 again. This is my total variable cost. I hope you have the point clear. The point is very clear till here. Okay. This is X, Y, Z. This is the total variable cost. Okay. Next one. From the current budget, further details are as below. Annual production at present. If you remember, at present, if there is a limiting factor can be calculated by the present units. Present sales is 10,000, 12,000 and 20,000. Estimated selling price. I also have the selling price 312, 400 and 240. I also have the variable cost, selling price and variable cost. I can get the contribution directly. Sales department estimate of possible sales in the coming years. Obviously, this is the maximum demand. This is the maximum demand. Maximum I can make 10, 12, 16 and 24. Next. There is a constraint on supply of labor in department A is the important point. Department A has a labor constraint, not department B. My first question to you, how many labor hours are available in department A? my first question. How many labor hours are available in department A? Yes, how many labor hours in department A? Salary 2.8 lakhs. Okay. You're very quick on your calculator. Okay. So the rule is whatever the present sales multiplied by the individual hours. That is 10,000 into 6, 12,000 into 10, and 20,000 into 5. This is the total labor hours, because whatever I'm making at present, it is sufficient, right? If I'm able to sell this at present, this is sufficient. Okay. So since that is a constraint, what we have to do is we have to take the ranking. So what I'll do is I'll just check the contribution per labor hour now. So X, Y, Z. Selling price is given, right? Selling price is 312, 400, and 240. Less the variable cost. I already calculated the variable cost above: 240, 300, and 200. What is the contribution? 72, 100, and 40. This is the contribution. If there is no constraint, obviously I will go with product Y. Why? Because it is giving the highest contribution, right? But there is a constraint. So whatever the constraint is, you need to divide by that factor. What is the constraint? There is a labor hour per unit in department A. Labor hour per unit in department A. In department A, how many labor hours are used? So it is 6, 10, and 5. 6, 10, and 5. 6, 10, and 5. So what is the contribution? Divided by labor hour. $12, 10, 8. 12, 10, 8. And if I ask you for ranking, obviously the first rank is for 12, the second rank is for 10, and the third rank is for 8. This is my ranking. In MCQs, you might be asked with the ranking. You just need to give the ranking in the MCQs. Okay. So this is also one of the questions. Okay. So this is the ranking, right? Now please tell me which product will you make first. Obviously you will go with one. That is X. Should I make it unlimited? The answer is no. Up to maximum demand. So I'm having 2,80,000 hours. Right? Please tell me, what will you make first? Will it be X? Will it be Y? Will it be Z? Obviously, the answer will be X. How many units? Will it be 10 or will it be 12? Please tell me. Yes, how will you utilize? What will we make first? Yes, sir, 12,000. First, you will make 12,000 of X because the first ranking. 12,000 will need how many hours? X requires 6 hours into 6. That is 72,000 hours is utilized by X. The balance hours. Balance is how much? 280 less 72 will give me 2,08,000 hours. Then it's Y. Y maximum is 16,000. How many hours does it require? Y requires 10 hours. So 16,000 into 10 is 160. And 48,000 hours are left with. And this 48 should be utilized to produce Z. How many units of Z? Number of units of Z. It's 48,000 divided by the time taken. Time taken is 5 hours. By 5 will give you 9,600 units. 9,600 units, right? So you got your answer, right? X, Y, and Z. You will go with maximum demand with 12,000, maximum demand with Y, and Z you will reduce because Z is giving a lower contribution per hour rate, and therefore will make 9,600 for Z. And after this, you can easily calculate the contributions per unit you already have. You can multiply, you can check whether there is a fixed cost given. No, it isn't given. So you need to end it at the contribution itself. Yes, perfect. Okay, so I have given a solution, a standard solution, how to utilize it. Okay, with the given formulas also, how to calculate, how to give the ranking, maximum sales, and everything. I have given everything. Hope this will be beneficial for you all. Okay, so we now move on to the MCQ sheet. Right, we now move on to the MCQ sheet. Let's check how many of you can crack. So we'll play this game. There are around 18 to 20 MCQs. Let's see how many of you can crack this. A few are very simple, a few needs a bit of understanding. Let's see. So the question is in front of you. MOS is asked. In units is asked. Yes, you will get this material at the end of this session. The reason why I haven't shared this yet is it has all the solutions in it, and I want everyone to solve it with me, not to look and give the answer. That's why I haven't shared it yet. Okay, Tejasri 2000. Others, please check. Is it 2000? Okay, 2000. Option A, 2000. Okay. Yes, Mahesh, Jyoti, you'll be getting every material, okay? Every material will be shared in the description box. The reason why I haven't shared it yet is it has all the solutions in this. I want everyone to solve it with me, not to just check, just to read and give the answers, okay? I want everyone to solve it with me. The reason why I'm taking the marathon live is that you should be able to solve it with me. Okay, fine. So majority of you are having an option A. The reason is MOS. The formula for MOS is profit divided by contrib per unit, right? Contrib per unit. You can easily calculate the profit. How much is the profit? It is sales less variable cost will give me contrib, less fixed cost will give me profit. Once you get the profit divided by contribution per unit will give me the answer. I've given the solution over here. I've given the solution over here, right? Listen, multiple solutions can be allowed, multiple process can be allowed. The answer will be same. I went with break even and then with MOS. You can directly go with MOS. It's not an issue, right? Number of units sold I first calculated. Then I went for break even, and total sales is nothing but break even plus MOS. So the balance is nothing but MOS, right? Okay, fine. Sure. There's the second question. Let's see. The second one. Yes, a bit challenging one. A mathematical. $48. Okay. Option C, 48. Okay. Yes, perfect. Jyoti, perfect answer. Okay. For those who are not able to get this, please check. The company has a capacity of 80,000, right? The full capacity is 80,000, but presently it is selling 20,000 at rupees 100. What the point is, the demand is sensitive to selling price. That means it is completely dependent on the selling price. And it has been observed that every reduction of 10 in selling price, the demand is double. So if you reduce 10, the demand will get double. Presently, the selling price is 100 and the demand is 20,000, right? In order to make it at full capacity, just check. If I reduce to 90, 10 rupees, the demand will get doubled, right? Into 2. The demand will get doubled. Every reduction in 10, the demand will get doubled and therefore the demand will be 40,000. Again, if I reduce 10, that is 90 to 80, 10 rupees, the demand will again get doubled. Double means 40 into 2 will give me 80,000. This is my full capacity, right? This is my full capacity. That means in order to make it at 80,000 units, I need to set a price of 80 rupees. Obviously, this is my selling price, right? This is my selling price is 80. The profit is 25% on sales. So what is the profit? Profit is 25% means 20. So what is my cost? Cost is 60. Cost is 60 and 60 into 80,000, the total cost will be 48 lakhs. Right? Okay. So I have given the solution over here. Selling minus this one, everything. Okay, next one. Let's check how many of you can crack this. So basically this is of indifference point. I hope everyone remembers indifference point, the formula. Yes, indifference point. Give me the answer. Okay, option A. Let's wait for the others. Okay, A 800. Okay, so what is the formula for indifference? Indifference point, it is nothing but change in fixed cost upon change in variable cost per unit. So the fixed cost over here, fixed cost is how much? 25, 5, 30, 45, and the fixed cost over here is 125. The variable cost is 140, the variable cost is 40. So change in fixed cost, it will be 125 minus 45, 80,000. Divided by change in variable cost is 100, and therefore 800 cases is the indifference point. That means at 800, you choose anything, you will be at the same profit level. Okay. My next question in this is, what about below 800? Which product to choose? Below 800, which product to choose? Yes, please tell me. Below 800, which product to choose? The indifference point, the concept of the indifference point below 800, which product to choose? Yes, quick. Okay, fully, semi. So what was the concept? Please tell me. What was the concept? The concept was indifference point 800. Below this, go for lower fixed cost, and above this, go for lower variable cost. The concept. So indifference point is the point below this. I should always go with the lower fixed cost. So fixed cost is lower in semi-automatic. So for 800 cases, below 800 cases, I should go with semi-automatic. And if it is above 800, I should go with fully automatic because it has a lower variable cost is the concept. Okay, sure. Next point. So I've also given a cross check. Okay, I've also given a cross check in the below section, semi-variable and fixed cost. Whatever the case is, the answer is 157. So at this level, you are indifferent. Next. Okay, a very basic question. A very basic question. Yes, go for it. B, 40,000. Okay. Others 40. B, 40. Okay. Okay. So entire thing was given, right? The selling price was given, the variable cost was given. So if the selling price is 80, my variable cost is 32, and therefore my contribution comes out to be 48. Right? Since fixed cost is also given, can I go with BEP, break even? Yes, break even. What is the formula of break even? It is fixed cost divided by contribution per unit. Fixed cost divided by contribution per unit. Fixed cost is 11,52,000 divided by contribution. Contribution is 48. So 11,52,000 divided by 48 will give me 24,000. That means to achieve a break even, I need 24,000. Since MOS percentage is given, MOS is 40%. MOS is 40%. That means break even has to be 60%. Clear as that? Because break even and MOS total contribute 100%, right? So if 60% is 48,000, sorry, 24,000. How much is 100%? As I said, there can be multiple procedures. You can follow a different concept also. You can directly go with MOS percentage also. That is quite okay. I'm just giving you the entire concepts. So if you cross multiply, 100% is 40,000. Again, I've given the entire solution. MOS is 40, that means BS is 60. I went with BS. You can directly calculate MOS also by calculating the profit. That will also work. Okay, next one. Yes, the fifth one. Go for it. So it's a very basic question. They should not take much time. Basically, all the data which the institute provides is not relevant. Okay. Yes, perfect. C is the correct answer. Yes. Since the total sales is given, right? Total sales is 50 lakhs. Total sales is 50 lakhs and MOS is 40%. Clearly, BES is 60%. So, iska 60% will give me 30 lakhs. That's it. Very simple. PV was not at all required. They are directly given MOS. So, BES also 60%. I can directly calculate 60% of 50 lakhs, which is 30 lakh rupees. Option C. Okay, next one. Question number 6. Yes, can anyone give me the answer for this? I've highlighted this sentence because the entire question is based on this line. What does this line means? $44. Okay. Let's wait. I actually don't know the answer. So can you please read the question once? Can't see it clearly. Okay. A company determines its selling price by making up variable cost 60%. Sorry, by marking up variable cost 60%. In addition, the company uses frequent selling price markdown to stimulate sales. If the markdown average is 10%, what is the company's contribution margin ratio? Okay, 30.6 is one of the answer. Okay, fine. I'll just explain this. Okay. So, what do you mean by this sentence? Selling price by marking up variable cost. The rule for this question is the entire concept of on cost and on sales. Since the school time, you have been taught that whatever percentage is given, you have to take the base as that one. That means if I give you 20% on cost, you need to calculate, take the cost as 100. If I ask you 30% on sales, you take the sales as 100. So since variable cost is given over here, the base is variable cost. And therefore, if variable cost is 100, I will mark up 60% on that. That means the selling price becomes 160. I will mark variable cost as the base and I will mark 60% above that. That means my variable cost is 100, my selling price will be 60% above that is the meaning of this sentence. Okay. Now, in addition, the company uses frequent selling price to stimulate sales. If the market down average is 10%. Markdown is 10% means what? You have reduced the selling price by 10%. Means the new selling price is now only 144. But there is no reduction in the variable cost. There is no reduction in the variable cost. And therefore, variable cost is still 100. So what is the contribution for you? It is 44. Right? And now PV ratio. The contribution margin ratio means PV ratio. PV ratio will be contribution divided by sales into 100. So 44 divided by 144 into 100 will give me 30.55%, means 30.6. Means 30.6. Okay, perfect. Okay, I have given the entire concept over here. Selling price is marked on variable cost means variable cost should be taken as the base. This is the important line. Okay, next one. Yes, please give me an answer. Just go with the basics. MOS directly connected with profits. BES directly connected with fixed cost. If the answer in units, divide by contribution. If the answer in rupees, divide by PV ratio. Just go with the basics. You will get the entire answer. Okay, C. 3 lakh. Okay, I have got 1 lakh. Okay. Sure. Let's calculate this. What is the formula for MOS? The formula for MOS is profit divided by PV ratio. Right. So is the profit given? Yes, 1 lakh. Is the PV ratio given? Yes, 25%. So 1 lakh divided by 25% will give me 4 lakh as MOS. Right. But MOS is 50% given. That means break even has to be 50%. Why I am going with break even? Because the fixed cost has been asked. So if I say this is 50%, if MOS is 50%, obviously the break even has to be 50% then. Means 4 lakh itself. Means 4 lakh itself. Right. So if break even is also 4 lakh, can I now calculate the fixed cost? Because the formula for break even is fixed cost divided by PV ratio. Just go with the basics, just understand this MOS and BES, that's it. Okay, so fixed cost was, break even was 4 lakh. Fixed cost divided by PV ratio is 25%. So the answer becomes 1. Yes, got 1 lakh. Okay, 1 lakh is the correct answer. So, yes, C is the incorrect one. 1 lakh is the correct answer. Okay, next one. Okay. Read the question carefully and give me the answer. Well, exactly, I don't know the answer. Jyoti. I'll just wait and then we'll calculate it together. Okay, so I'll calculate it for you. First of all, since it is shutdown cost, okay. So I exactly know the formula, right? The fixed cost minus the shutdown fixed cost upon the contribution or the PV ratio, whatever the case is, right? Since the answer is in units, so I need a contribution. So first of all, I need to understand what is contribution. Contribution, I know the formula, selling price minus the variable cost will give me quantity, right? First of all, I need to calculate this. What is the selling price given to you? The selling price is 21, right? The selling price is 21. Now, if I ask you, is prime cost variable? The answer is a big yes, because prime cost includes direct material, direct labor, and direct expenses. This is direct, right? The prime cost itself is variable, because material will be used on the per unit basis. Labor will be given on the per unit basis. That means it is variable. Variable overhead itself is variable. That means these two expenses I got the variable, that is 10 plus 2.4 is variable. Another, the variable selling and admin expenses is 60 paise per common extra, still it is variable. I just need to understand the format. So the point is variable cost is 10 plus 2.4 plus 0.6 will give me 10, 2.4, 13. And therefore the contribution is 8, the first one. The base is ready, right? The denominator is ready. Now, what is my fixed cost? What is my given fixed cost? Since the capacity is given 50,000 and per unit fixed cost is 4, obviously it would have been 4 into 50,000. That means my current fixed cost was running at 2 lakh rupees. Obviously per unit, right? I'm selling 50,000 and if I'm adding fixed overhead at 4 rupees, that means the total fixed overhead might have been 2 lakh. 2 lakh divided by 50,000 was 4 rupees I was adding to the cost. And therefore 2 lakh is my current fixed cost right now. If I decide to shut down, when the plant is operating, the fixed manufacturing cost can be reduced to 74, means 74 is still the cost, the fixed cost, shutdown fixed cost, plus additional cost of plant shutdown for the quarter I estimate is 14,000. That means what is the expenses you will still incur? It is 74 plus 14. That means shutdown will be current fixed cost is 2 lakh minus what is the fixed cost which will continue? It will be 74 plus 14 divided by contribution per unit, which is 8. So this comes to 74 plus 14 is 88 minus 200, 112 divided by 8. Yes, 14,000 is the correct answer. 14,000 is the correct answer. Okay, let's check. Yes, 14,000 is the correct one. So main thing was to understand this 2 lakh. The 2 lakh is given with this capacity, the starting capacity which was given, right? The starting capacity which was given, 2 lakh. Okay. So what is the logic behind this indifference point? This is indifference at 14,000 level. It is indifference. Below this, obviously, I should choose to shut down because I'm not able to cover this much expenses also. I'm not able to cover this 1,12,000 also. And above this level, we should continue. And if you are earning above this, the answer is you should continue because below this, you will incur a heavy loss. Okay. So this is the conclusion on this. Okay, I'm just giving the direct answer. Question number 10. Question number 10. Everything is given. Very basic question. Just need to write the cost sheet and you get the answer. Question number 10. Okay, just give me 1 sec. Okay, I just checked. You can go with 720 pixels. 720 will give you the perfect resolution. Okay, AA. Okay. Option A. A very basic one. Sales was given, contribution, that is the direct contribution was given, minus the fixed cost will give it net profit. Very basic one. So sales was given, contribution given, fixed cost was given, the profit is 10 lakh 50, a very basic one. Next. Okay, break even is asked. Break even is asked. Let's see how many of you can crack this, because here it is fixed cost and variable cost in two portions. Now for others, please tell me, is everyone facing the same issue? Check my audio, check my video. Is it clear enough? Others, please tell me. Okay. I don't know what the issue was, but it's okay. Yes, please give me the 11th one, a challenging one for you all. Because here there are two fixed costs given to you and two variable costs. Okay, anyone of you, can anyone of you give me the answer? Okay, I'll solve it with you. Please have a look. So, I have been given two levels. It is 1,50,000 total, right? But it is given that up to 75 you will incur a fixed cost of 8 lakh, and in order to produce more than 75 you will incur a cost of 12 lakh, right? So first of all, I'll ask you, what about till 75, up to 75? Up to 75,000, what is the answer? So selling price is 25. My variable cost is given to be 60%, right? Up to 75. So 25 into 60% will give me 15, and 10 rupees is my contribution. If I ask you what is the break even for this one, you will say that it is 70, whatever the fixed cost is, right? Divided by 10. But what about above this? Above 75,000. Above 75,000. The selling price is still the same, but my variable cost comes to 50%, which is 12.5. And this comes to 12.5. My contribution. That means, okay, 80,000. Let's see what is 80,000. So for this, I'm having two contributions right now, right? Okay, what I'll do is I'll just make the concept here only. It is already written. So it is 10 and this is 12.5, which I gave you above, right? Now my total fixed cost is obviously 12 lakh. I need to cover that 12 lakh, right? I need to cover that 12 lakhs. So first, which will help me? Obviously, the first 75,000 will help me, right? 75,000 will help me. Now please tell me, to cover 12 lakhs. That means to cover 12 lakh fixed cost, I need a contribution. I need a contribution of 12 lakh, right? Because the rule is sales minus variable will give me contra minus fixed cost will give me profit, right? Is the rule. That means to cover 12 lakh, I also need a contribution of 12 lakh. And the profit will be zero. This is break even, right? This is break even. That means the contribution and the fixed cost are same at this level. I need a contribution of 12 lakh. Now who will contribute? Obviously, first 75,000 will contribute. First 75,000 will contribute how much? Obviously, this 10 rupees. That means contribution from first 75,000 units. How much is this? It is 75,000 into 10. 7 lakh 50. So I can say from this 12 lakh, 750 has been covered. Now who has to cover the extra 4 lakh 50? Obviously the units above 75,000. Extra, the balance contribution. The balance contribution is 4 lakh 50. Now this will be covered. This will be covered by the extra units. And extra units is giving me a contribution of 12.5. And now to earn 4 lakh 50, how many units will be sold? It is 450 divided by 12.5. How many units will be required? 4 lakh 50 into divided by 12.5. 36,000. 36,000. Now the rule is I need to sell this 75,000 and I also need to sell this 36,000. If I sell this, I will be at break even. Example, we'll just cross check. If I sell 75,000, how much will I earn? I will earn 10. If I sell 36,000 above 75,000, how much will I earn? I'll earn 12.5. That means total I'll earn 12 lakh minus the fixed cost is 12 lakh and therefore the profit is 0. The profit is 0 and therefore total units कितना sell करना पड़ेगा? Total 75 plus 36 will give me 111. Will give me 111. Yes, perfect answer. Will give me 111. So we have option B, 1,11,000. I have given the entire solution. Entire solution. For break even, we need to cover fixed cost of 12 lakh. First 70,000 will give a contribution of 7,50,000. The balance 450 will be covered by the additional units with contribution 12.5. And therefore 36,000. Total of 1,11,000 units are required for break even. Okay. Next question it was. Yes, question number 12. Okay, tax rate दिया है यहाँ पर. A tax rate has been given. Okay, please give me the answer. Question number 12. Okay, make it quick. 20 MCQs are there, and after that, I'll be covering the exam questions. But till 20, and after that, we'll take a lunch break. So I'll make it quick. 420. Okay. Okay. So what is asked? The amount of sales is asked. In short, desired sales, right? What is the formula for desired sales? What is the formula for desired sales? It is fixed cost plus desired profit upon either contribution or PV. I'll take PV because answer in rupees is given, right? Rupees is given, so I'll take PV. So this is the formula. As I told you, go for basics, break even, fixed cost. MOS profit and desired sales is a combination of both fixed cost plus profit, right? Okay. But which profit to take over here? Which is this profit, desired profit? Desired profit is always PBT, that is profit before tax, not after tax. It is always profit before tax and not after tax. So here, what is given? To earn or target net income 63 if the tax rate is 30%. They want a target of 63,000. So if you earn, if PBT is 100, if PBT is 100, how much is the tax? Tax is 30. So what is the PAT? That is profit after tax. It is 70, right? And if this is 63,000 after tax, target net income, net means after tax, what is the net in your hand is 63, then how much you should earn with this first one? So 100 divided by 70%, sorry, 63 divided by 70% will give you the answer as 90,000. That means you should earn 90,000 as profit before tax. If you earn 90,000, 30% they will deduct for taxes and net you will get a 63,000 in your hand. So the desired profit is 90. Fixed cost you already have. What you don't have is the PV ratio, but PV ratio is very easy, right? PV ratio, how is PV ratio calculated? It's sales minus variable will give me quantity, right? So 240 minus 160 is 80. PV ratio comes to 80 divided by 240, which is 33.33%. That's it. And you're done. You have the fixed cost with you, you have the desired profit with you, divided by the PV ratio will give you the answer as A, 420. Let's check. Yes, the answer is 4,20,000. As I said, fixed cost plus desired profit is PV ratio. This desired profit is always PBT and not PAT. Clear? Okay, next one. Okay, if you remember, I already gave you a formula for PV ratio at the very beginning when two stages are given. When two stages are given. So this is the formula for break even. You just need to calculate it. Go for PV and then the question will be very simple. Okay, I'll just make it a bit easy for you. This is profit and this is sales. By selling 9,000 units, make a profit of 10,000. Profit is 10, you are selling 9,000. If you sell only 7,000, you will lose 10,000, means less 10,000, negative 10,000. Yes, PV ratio. PV ratio is change in profit upon change in sales. How much has the profit changed? It has changed to 20,000 and not 10,000 because plus 10,000 till minus 10,000. It has changed by 20,000. And how many units have changed? 2,000. How many units have changed? 2,000. So change in profit upon change in sales will give you the contribution or the PV ratio. And once you have this, choose one of the stage made with this thumb. Choose this stage to calculate the fixed cost by using the formula quantity minus fixed cost will give you profit. Profit you already have. Contribution you can easily find because by this, and fixed cost is the balancing figure. Once you calculate the fixed cost, then you will be able to calculate the break even. Okay, I'm just going to the answer. Yes, as I said, units profit are given. That is, you divide by difference in profit and difference in units, that is sales. 10 per unit is the contribution. 10 per unit. Use one of the stages like this. The one I marked this. So 9,000 units, 90,000 is the contribution, 10,000, and therefore balancing figure is fixed cost, that is 80,000. Once I have the fixed cost, I can easily calculate the break even with 8,000 units. With 8,000 units. So the answer is B, 8,000. Okay, next one. Yes, question number 14. Give me an answer. Just make a cost sheet. Whatever the figures is given to you, sales less variable less will give me contribution less fixed cost will give you profit. Just put in whatever it is given. You get the answer. Since it is break even, the profit is 0. B. Yes, Unnati, thanks. Thank you, Beta. 30%. Okay. Okay, so everyone is getting the answer as 30%. I'll just provide the solution. Just have a look. Break even is fixed cost divided by PV. Break even was given. Fixed cost was given. PV can easily find out. PV is directly 30%. Direct answer. Next. Determine the target selling price. I need to calculate the selling price now. Yes, the question is in front of you. Try to calculate. Okay, can anyone give an answer? Please check. Okay, I'll solve. So 1200 units of microchips are required to earn a profit of 1,06,000 in the monopoly market. So I'm earning a profit of 1,06,000 on 1200 units, right? The fixed cost for the period is 74,000. I got the fixed cost, I got the profit. That means I can easily calculate contribution. What is the rule? The rule is contribution minus fixed cost is profit, right? If you think in the mind calculations, it is very tough. If you jot it on the paper, it is very, very easy. Whatever is given, just jot it down, right? Just write the standard format. Sales less variable is contribution less fixed cost will give you profit. Just write in the marginal costing cost sheet, and the entire concept is very clear. Profit is 1,06,000. right? Fixed cost is 48,000. Obviously, by going reverse, I can easily calculate this figure. What is this figure? So this is 1,06,000 plus 48,000. So my contribution will have me 1,54,000. The very concept, that is a contribution is 1,54,000. Now, how much units were given? 1200 units. So 1200 into what rate will give me this 54,000 divided by 1200? That means, sorry, 1,06,000 plus what? Oh, I'm so sorry. Fixed cost is 78. I'm so sorry. 74. I'm so sorry. Yes. So the entire will be 106 plus 74. 180. Divided by 1200 will give me 150 as my contribution. So I earned a contribution of 150. Jyoti, just 1 minute, हम check कर रहे हैं बेटा. So I got a contribution of 150, right? Per unit, right? Now the case is, it is given the contribution is 3/4 of its variable cost. I'll just use this equation. Contribution is 3/4 of variable cost. Now contribution is 150, 3/4 of variable cost. 4 comes over here, 3 comes over here, and therefore variable cost will be 200. And as you all know, sales less variable cost is contribution, right? Variable cost is 200, fixed cost, sorry, contribution is 150, and therefore the sales would have been 350, the selling price obviously. The selling price would have been 350 if I go reverse. So this question was completely dependent on the reverse, the very basic concept. Just jot down. Jyoti, I hope the point is clear. It's 350 now. Okay, so it's 350. Moving ahead. Yes, I have given the solution over here with the arrows, proper arrows, how to go with the question. Okay, next one. 16. Yes, I'm expecting answers from everyone. Just calculate two PV ratios, get the difference, that is it. Okay, so what is given? Sales is 320, less variable cost is 2 lakh. Obviously, my contribution is 120. If I calculate the PV ratio, since the answer is in percentage, obviously they are asking for PV. 120 divided by 320 percentage will give me 37.5%. Will give me 37.5. Another stage is given as the sales is still the same, but the variable cost is dropped by 30,000. 30,000 से drop हुआ है. Variable cost will now be 170. How much am I earning now? 150. PV ratio 150 divided by 320. The PV ratio is 46.875%. What is the difference? Minus 37.5. That means it increased by 9.375 plus y, right? It is increased by 9.375. Option B. Yes, Mohit. Correct answer. So, okay, next one. Okay, you just need to rank now. You need to rank now, and I hope ranking can be done by each and every student now. Ranking can be done by each and every student. Yes, please. Yes, perfect, perfect. Jyoti, Swastika, Mohit. E F H G. Ellery, by your options, or the options are not getting matched. Okay, Mohit is getting B answer. Okay, so first of all, we calculate the contributions, right? So what is the contribution for E? It is 50. For contribution is 80. Contribution is 100, and contribution is 175, right? 50, 80, 100, 175. What we do is that divided by the limiting factor. Limiting factor is given over here 1, 2, 5, and 7. 1, 2, 5, and 7. You just need to divide. So this will give you 50. This will give you 40. This will give you 20. And 175 divided by 7 will give you 25. So now the ranking goes something like this. First rank to the first product. Second rank to 40. Third rank to 25. And fourth rank to this. So the answer is E, F, H, G. Okay, the options are not given. Right. Okay. E, F, and H, and then G. The options are not matching. One, two is F, G is 5. Okay, perfect. Yes, might be a certain misprint in this. No issues. Yes, I have given the ranking 1, 2, 3, and 4. The rankings are proper. The rankings are proper. Maybe the option it got misprint. Okay, next one. 18th one. Yes, go for 18. Again, MOS is asked. MOS is directly connected with profits. Also, if you don't have MOS, you can also go with BES. If you go to BES, MOS is automatically done. Okay, 4,000 units. Others, please check. It is a very basic question. Basic inter-level question. Okay, some of you might be thinking, sir, इतने simple questions आते हैं exam में. Well, the answer is yes. All these questions have been taken from your exam papers itself. All these questions, not even a single question is from outside. All these questions are from your papers itself. Jyoti, please check. Everyone is getting 4,000. You are getting 40. Is it a misprint? You typed it incorrectly, I guess. Okay. Yes. 4,000 is the correct answer. Please check. Everything is given over here. Fixed cost. Just as I said, I can go with break even and then with MOS, or else you can calculate the profit directly and then go with MOS. It's one and the same thing. Right? I first calculated fixed cost. Actually, it was given. I calculated break even and then total minus break even will give me the MOS. Okay. Next. Okay. So the thing is, MCQs have been done. MCQs 18 ही थे यहाँ पर. From 19 I have taken exam questions. Okay, so I'll just give you a glimpse. This sheet has all your exam questions on marginal costing, that is decision making, with my handwritten solutions. I'll just show you what I've done. I've taken every question and I have solved every bit with proper explanation, so as when you are before one day, that is just one day before the examination, we can go through the sheet and entire marginal costing will be revised. You can just have a look, everything. So I'll just try how many maximum questions we can cover in the class itself, in the marathon itself. I'll just to cover, try to cover the maximum. Okay. So there's a time for lunch break, and it's 1:25. We'll meet sharp at 2. Okay. So I'll just write over here. Students, please let me know, am I audible? Okay then. Let's start. So, again, question number 19. These questions are picked from your past papers. Shutdown. Reading the question, please have a look. The management of W Limited, which is now operating at 50% capacity, expects that the volume of sales will drop below the present level of 5,000 units per month. Now, if you closely watch, the present level is 5,000, which is 50%, right? That clearly means, back to the mind, your calculations have been started. The 100% level is for 10,000 units, right? I don't know whether it will be needed or not, but yes, you should start your calculations in your mind. The operating statement prepared for the monthly sales shows as sales is at 3 rupees per unit, variable cost is 2 rupees, fixed overheads is 5,000, and net profit is nil. As of now, you are at break even. It is proposed that the company should suspend production until market conditions improve. The general manager estimated that a minimum fixed cost, shutdown cost amounting to 2,000 would be necessary in any event. That means 2,000 will be necessary. Advise management at what levels it should think of suspending production. Yes, please tell me what is the shutdown level. Fixed cost is given to you. Contribution very easily. Selling price is 3, variable cost is 2, and therefore contribution is just 1 rupee. Contribution is just 1 rupee. Yes, please tell me. Focus on the keywords. You have the fixed cost with you. You have the additional shutdown cost with you. You also have the contribution with you. Yes, 3,000 is the perfect answer. As you can clearly state, fixed cost is 5,000 minus 2,000 divided by contribution per unit, that is 1. 3,000 is the level. That means at 3,000 you are at indifferent point. That means 3,000 is okay. But if you fall below 3,000, you should definitely suspend because you will incur more loss. Above 3,000, you should not shut down. Next. So this is the advice. You will give this 3,000, and below 3,000 you should shut down. Next. If the sale price is rupees 2.8, what would be the sales for shutdown decision? So now they have decreased the sell price to 2.8. Now the contribution will be 2.8 is the selling price, variable cost till 2, contribution will be 0.8. Contribution will be 0.8. Please tell me what is the level now? What is the level now? It will be 5,000 minus 2,000 divided by 0.8. This will give me the answer as 3750. So the decision making will be on 37. Yes, perfect. 3750, right? Itne units hone chahiye, and these units will give you the final answer. Okay, let's look the answer. Yes, selling price is 3. Shutdown is 3,000 units. I also have the cross check, not necessarily required. I just gave for additional info. If you cross check, the loss will be 2,000, which is the actual shutdown point. Below this, obviously, I should go with the decision, that is shutting down. At 2.8, the answer is 3750. That's it. Itna hi answer tha. And this will provide you 6 marks. This was asked in December 17. Okay, next one. Okay, the very basic question is asked for 8 marks. Institute sometimes give you bonuses, and this is one of the bonus. This is for 8 marks. The break-even is asked, the desired profit and the desired sales is asked. Just go with the question. Sales is given, profit is given. You clearly know how to find the PV ratio. You clearly know how to find the PV ratio. First step, I need the PV ratio. Please give me the PV ratio. The difference is 20,000 and difference is 5,000. I need the PV ratio. Yes. Difference in profit divided by difference in sales. Yes. I need the PV ratio. Quick. Be on your calculators. Perfect. 25%. And now they have asked to calculate break-even. Break-even direct connection with fixed cost. So the first step is calculate any year. Take a base from any year. You know the PV ratio, right? So the PV ratio. Calculate fixed cost by any of the year. Yes, calculate fixed cost by any of the year. Take year 1 or year 2, any, but calculate the fixed cost. How to calculate? Sales is 80,000. Yes, perfect. Sales is 80,000. Less variable I don't know, but yes, contribution I know is 25%. 25%. That means 25% will give me the answer as 60,000. Sorry, 20,000. The profit is 10,000. The profit is 10,000. And therefore, the balancing figure is the fixed cost, which is 10,000. The balancing figure is 10,000. I finally found the fixed cost. And now the picture is very clear. Now the picture is very clear. 30. Okay, break even is 30. Is it 30? 80,000 into 25% is contribution minus 10,000. Yes. So the fixed cost is 30,000. Can I find the break even? The formula for break even is fixed cost divided by PV ratio. Yes, give me the answer. Fixed cost divided by PV ratio. Yes, Pawan, Tejashri, correct answers. Yes, please give me the break even. Perfect. 40,000. It is fixed cost divided by PV ratio. Next, profit or loss when the sales amount to 60,000. Just make a sheet, that's it. If sales is 60,000, if sales is 60,000, variable contribution is 25%. 25% will give me 15,000 minus fixed cost is 10,000, and therefore profit is 5,000. Profit is 5,000. Direct answer. Third is required sales for level of profit of 20,000. If you need a profit of 20,000, desired sales has been asked. What is the formula for desired sales? Desired sales is fixed cost plus profit, that is desired profit, divided by either contribution or PV. So fixed cost is 10,000, desired profit is 20,000, divided by PV is 25%, and therefore the answer is 1,20,000. So for this, the institute gave you 8 marks. It was a very basic question, a very basic intermediate question. Okay, 1,20,000 is the final answer. So you need to calculate this. The only point here was to calculate the fixed cost, right? To calculate the fixed cost. Okay, so this was again a very basic question. Let's go ahead. Okay, the next question they have given is indifference. The next question they have given is indifference point. I'm reading the question, please have a look. Your company wants to buy one machine. Two alternative models are available, A and B. The following information are available with respect to them. Model A and model B. Outputs are equal. Fixed cost is given. Profit at 100% capacity is given. Both the machines will produce identical products. The annual product demand for the product is 10,000 units at rupees 10. Okay. The very first step is, look, you know how to calculate the indifference point, right? For indifference point. Indifference point is difference in FC divided by difference in VC, right? Fixed cost you have. Fixed cost you already have. What you have to calculate is the variable cost. What you have to calculate is the variable cost. And variable cost can be easily found out by solving the entire question. Sales less variable cost will give me contribution minus fixed cost will give me profit. They have given you profit, they have given you fixed cost. Contribution you can easily find out. Sales already selling price is given. Variable cost is the balancing figure. So the very first step is to find the variable cost for both of them. So I'm giving you 1 minute to calculate the variable cost for both of them. A also and B also. Please don't mix the figures. If you are calculating only for A, first calculate only for A and then for B. Yes. Please go on. Profit is given to you, fixed cost is given to you. With the help of contribution and sales, you can easily find out variable cost. Once you find variable cost, everything is simple. Okay, 4 rupees. Okay, 40,000 is the in totality answer. In totality. If you get per unit 10,000 units, so 4 rupees is the answer. Please check. You are getting this 40,000, right? You are getting this 40,000. So per unit will give you 4. Because the number of units is 10,000. I want also for B. Okay. And for here you are getting 60,000. So per unit is rupees 6. Please check. Is it 6? Yes. So yes, Tejashri, Alevi, Res, Pawan. Yes. So per unit you are getting 4 and 6. Please check, is everyone getting the answer? If anyone of you is finding any difficulty, please let me know. I'll explain the entire question. 4 and 6. Perfect. 4 and 6. Right. And now I can easily calculate the indifference point. Indifference point is difference in fixed cost. What is the difference in fixed cost over here? 30 and 16, the difference is 14,000, right? The difference is 14,000 divided by difference in variable cost per unit. Per unit is 6 and 4, the difference is 2, and therefore the difference is 7,000 units. The indifference point is 7,000 units. Please check, is everyone getting the same answer? 7,000 units. And this is the third or the fourth time we are talking about the indifference point. I need the conclusion. Below this and above this, I need the conclusion. Please tell me. Below this, which product to choose, and above this, which product to choose? Yes, I'm waiting for the answers. Okay, Unnati, explain. Okay, fine. I'll explain how did you calculate that 40,000 and 60,000. Okay, so you have the fixed cost with you, right? I'm just calculating for A, okay? Model A. Model B, you will be easy to calculate by the same methods. Sales, it is given to you, it is 10,000 units into 10. I don't know what my variable cost is. I don't know what my contribution is. But yes, I know my fixed cost. I know my fixed cost. Fixed cost is how much? 30,000. Just write 30,000 over there. And I also know my profit. I also know my profit. It's 30,000, right? Profit is 30,000. That clearly means I just need to go reverse. This is 60,000. This is 1 lakh given to you. And this becomes my balancing figure. This is my balancing figure, which is 40,000. Now, if I check 10,000 units, into what price will give me 40? So the answer is 4 per unit. The answer is 4 per unit, right? And that will be all. 4 aa gaya hamara. We got the answer as 4. Similarly, you get 6 for model B. Similarly, you will get 6 for model B. So variable cost is 4 and 6 for A and B. The fixed cost is 30,000 and 16,000. And indifference formula is difference in fixed cost divided by difference in variable cost per unit. Per unit is important, and we are getting the answer as 7,000. And now, below this level, below 7,000, I should always go with lower variable cost. Lower fixed cost. So whatever the lower is, obviously the lower is B, below 7,000. Above this, obviously I would go with lower variable cost, and variable cost is lower for A. I should choose A. Now the last line, if you read the question, the range of sales at which one is more profitable than the other. Range, they have asked the range. Obviously, I will start with B, right? I will start with B. So, till, can I say 6,999, I will go with B. And from 7,000 to 10,000, I will go with A. Why? Because till 6,999, I was choosing B because it had a lower variable cost. Lower fixed cost. Above that, above 7,000 level, I can say 7,000, 10,000, I will go with A because it has a lower variable cost. This is the rule for indifference point. Okay. So I have given the solution, entire solution over here. Right. I have given the entire solution. Below 7,000, a product with lower fixed cost, and below 7,000, a product with lower variable cost should be chosen. I have given the entire explanation also. Okay. And the range also. Okay. So this is question number 22. Very important one. Very important. Why? Because this is the concept which was never included in your intermediate. Now this product is, I'm having a limited capacity. Okay. I'm having a limited capacity. I have a limited capacity, and in that limited capacity, I'm making ABC. Okay. I'm making ABC. I don't know what my limited capacity is. May it be raw material, may it be machine hours, may it be labor hours or something. One of them is a limited capacity, and I'm making 3 products out of that. Now the point is, in next year, there will be increase in demand. Right? Increase in demand. So the point is, which product I should purchase from outside? Which product should I purchase from outside? Because there is an increase in demand, I don't have an additional capacity. To produce. That is to meet the increasing demand. So if I make B and C continuously, by not making A, some of the capacity will be released. That released capacity will be used by B and C. And A, I will purchase from outside. Obviously, if I purchase from outside, I won't incur any variable cost for making. But obviously, purchase from outside, from whomsoever I will purchase, he will definitely earn. That means I need to pay him something extra, right? Now, the point is, which product should I purchase from outside? Should I go with A, should I go with B, or should I go with C is the important point. So the rule is, we used to calculate contribution divided by limiting factor, right? Contribution divided by limiting factor. Which I should purchase from outside? Obviously, the lower contribution. Please see, which I should produce. Obviously, I should produce the higher contribution. So whatever is giving lower production, lower contribution, I should purchase from outside. That is the only point. I should go with the lower contribution. So whichever product gives me the lowest contribution per limiting factor, I should go with that. This is the rule, right? So this is the new point in your case. I'm just reading the question. Okay, please read the question because this is a bit lengthy question. Force Limited is the manufacturer of a firefighting equipment which consists of 5 components, 3 of which are made using general purpose machines and 2 by manual labor. Okay, so there are 3 products which are used by machines and 2 by manual labor. The data of the equipment are as follows. The product names are, the components are FORCE, that is force. There are 5 components. Okay. Machine hours required per unit, they have given 20, 28 and 24. So to produce 1 unit, it requires 20, 28 and 24. That means a total of 72 hours are required for 1 unit. Right? For example, I am having one product. Okay. This is a product. This is the final product. So final product has 5 components in that. FORCE. This FOR is made by machines and this CE is made by labors. And finally, when all the 5 components are ready, I merge them, I assemble them and I make a final product, maybe say product X, example. And then I finally sell product X. I do not sell FORCE. These are all components, means these are all raw materials for me. All raw materials, all components, and then components, I assemble them and then make a finished product. Next. They have given the variable cost per unit. They have also apportioned fixed cost per unit. They have also apportioned fixed cost. So they have given me the total of these. They have given the total. Okay. They have given the total. This is 40. Right. So assembly cost all variable, and then after this total cost, they are giving you assembly cost. I need to assemble all the 5 components, and then finally the selling price is given. First of all, what I want from you is the contribution. This is the table. What all costs are variable? This is variable and this is variable, right? And this is fixed. And this 632 is fixed. What I want from you is to make a small table. Selling price minus variable cost. Right. Will give me contribution. Okay, fine. Make it afterwards. I'll just go with the question. What the question states. The marketing department of the company anticipates 50% increase in demand during the next period. 50%, right? General purpose machinery used to manufacture FOR are already working to the maximum capacity of 9,504 hours. So this is the maximum availability. 1 unit requires 72 hours. 1 unit requires 72 hours. Can you please tell me, as of now, how many units am I producing? Total I am having 9,504 hours. 1 unit requires 72 hours. Please tell me, how many units am I manufacturing right now? How many units am I manufacturing right now? Yes, 132. That is 9504 divided by 172 will give me 132 units. Perfect. And they are telling that the demand will increase by 50%. That means next year, in the coming year or in the coming month, 50% will get increased. Means 50% if I add, the next demand will be plus 50%. That means a total of 198 units. The demand will be for 198 units, right? As of now, the picture is clear. As of now, right? Okay. Next. And there is no possibility of increasing their capacity during the next period. But labor hour is available for making components C and E and also assembly according to demand. And labor hours are sufficient. There is no issue in labor hours. Labor hours can be utilized as an whatever you want to. Next. The management is considering the purchase of one of the components F, O or R from market to meet the increase in demand. The components are available in the market at the following prices: 160, 320 and 250. So if you purchase a product from outside, you have to pay 160 or 320 or 250. Now the bigger question is, which product should I purchase? Can any one of you tell me from here? which product should I purchase? The limiting factor is machine hours. The limiting factor is machine hours. So the rule is either make it or buy it. Either make by your own or buy from outside. Anyone, right? Anyone. Not both of them. Anyone. Yes, additional cost for R is minimum. So how to find the additional costs? You're on the right track already. Perfect. Okay. So which product to buy from outside? The rule is, what is the buying cost? What is the buy cost for F, O and R? FOR 160, 320 and 250. Right? So if you buy from outside, you have to pay 160, 320, 250. Obviously, if you buy from outside, you will not make. For making also you are incurring certain cost, right? If you buy from outside, you will not make the cost. So minus variable cost. Is variable cost given in the third line? Just check third line. 64, 108 and 116. If I purchase from outside, I will not make. So 64, 108 and 116. The additional expenses is how much? So this will be 160 minus 64 is 96. 320 minus 108 is 212. And 250 minus 116 is 134. See, 64 anyways you are incurring for F, right? 64. If you buy from outside, what is the extra amount you need to pay? The answer is 96. 96 extra you will pay, because if you make a product by yourself, you will incur only 64. But if you purchase from outside, there will be 160. So whatever the extra paying is 96. Now again, the limiting factor was the machine hour, and therefore you need to divide by the machine hours. Machine hours is given in the first step, 20, 28 and 24. So whatever the additional expense per hour you are incurring, you need to calculate that. Divide by this. Yes. So 96 divided by 20 will give me 4.8. Next, 212 divided by 28 will give me 7.57. And 134 divided by 24 will give me 5.583. Now, if I ask you which component will you purchase from outside, definitely the answer will be F. Why? Because it is giving you the lowest contribution per machine hour, right? But provided that if I forego F, how many hours will be saved? As of now, I'm making 132 units, right? As of now, I'm making only 132 units, right? And 132 units, F is at 20 units it requires for 1 unit, 20 hours. So how many hours will be saved? So that is 132 into 20. 2640 hours will be saved. That means I'll be able to manufacture B and C. Now B and C requires how many hours? B and C requires 28 and 24 hours. B and C requires 28 and 24 hours. That means how many units shall I produce? How many units can I produce? So 28 plus 24 will give me 52 hours B and C requires. So 2640 divided by 52 hours. 2640 divided by 52 will give me 50 units, 50.76 units. I'll be able to produce only 50.76 units. Okay. The comment section is only filled by Aluri. That means the others are finding it difficult. Okay. I'll explain it once again. Listen. This is the pen. This is the pen, right? Either I can make it by my own or I can purchase it from outside. This is one of the component. Okay. This is not the final product. This is just a component. Either I can make this or I need to buy from outside. Like buying cost is 40 rupees. But if I make it, I can make it at 15. So what is the extra amount I am paying by not making it? 15 to anyways I am paying, right? 15 anyways I am paying. If I am buying at 40, that means 25 I am paying extra. This is for one pen. 25 I am paying extra. If I purchase calculator from outside, extra amount whatever I am paying, that is the extra amount. Now I am very much confused whether I should go with this or whether I should go with this. I should make this product or I should make this product. I should buy this product or whether I should buy this product. This is the. So how to go with that? How to go with that? So the rule is extra, whatever extra you are paying divided by the limiting factor. The rule is extra, whatever you are paying extra divided by limiting factor. The lowest answer should be the lowest answer. You should go always with the lowest answer because it is giving you the lowest contribution, right? It is giving you the lowest contribution. But provided that your need is satisfied, that is 50% demand is increased. If you are able to go with 50%, then it's okay to take take F. But if the 50% criteria is not completed with F, then go for the next lower product, that is R. And if at all still 50% is not filled, then go with O. That means you need only to buy only one product. You are releasing one capacity. And you need to use that capacity to produce another two products. Example. If I ask you, how many hours are required for one product? I'll just make it a bit clean. 20, 28 and 24. 72 hours, right? 72 hours. I'll just give you an example. So, you have total of 9504 hours, right? You have total of 9504 hours. And presently you are making 132 units. Now my question is, if you purchase F from outside, for example, since it is giving the lowest cost, since if you purchase F from outside, which product will you make? That is O and R. Obviously, O and R I will make. So O requires how many hours and R requires how many hours? O requires 28 hours and R requires 24 hours. That means 28 plus 24, you will require 52 hours for one product. Right? Since you are buying F from outside, you don't need to manufacture F. So whatever the capacity is, you will utilize to produce O and R. So divide by 52 hours. How many units are there? So if I go with 9504 divided by 52, I'm landing with 182.76 units. I'm landing with 182, but I wanted 198 units. This was at the beginning itself because the management decided that you should be able to increase 50% of the demand. If I purchase from F from outside, still my demand is short because 182 only I can produce. That means I should not go with F. What is the next lower thing? The next lower thing is R. So if I ask you, if you purchase R, which products will you make now? You will make F and O. Right? Make this product F and O. F requires how many hours? F requires 20 hours and O requires 28 hours. That means total of 48. 20 and 28, that means total of 48 hours you require for one product, one unit. Let's see. 9504 divided by 48. How many units are there? 9504 divided by 48. You are exactly landing on 198 units. Exactly 198 units. That means you should go with purchase of R because since F is the lowest, you should obviously go with F. But the only thing is you are not completing the demand. And therefore, you should go with the next lowest product, that is the R. If you purchase R from outside, the capacity will be released and you will be able to make F and O, and F and O will be made, that is 198 units, and this will actually complete my demand. I hope the point is clear. Okay. Now, directly I'll go with the solution. I'll just show you the solution. Calculation of current profit. Okay, I have calculated. Have they asked the current profit? Yes, they have asked the current profit. Profit made by the company from current operations. So I'll just calculate. They have given already they have given, right? Selling price is 1200. Selling price is 1200. The variable cost is 320 and 80, 400. I've given the entire solution. The variable cost is 320 and 80. That is the assembling cost. Contribution is from 800 into 132 units because I have already calculated 132 units. Fixed cost already given. Fixed cost is given to you as 632. If you check, 632 per unit and total of 132 units. The profit is 22,176. So the first criteria is completed. Just you need to show the calculation of 132. I hope the 132 कैसे आया था सबको पता है. It was 9504 divided by 72 hours. 4 by unit, right? So this is the present one. Second. See, I have written everything over here. If we need to purchase from market, we will select a product with the lowest buying cost per hour. Lowest. But if the product doesn't provide us with the required additional capacity, then we will shift to the next product. And I have calculated each one of them. So buying cost is there, variable cost is there, extra buying cost is there, and excess buying cost per machine hour. Per machine hour is divided by the limiting factor, and this will give me. If F is brought from outside, I have given the entire explanation. If F is brought from outside, means we will make O and R, which will require 28 plus 24, that is 52 hours. Number of units that can be produced is 182. Percentage increase, they also ask the percentage increase. Yes, what is the extent of additional capacity that can be created? So they have asked the percentage increase. Percentage is like initially you were making 132, now you are making 182.76. How many additional units are you making? 50.76 units. So 50.76 is what percentage of 32? That's it. So वही लिखा है यहाँ पर. That is clearly written. 182 minus 132. Whatever extra is divided by the 132, and it is just providing a capacity of 38.46%, which is not sufficient, right? I neglected F because I rejected F. What is the point? That is, it was not completing 50%. Next. I have given the entire explanation. If O is purchased from outside, then F and R will be manufactured. And by creating F and R, you are increasing the capacity to 63.63%, which is not at all required. I want only 50%. And that's why I rejected O also. And similarly, if R is bought from outside, you will make F and O, which will require 48 hours. And that landed on 198 completely. That landed on 198 completely, and therefore, percentage increase was 50%, which was my required percentage. So what is the rule? Which product to buy? So the extra buying cost divided by limiting factor. Divided by limiting factor, you should go for it. Extra buying cost. And how to calculate extra buying cost? It is buying cost minus variable cost will give me the extra buying cost. This cost you need to divide by limiting factor, and whatever answer is lowest, you should go with that, because since it is giving the lowest contribution, you should purchase it from outside. Okay, next. I have given an explanation. F is cheaper to buy, but the increasing capacity will not be sufficient to meet the expected demand for next year. Therefore, we should buy the next cheaper product, which is R, and by buying R, the increasing capacity will exactly be equal to the demand of our product for next year. Hence, product should be purchased from the market. Hence, product R should be purchased from the market. So this is the conclusion. So if you purchase R, what was the initial variable cost? What was the initial variable cost? It was 400, right? The initial variable cost was 400, that 320 and 80. If you are purchasing R from outside, obviously the variable cost won't be incurred. 116 won't be incurred. So it will reduce the variable cost 400 minus 116. But you need to purchase R from outside. R purchase 250 at 250. So this is the profit statement over here. Selling price is 1200. 400 minus 116 for R, and buying cost of R is 250. That means this time the contribution is 666. You are making 198 units now because 50% has been increased. So total contribution is 131868. Fixed cost still remains the same and you have increased profit of 48,444 and this is your required profit. This was the question asked for 10 marks in December 17 exam. Okay. So I hope you got the point. The point is this one. The point is this one. Extra buying cost divided by linking factor is the rule. Extra buying cost. How to calculate the extra buying cost? It is buying cost minus variable cost. Okay. I have given a similar question for practice. I already have provided with the solution, but I hope you will be able to calculate now. 23rd. Since it is a new question and an important one asked twice in examination, I want you all to calculate. Ignore this data as of now. As of now, ignore this data. Right? Ignore this data. Just by this, please tell me which product should I purchase from outside. Will it be product M or will it be N? You have everything in that table and the limiting factor is machine hour. You have everything in the table. Just neglect the above data. Just tell me which product should I purchase based on your calculations. Yes, I need an answer. Just refer table, nothing else. Just refer table. Negative contribution. You have direct material, direct labor variable. Okay, so Mohit is telling N ship purchase. Okay, not an issue. I'll agree. Yes, what is the buying cost for M? Last line is given. The buying cost for M, purchase from outside, it is 18.5 and 25.9. The variable cost are these three costs, right? These three are the variable cost. I need the variable cost. 6 plus 5, 11, 12, 12.5. Please check, 12.5 is the variable cost. And 8.7 plus 7.5 plus 1.3 is 17.5 over here. Extra cost is 6 over here and 8.4 over here. Just as I said, extra cost divided by limiting factor. What is the limiting factor? Divided by machine hour. Machine hours per unit is given 2 and 3. Extra cost divided by machine hour will give me 3 and 8.4 divided by 3 will give me 2.8, which is giving me the lowest contribution per hour N. And obviously I should go with purchase N from outside. Purchase N from outside. Yes, Geeta, you gave the ranking properly, but I wanted the conclusion The conclusion is purchase N from outside since it is giving a lower contribution per limiting factor. Per limiting factor is the rule. It is giving me the lowest contribution per limiting factor, that is per machine hour. So I should go with N. I hope the point is clear, right? Rest all data is very simple. The only thing is you should be able to calculate which product to purchase. Okay. I have given the entire solution. I have given variable cost here. I have given calculation of extra buying cost, and machine hour rates are given already. Right? Since extra cost for machine has minimum for product N should be purchased from outside, which I actually explained in the above. So this is the entire presentation I gave you. If you don't show variable cost separately and don't show extra cost separately, you can directly show the C point directly. No, not an issue. But they've asked you, okay, calculate the variable cost, calculate the extra buying cost. They've entirely given you step by step. Which actually, if you directly move on to C, you also need to find A and B. Okay. So this again was asked for 8 marks. So twice in an examination, a similar sort of question has been asked. Next. And then you need to calculate the how many units to be purchased. Yeah, how many units to be made or something. Now if I read the above data, company XYZ produces 2 components M and N and is planning for allocation of its available resources for the next period. 75 units of product M and 60 units of product N are required to be produced. So how many components of M? 75 and N 60. Machine hour restricted to 300 hours. Machine hours is 300 hours. Please tell me, which product will you make first? Obviously M. M. Total you are having 300 hours. You will produce M. Produce M. How many M produce? 75. And how many hours will it take? It is clearly given it is taking 2 hours. It is taking 2 hours. So 150 hours have been utilized. Balance is 150 hours. You are having 150 hours, right? You require 60 units of N, but they are not sufficient. N requires 3 hours per unit. For this 150 hours, you will utilize for N, right? Utilize for N. How many units can be made? 150 divided by 3 hours. 50 units can be made. But you require 60 units. But you require 60 units, and therefore I will say 10 units should be purchased. Since you are having a capacity of 300 hours, sorry. First you utilized for M, the second the balance hours utilized for N, but N you were able to make only 50 units and 10 units you purchased from outside. This is the only point. Yes, correct answer is point. So I have given the entire explanation. 50 units can be made. Next. Again, indifference point, the new small car or the old bigger car. Again, I'm just skipping this question as of now. The reason is, it is very simple. It is the same question as in a study material, has been asked in the examination. It is very simple. If you read the explanation also, you will be able to calculate each and everything. It is not very tough. But since I also need to take standard costing, I'm just skipping a few questions which are actually very simple. The tough questions I'll be discussing in the class itself. Next one. Okay, evaluation of strategy. Yes, this is something mathematical. Let's go for it. The profit of the forward look limited works out to 12.5% of the capital employed. As of now, they are earning 12.5%, and the relevant figures are as under. Sales is given, direct material is given, direct labor is given, variable overhead is given, and capital employed is given. I know what is the profit. It is 4 lakh into 12.5, which is 4 lakh into 12.5% is giving 50,000. As of now, I am earning a profit of 50,000. All these three are variable cost. By just reading this much information, can you please give me what is my fixed cost? Just make an entire table, sales less variable contribution less fixed cost will give me profit. Entire information is given. Please give me what is my fixed cost. Quick. Please give me what is my fixed cost. Sales is given, variable costs are given, profit is given. $60. Okay. Yes. Is everyone getting the same answer? 60,000. Sales less all the variable costs will give me contribution. Less balancing figure will give me the profit, and balancing figure is 60,000. Okay. I've just made this for you. If you can see, sales less variable cost will give me contribution. This is the balancing figure, and this is profit. Right? This is profit. Okay, fine. Now, what does the question says? The new sales manager who has recently joined the company estimates for the next year a profit of about 23% on the capital employed. 23% on the capital employed means he's targeting 4 lakh into 23%. 4 lakh into 23%. That means he's targeting a profit of target profit of 92,000. Target profit of 92,000. Next. Provided that the volume of sales is increased by 10%. Now, if I ask you, volume means units, right? Is variable cost depend upon the number of units? The answer is a big yes. If my volume changes to 10%, if it increases by 10%, the volume, obviously all my variable cost will also increase by 10%. Right? Since the volume is increasing by 10%, my variable cost will also get increased by 10%, but no change in fixed cost. What is the rule? If my volume increases, variable cost also increases, but there is no change in fixed cost. Fixed cost remains the same, because if I produce one extra, I will incur only variable cost. The variable cost will increase, but not the fixed cost, is the point. So if the volume increases, there will be no change in the fixed cost. And simultaneously, there is an increase in selling price by 4% and an overall reduction in the elements of cost by 2%. Now, what is he saying? First of all, increase the volume means if you are selling 100 units initially, now sell 110 units. Right? Also, not only increase the volume, but increase the selling price by 4% and reduce all the elements being variable and fixed both by 2%. Up. What the rule is, they have given us a confusing statement of 3 individual points. They have asked us to increase the volume also and change with the rates also. If you do both of them together, it will create a lot of confusion for you. So what I have done is, I have taken only this 10% increase first. So the rule is, whatever the initial sale was, increase 10% of the sales, not the price. Ignore this sentence. The last sentence, first of all, ignore this sentence. First of all, tell me, only if you increase the selling, if you increase the volume, what will be your profit? So I have made a second column. If you can see, whatever the present situation was, just increase 10% volume. So initially I was selling 5 lakh, just increase 10%. Increase 10% means 5 lakh 50. Since the volume is increased, my variable costs are also increasing. If you can closely check, my variable cost also increased by 10% each. Initially it was 250 plus 10% will give me 275. Labor was 1 lakh plus 10% was 1 lakh 10,000. Again variable 40 plus 10% 44. But if you closely watch, fixed cost is still the same, 60 and 60. Fixed cost is still the same, 60 and 60. Just 1 second. Okay, just give me 1 minute. Yes, YouTube students, am I audible? Okay. Yes, first of all, sorry for the disturbance. Actually, since it's Sunday, no one is there at the office, and I was just searching for the battery. Okay, let's continue. So I was telling that if we increase the volume, only my variable cost will change, not the fixed cost, right? Okay, so this is the first condition. Now, with this, with the help of this thing, I have changed the another plan. That is what they want. The second point. What they wanted, the second point. They wanted an increase in the selling price by 4%, just whatever the sale is, increase by 4%, and reduce all the expenses by 2%. So this is the, now the first table, 5 lakh to 572. I have added 4%. If you closely watch, I have added 4% to it. And reduce all my cost by 2%. So whatever the cost is, including the fixed cost, I have reduced by 2%. And now if I check the profit is coming out to be 92,780, which was my required profit. The manager told me that 23% is the return on capital employed, which was 92,000. I'm getting more than that. Obviously, whatever he's telling is correct. That is, if you increase the volume by 10% with a simultaneous increase in the selling price by 4% and also the reduction in all the costs by 2%, you will earn a profit of more than 23% in fact. So this is the point. The point is you need to calculate it in two parts. If you calculate in one part, although it can be calculated, but that creates a lot of confusion for a lot of students, because if you check the suggested or if you check the model questions, model solutions, at that time they use into 1 by 4 into 98 by 100 for reduction in 2% and addition of 4%. So they use 1 by 4 and 98. Many of the students got confused. So what I've done is I have made it into individual parts, easy to understand, and there will be no mistake in this. I hope the point is clear. Next one. And if you check return on capital employed, it is more than 23%, that is 23.195%. Next one. Okay, optimum mix. Again, I have just added this question just for the sake of practice. Okay, this is just a practice question. Although I have given the solution for this, this is just a practice question. Why practice question? This is the exact same question which we did twice earlier. That is, which product should I go for? If you remember, I was having XYZ above also, and department 2 was having the limiting factor. So this is a very basic question, very easy one. If you go through it, you will be able to understand easily. Why I have added this in sheet is just to make practice, nothing else. Next one. Okay, and here comes the tough part, that is transfer price. Yes, I guess one of you commented on the transfer pricing. Just 1 second, I'll just check. Okay, I don't know, what is it? Yes, it was rightly said by one of the students that transfer price is yes, a bit tough part, apart from the others, and also marginal costing has a weightage of approximate 30 marks. That means out of 50, 30 marks is for marginal, and that's why I'm taking a lot of time on marginal itself. I'm not spending time on standard and ABC, but I'm spending time on marginal because it is very important. Okay, I'm reading the question, please have a look. A company is organized in two divisions, namely X and Y. One produces three products ABC. The data per unit are as follows. Market price is given, variable cost is given, direct labor hours is given, and maximum potential sales is also given. Division Y has a demand of 600 units of B for its use. It is 600 units of B. Talking about Y. If division X cannot supply the requirement, division Y can buy a similar product from the market at 224. So they are telling that if X is unable to make that supply, Y will buy from outside at 224. what should be the transfer price of 600 units of beef of division Y if the direct labor hours available in division A, X are restricted to 15,000. So first of all, this is the restricting factor. That is the limiting factor. What is the limiting factor? The direct labor hours. What I will calculate first is the contribution and the ranking. Can you all give me the contribution for ABC and the ranking? I'm just waiting for your answer. I need the ranking for A, B and C. I'm waiting for the ranking of A, B and C. Yes, calculate the contribution and the ranking per limiting factor. Contrib per labor hour is 18, 22 and 20. Okay. Is everyone getting the same answer? Please check. A, B, C. 18, 20 and 22 and 20. And therefore ranking will be first for this, second for C and third for A. Check. Okay. Yes, give the correct answer. Jyoti 231. Just check your ranking once again. And others, please check. Yes, the perfect is BCA is the ranking. That means I should go with product B first, then with C, and then with A is the solution. Right? This is the ranking. Okay. Now, if I ask you, what does Y want? So Y want B, that is the highest contribution. Y want B, right? As of now, what is my market demand? 1600, 1000 and 600. And just forget about this, okay? Just forget about this transfers. I just need one thing. How many units will you produce in the 15,000? 15,000. How will you utilize that? Obviously, I will say first I will make B, not unlimited up to the maximum demand. Then I will go with C and then I will go with A. Let's check. Let's check. So maximum available hours. Maximum available hours are how much? Is 15,000. First we will produce B, right? First B. How much B? Not unlimited, but the maximum is 1,000. 1,000 units and it requires 5 hours. It requires 5 hours. That means total 5,000 hours will be blocked for B. Right? 5,000 hours will be blocked for B. Next, balance is 10,000 hours. Next, obviously, we will go with C. Up to maximum demand. What is the maximum demand for C? Just check. Maximum demand for C is 600 and it requires 3 hours. Maximum demand for C is 600 units and it requires 3 hours. That means a total of 1800 hours. Right, total of 1800 hours. Left out with 8200 hours. Okay. What is the maximum demand for A? 1600. It will require how many hours? So can I say 1600 into 4 will give me 6400 hours. Next is A. 1600 units into 4 hours, that is 6400 hours. Can I say the balance is 8200 less 6400? I am left out with 1800 hours. I am left out with 1800 hours. Is the point clear? 1800 hours. So, do I have extra capacity? Now, just go back and try to recall what I taught you about transfer pricing. Transfer pricing. If you have the additional capacity, you will charge only the variable cost, right? I asked you. if you have the additional capacity. So do you have the additional capacity? Yes, you are having the additional capacity of 1800 hours. What will you do from this 1800 hours? You will try to give Y. But how much does Y want? How much does Y want? Y wants 600 units of B. Y want 600 units of B. And how many hours will it require? How many hours will this require? Please tell me. How many hours will it require? So can I say B requires 5 hours per unit? That means you are in need of 3000 hours. We require 3000 hours to supply Y. But I am left with only 1800. I just have 1800 with me. So can I say I will utilize 1200 from the lowest contribution element, that is A. Obviously, I will not sacrifice B and C for that. Because the least profitable is A, I will sacrifice A for to supply B for 2Y. So what is the rule? How many hours are short? How many hours are short? Short is 1200 hours, right? Will be taken from A, right? Will be taken from A. Why A? Because A is the least profitable. A is the least profitable. I'll take this 1200 hours for A. That means, am I losing out on something? Am I losing out on something? The answer is yes, we are losing out something. What are we losing? What are we losing? Am I losing 18 rupees per hour of A? Because I can earn 18 rupees in 1 hour if I produce A. And by not producing A, I am losing out on something, right? And whatever I am losing, it is Y's responsibility to compensate that, is the transfer price, right? So how much we are losing? How much we are losing? Contribution lost. How much we are losing? It is 1200 hours into 18. I am losing this thing. So how much is 1200 into 18? It is 21600. It is 21600. That means I am losing 21,600 just because I want to supply Y. I was not losing on 1800, okay? I was not losing on 1800, but yes, I am losing on this 1200 because if I want to give Y the entire 600 units, I require 3000 hours, but I am having only 1800 hours capacity. So obviously, I will sacrifice A because it is the least profitable. I will sacrifice 1200 hours of A to give B. That is to give B product B to Y. And I am sacrificing 21,600. So I will charge this at to the transfer price. Okay. So please tell me, what is the variable cost of B? What is the variable cost of B? The variable cost is 120. So I will tell Y, look, variable cost is 600 units into 120. You have to pay me this. He will say yes, because this is a variable cost, because this is what I am making for it, right? Plus I will also say you also need to compensate whatever I have lost. So this is the contribution lost. And 600 into 120 will give me 72,000. I will ask him for 72,000 plus I will also ask him for 21,600 because I have lost something just because I have given these units. And 21,600 will give me 93,600 as my total transfer price. Per unit, it will be 93,600 divided by 600. And this is coming out to be 156. Okay, elaborate correct answer. Okay, perfect answer. 156. So the transfer price is 156. I hope everyone got this concept of transfer pricing. The simple rule was I will charge variable cost for sure. Variable cost I will charge, but I will also charge something which I am losing. That becomes my opportunity, or else you can say the contribution lost. Please check everyone, is the concept clear? Okay. So I have given this solution. Yes, I have calculated contribution, labor, contribution, ranking. I have also given the ranking. Then balance is 1800 hours, that also given. And I have also given the entire concept. So 156 per unit is the correct answer. Yes. Next one. Okay, service industry. Again, service industry. This was in service costing also in your intermediate. A bit changed. Let's go for it. Exactly what are they saying? Following is the operating results of Premier Hospital for the year ending 31st March 2019. Revenue means sales, right? Revenue means sales. Cost variable is given. Bed capacity ratio fixed but varies with number of beds. It is fixed, but if you increase the number of beds, it will change. That means it is not fixed, it is semi-variable, we can say. Staff cost is 35,10,000 and profit is 7,20,000. It is clearly given. The hospital charged each patient an average of rupees 650 per day. Okay. So what I want is, if one of the patient comes, I charge 650 from him. I charge 650 from him. So this is my total sales. Can you please tell me how many patient days were there? How many patient days were there? In short, I'm charging 650 from one person, right? I have totally collected. That is the total revenue from the patients is obviously dash into 650. I want that dash. How many patient days were there? In short, how many patients came to my hospital? How many patients were there? Yes, please tell me. $17,520. Okay, please check 17,520 is it correct, everyone? Yes, Vedanti. Perfect. 17,520 patient days were there. That means total of in one complete year, 17,520 patients came to me, and I charged 650 from them, and it gave me a total collection of 1,13,88,000. Okay, 17,520 is the correct one. Sure. So I got the first one, right? 17,520 patient days. Now the cost is variable, right? It is variable cost. Obviously, it will be per patient. And how many patients were there? How many patients were there? 17,520. I just calculated it, right? Can you please tell me what is the variable cost per unit? What is the variable cost per unit? It is 2628 divided by 17,520. It is coming out to be 150. This is the variable cost, and selling price was given as 650. That means my contribution is 500. Please check. Is everyone getting this concept? My contribution is 500. I have read only till here. I haven't gone any further. I know the selling price. I know the variable cost, and I know the contribution per patient day. Right? Okay. Moving ahead. Had a capacity of 60 beds, operated 24 hours for 365 days. All the days were open, 24 hours, and 60 beds were there. As of now, I am having a capacity of 60 beds. Next. The hospital has minimum department personnel requirements based on the total annual patient days, and following tables gives you the salary to be paid. So if there are 10,000 to 14,000 patient days, I pay a salary of 32 lakhs. If it is 14,000 to 17,000, I pay 3380. But as of now, I am in third slab, 13,520. 17,520 comes in the third slab because it has crossed the 70,000 level. And therefore, if you closely watch, I am in this level, and they have properly added 35,10,000 above. They are telling that I am right now paying 35,10,000, right? So I have the fixed cost with us. Now, what are they asking? Compute the break-even patient days for the year ending 31st March 19. Now, what they are telling, break-even. Can you please tell me what is the break-even formula? Break-even. So you will say, sir, fixed cost divided by contribution per unit. I have the fixed cost. Can you please tell me fixed cost? How much is the fixed cost? It is given to be 4530 first initially, and staff salary is also 35,10,000. That means my total fixed cost is 4530 plus 3510. 80 lakh 40,000. 80 lakh 40,000. And my contribution is 500. And my contribution is 500. If I go with this will give me an incorrect answer. Why? Let's calculate. Break it. The formula is fixed cost divided by contribution. This will give me 16,080. This will give me 16,080. Now, if you closely watch the second table, as of now, I can say this is the final answer, right? This is the final answer, but this is not the final answer. Why? Because of the second table. Just closely watch. If I am having 16,080 patients, what will be the staff cost? What will be the staff cost? Will it be 3510 or will it be 3380? Will it be 3510 or will it be 3380? So the answer is I will drop down to the second list, which is 3380. And therefore my fixed cost, my revised fixed cost will be 4530 is given, plus staff salary will be 3380 and not 3510, because if I go with 16,000, the staff salary will also get reduced, and my total fixed cost will be 4530 plus 3380, 79 lakh 10,000, and my break even will now be 7910 divided by 500 will give me 15,820 as my final answer. Yes, already clear answer. 15,820. I hope the point is clear. So what was the twist? The twist was in the second table. The twist was in the second table. This one. Since it was given the break even is at 16,080, I said it will get still lowered, because 16,080 comes under the second slab. That means fixed cost will also get reduced, and therefore my break even will also get reduced. I hope the point is clear. Next, this was asked for 10 marks. Second, compute the break even patient days for the year ending 31st if the hospital capacity is raised to 80 beds. So now they are telling ki 60 beds and now make it 80 beds. Patient demand is unknown, but assume that revenue per patient and cost per patient day, cost per bed and employee salary will remain the same as the year before. What we are selling, everything remained the same. Nothing changed. I don't know what is the patient demand, but everything remained the same. So what you have to do is very simple concept. What will be my sales? So I can say for 60 beds, it was 1 crore 13 lakh 88,000. How many for 80 beds? Simple as that. Right? This will be my sales level. This will be my sales level. But obviously, this won't change my contribution. My contribution will still be the same, right? My contribution will still be the same, 500. Contribution is 500. But focus on this point. Focus on this point now. Bed capacity varies with the number of beds. That means if you raise the bed, my fixed cost will also get changed down. Again the same thing, 45 lakh 30. What will be my fixed cost? It will be for 60 beds. The answer was 4530. For 80 beds, how much will be the answer? For 80 beds, how much will be the answer? So if you cross check, cross multiply 4530 into 80 divided by 60. This will give me 60 lakh 40,000. Right? And what will be the staff salary? What will be staff salary? Obviously, staff salary will be in the third slab, right? Because 17,520 was the initial one, and you have raised the capacity. Obviously, it will be in this range only, and therefore, it will be 35 lakh 10,000. 35 lakh 10,000. 35 lakh 10,000, giving me a total of 95 lakh 50,000. giving me a total of 95,50,000, and break even formula is fixed cost divided by quantity per unit. This will give me divided by 500, 19,100. 19,100. Now if I ask you, where does this 19,100 comes in this table? Is it in the first one? Is it in the second one? Is it the third one? 19,100 still be in the third one, and therefore no requirement for changing the break even, because initially what happened was 17 was here and 16 was in the above case, and therefore I reduced. But 19 is here only. 19,000 is here only, and therefore fixed cost will remain the same, no change, and therefore the final answer will be 19,100. 19,100. So this was the entire answer. Okay, so let's check the solution. Okay, I have given an entire explanation of everything, how the brackets came. Final was the contribution. Initially it was 16,080, but we changed to 15,820. So main answer is 15,820 and 19,100. Okay, next one. Okay, once again a transfer price. Again, important question. Once again, transfer price. I'm reading the question, please have a look. XY company has a profit center divisions X and Y. Profit center means they are all responsible for their own profits. Everyone is working for himself, making products X and Y respectively. Each unit of Y requires 1 unit of X, and Y can sell a maximum of 50,000 units in the external market at a selling price of 150. Okay. So what they are telling, X has to supply Y, and whatever he supplies, it requires 1 unit. Why? The maximum demand is 50,000 units at a selling price of 150. Obviously, to make this product, he requires, that is Y requires one product from X. That means X has to supply. X will supply. Okay, moving ahead. X has the capacity to produce 1 lakh units. X has the capacity to produce 1 lakh units. The variable cost is 12. Fixed cost is 7,20,000. X can sell the following quantities in the external market. How much he can sell? If he sells at 18 rupees, he can sell 84,000 units. If he can sell at 20, he can sell at 76. If he sells at 22, he can sell only 70. Obviously, the price, if increasing the quantity demanded, gets reduced. 24 and 26, the demand gets less. Demand आपका कम होते जाएगा, right? Now, what I want first from you is, which is the best selling price for X? Which is the best selling price for X? If he sells at 18, he will be able to sell 84,000. If he sells rupees at 20, he will be able to sell only 76,000. Please tell me which is the best selling price for X. Which is the best selling price for X? I'll read 26. No, beta, direct 26 पे आप landing कर सकते हो, because we cannot say that selling at the highest selling price will give me the contribution more. You also have to check the quantity. Okay, so what I want is, okay, so everyone is getting 26. Okay, it may be the answer is 26. I don't know. Okay, so what is the contribution? Contribution. The variable cost is 12, right? The variable cost is 12. The selling price is 18. The contribution is 6, right? 18 minus 12. 20 minus 12, the variable cost contribution is 8. Contribution is 10. Contribution is 12, and contribution is 14. I want the total contribution. I want the total contribution. What you have to do is you just need to multiply with the contribution. From 1 unit, I am earning 6. I hope 6 कैसे आया सबको समझ में आया. Selling price is 18 and 12 is the variable cost. The difference is the contribution. Selling price minus variable cost. Okay. Check what is the contribution. I'll check with you. 84 into 6. This is giving 5,04,000. 76 into 8 is giving me 6,08,000. 70 into 10 is giving me 7 lakh. 64 into 12 is giving me 7,68,000. and 54 into 26. Sorry, 54 into 14 is giving me 7,56,000. No, beta, all the answers are incorrect because I'm getting a maximum contribution at this stage. I'm getting a maximum contribution at 7,68,000. That means I will set a price at 24 and not 26. Since I'm getting a highest contribution at this level. That means if I sell at 24, I'm earning a contribution of 7,68,000, which is still the highest. Contribution per unit. Okay, fine. I also did it contribution per unit better. Raki, just check. This is contribution per unit. This is contribution per unit. 6, 8, 10, 12, 14. Okay, so I hope the point is very clear. That means if you are X, you are the manager of X, you will say, I will set a selling price at 24 and I will sell only 64,000 units. I will not sell more than that. I will only sell 64,000 because it will give me the highest contribution. Right? This is the first point. Okay. Next. Y can purchase its requirement from the external market at rupees 22 per unit, but has to incur a bulk transportation cost of 150 for any quantity which will not be incurred on transfers from X. Now, what is he telling? That if Y is purchasing from outside, he can purchase at 22 plus he has to pay 1,50,000 as transportation, but this transportation won't be charged if he takes from X. Right? So the rule is X, Y, outside market. The outside market is giving at 22 per unit plus 150 for transportation, 1,50,000 for transportation. But X will supply at transfer price. I don't know what is the transfer price. I'm just searching for that. But there will be no transportation cost. No transfer. So I need to calculate this price. Okay. And as I told you, what is transfer price for me? The variable cost is the transfer price for me, right? Obviously, I will charge variable. Also, I will charge something extra if I lost something. If I'm losing out on something, I will charge from you. That is transfer price. Okay, moving ahead. Assuming no demand from Y, what will be the best strategy for X? Okay. If I say ki Y is ready to buy from outside, he is not demanding from us. What will we sell? Will we sell 84? Will we sell 76? Will we sell 70, 64 or 54? Obviously, I got my first answer as 768 contribution. That means I will sell 64,000 units at rupees 24. This will be my best strategy. This will be my best strategy. Right? First one. Second. I didn't calculate the total contribution. Yes, dear, we also need to calculate the demand because the total contribution will be demand into the contribution per unit. Okay. Second point. What will be the minimum transfer price that X will agree if X has to supply 50,000 units to Y? What will Y offer as the maximum? Okay, fine. Yes, second part we'll study later. The first one. What will be the minimum transfer price if it has to give 50,000? Okay. Just look at the 50,000 criteria. Please tell me, if I give 50,000 to Y, I am left with 50,000. This 50,000 I will sell at what price? Please tell me. Will I sell it at 18, 20, 22, 24 or 26? I repeat my question again. I am X, right? I am having a capacity of 1 lakh units. I am ready to give 50,000 to Y. That means I will sell in open market 50,000. Only 50,000. Please tell me at what price will I sell this 50,000 in open market? I have to set a price for this, right? I will set a price for this 50,000. I'm not talking about that 50,000. Please tell me at what price will I sell this 50,000 in the open market by referring the question. At what price will I sell? Yes, 26 is the correct answer. Why? Because it is clearly stating that if I want to sell 54,000 or less, I can sell it at price 26. Why will I take 24 now? Why will I take 24? I'm having only 50,000 units with me. Why will I sell at 24 then? Because at 26 also the market is demanding 54,000 with me. I have 50,000. I will share at 26. Why 24 now? Is the point clear? That means if I set a price of 26, if I set a price of rupees 26, how much will I earn? Please tell me. I will earn 7,56,000 if I make it 26. But the problem is I will sell 50,000 only. I don't have 54,000 with me because I have provided 50,000 to buy. I don't have 50,000. So 50,000 into 26 will give me 26, 5, 1 lakh, sorry, 7 lakh, exact 7 lakh. 26 into 5. Sorry. Okay, I'm multiplying with 14, sorry. 14 into 20, 50,000. This will give me 7 lakh contribution. This will give me 7 lakh contribution. Now, am I losing out something? 36,000 at 12. Okay, you went at the third point, Gita. Gita, you are on to the third point. I'm just searching for it. You are giving the correct answer, not the exact answer, but yes, you are very close enough. Okay, I'll just tell you what the strategy is. Look, this is X, this is Y. I have a maximum capacity. I have a maximum capacity of 1 lakh units. Right? As of now, I said that the best strategy for X, the best strategy which I actually calculated was 24 and sell 64,000 units only. That's it. The best strategy was to sell at 24 and 64,000. But Y is telling don't sell 64,000, give 54,000 to me. Sorry, 50,000 units to me. 50,000. That means we will sell balance 50,000 units at rupees 26, earning a contribution of 14 per unit. Earning a contribution of 14 per unit. Right? Agar 26 mein hai, 12 was the variable cost, I was earning 14. So, how much will I earn? Contribution earned, how much will it be the contribution? It will be 50,000 into 14, which is 7 lakh, right? 50,000 into 14, which is 7 lakh. But if I closely watch, actually I would have earned 7,56,000 at the same price by not supplying, because the rule was I was able to sell 54,000, but since I am supplying these goods to Y, I will only be able to sell 50,000 now. That means I am foregoing something. If I sell in the open market, I would have earned 7,50,000 for the same quantity. But because I am supplying Y, I am earning only 7 lakh. That means I am losing out on something. Can you please tell me what is my contribution lost? It is nothing but 56,000. My contribution lost is 56,000. Now I will say Y. Just because I am supplying this 50,000 units to you, I am foregoing out on something. I am losing out on something, that is 56,000. You need to pay me this also. And what is the variable cost? Variable cost is 50,000 units into what is the variable cost? 12. I will say you have to give me variable cost of 12, that is 6 lakh rupees. No doubt. You need to pay 6 lakh plus I will also say I need my opportunity opportunity lost, you can say contribution lost of 56,000. It is just because of you I lost something, because I am supplying these goods to you. And this will be 6,56,000. This is the total transfer price. Okay. What is the per unit? Transfer price per unit. It is 656 divided by 50,000 units. Divided by 50,000. So 656 divided by 50,000 will give me 13.12. That is approximately 13. Rounding off 13. So I will supply at 13 and not at 12. This we have learned 3 times already. Maybe this is the 4th time I am repeating the same point. Whatever I am losing, you need to pay me that. Just because I gave you 50,000 units, I lost 56,000 because of you. So it is your responsibility to pay me this 56,000. So can I say the minimum transfer price is 13, minimum transfer price? Well, the answer is yes. Okay. Okay, so let's we have decided to select 26 only because we have to select. Yes, Ellery. This is the point. I will be coming out on this point also, but in the C point. This is just a B point. We'll come to the C point and your point will also be answered. Okay. So what is the minimum price? 13. Now, just think on profitable basis. Okay. You are the manager. You are the manager of X. What is the minimum price? 13. You will charge minimum 13. But as a manager, you also know the fact that Y is purchasing from outside at 22 and also incurring 1,50,000 rupees for transportation. You know this fact. Now please tell me. I'll ask you a few questions, just answer that. 13 is the minimum price below which I will not give you, right? Because I am losing out on something. If I give at 15, will Y accept? Yes or no? If I give at 15, will Y accept? If I give at 15, will Y accept? Yes. 15, yes, because obviously it is profitable. That means if I set my transfer price at 22 also, then also I will accept. Then also I will accept. Why will he not? Because if he accepts at 22, he will still be saving 1,50,000. He will still be saving this 50,000. Sure, 100%. Right? Obviously, if X is strong, if X is strong enough to bargain, he will say, I won't give you at 13, I will give you at 22. If you want to accept, accept or leave it. Y will obviously accept it. But what is the minimum transfer price? The minimum price is 13. I won't give below 13 and Y won't accept above 22. This is the range, right? This is the range. I will give you at a minimum price of 13, but since I know the fact that you are taking the same goods at 22 from the outside market, if I'm ready to bargain, if I'm strong enough, I will say I won't give you at 13. If you want to take it at 22. That is the maximum price, which again Y will accept. Okay, this is the point. So I gave you the minimum transfer price as 13. Next, if Y is acceptable to partial supplies. Yes, elaborate the third point. If Y is acceptable to partial supplies, what will be X best strategy under no compulsion to transfer, but with the option to transfer as many units as that it wants to? What will be the quantity that X will agree to transfer and the corresponding price, assuming both divisions agree to share the benefits equally? Now, what do you mean by this? If you were X, if you are a manager of X, what was the best selling price for you? Was it 24 or was it 26? Please tell me. If you were the manager of X, what was the best selling price for you? Was it 24 or was it 26? Please tell me. Yes, what was the best selling price? Vedanta is saying 26. Okay. 24 Rakhi is saying. Others? If you were the manager of X, what was the best thing for you? Yes, the best thing was 24 because I clearly stated in the first point itself, it was giving me the highest contribution. It was giving me the highest contribution. So 64,000 units I was giving to giving in the open market. That means now if I tell you the another strategy, if you were the manager of X, okay, think only from the point of view of X, not for Y, not for the company. Every profit center is responsible for its own profit. Unnati standard for sure. And I will try for ABC also. Let's see how the time permits. Okay, so I was having a capacity of 1 lakh units, right? I was having a capacity of 1 lakh units. Obviously, I will say 64,000 units I will sell in the open market. Sell in open market at 24 because this was giving me the highest contribution, right? And balance 36,000 I will give to Y. Balance I will give to Y. What is the minimum price? I searched minimum price. Minimum price was 13, right? And what was the maximum price? The maximum price was 22 because already he was getting at 22, right? And now what is the last sentence they are using? What is the last sentence they are using? Just check. Assuming both divisions agree to share the benefits of the transfer equally, and whatever the benefit is, divide in two parts. Divide in two parts. So what is the benefit they are taking? What is the benefit? The benefit is 9 rupees. Minimum price is 13, the maximum is 22. The benefit is the difference, that is 9. So what they are telling, we'll divide this benefit into two parts. Half you take and half I will take. Because if Y purchases from outside, he will purchase at 22. And if X gives at a minimum price, it is 13. That means purely the benefit will be of Y. So they decided to take the benefit half. Half will go over here, that is 4.5 over here and 4.5 over here. So what is the transfer price? 17.5. 13 is the minimum price and 4.5 is the extra benefit which they agreed to share equally. And therefore, the transfer price will be 17.5 and not 13 this time. Next. The last one. What would be the best strategy of the company? Will the company's overall strategy differ from individual decision strategy? Compute the benefits, disadvantage, indifference between the divisional best and the company best. Okay. If I ask you, what will X do? What will X do? You will say the best strategy for X was this one. Sell 64 in the outside market because it was giving the maximum contribution and also to give at 17.5. Also to give at 17.5. This was the best strategy, right? But if I ask you, think from the point of view of Y. Why? What will be best? Buying from outside or buying from X? The answer will be buying from X. Because transportation cost will be saved. Transportation cost will be saved. Now I'm just telling you, just make the total calculations, okay? Make the total calculations. If X sells only in open market, how many was he able to sell? He was able to sell 64,000 units and he was earning a contribution of 7,68,000. Right? He was earning a contribution of 7,68,000. But by supplying to Y the contribution came down to 7 lakh. Contribution came down to 7 lakh, which we already calculated in step number 2. That means loss for X is 68,000, right? X will say, just because I am serving you, I'm giving you 50,000 units, I'm losing out 68,000 rupees. I'm losing out 68,000 rupees, right? Now think from the point of view of Y. If Y purchases from outside, how much he will incur? He will incur a purchase price of 22,000 into 52,000 into 22. 50,000 into 22. That means he will pay 50,000 into 22. He will pay 11 lakh rupees. Plus, he will also pay transportation. He will also pay transportation. Transportation, how much? He will pay 1 lakh 50. That means in total, he is paying 12 lakh 50,000. In total, he is paying 12 lakh 50,000. Right? If he purchase from outside. Now, if he takes from X. At minimum price, that is 50,000 into 13. So how much will he pay? 50,000 into 13. He will pay only 650. He will pay only 650. That means, what is the benefit? 6 lakh. Right? What is the benefit? The benefit is 6 lakh. Now, I am telling you, if you were X, you will say, I will sell 64,000 in the open market because this is giving the maximum profit. If you were Y, you will say, I have to purchase it at a minimum price from X itself because that will save me 6 lakh rupees. I am telling you, now think from the point of view of company, overall company. How much is X incurring loss? 68,000. How much is Y incurring gain? 6 lakh. Ultimately, for the company, can I say the net gain is 5,32,000? The net gain is 5,32,000. Yes. For the entire company as a whole, the net gain is 5,32,000. And if I am the manager of the company, I will ask X to supply these units to Y at a minimum price so that the company gets benefited. This is the rule. And now, if I go with the answers, if I go with the solution, please have a look. I'm just reading the question. The variable cost was 12 per unit, right? I ask you to calculate the contribution first. So I calculated 5 contributions. The maximum contribution was 768 and I therefore decided to sell 64,000 at 24. This was giving me the highest contribution. I will say, if you are X, sell 64. Now, in the absence of demand from Y, the optimal strategy of X would be to sell 64,000 units since it gives the maximum contribution. This is point number 1. Second, if X has to give 50,000 units to Y, then it can sell balance 50 units for external sales at 26 because the 26 was the price. Contribution earned from external sales will be 7 lakh. Contribution lost will be 56,000. So here I gave you 56,000. We have already calculated 13. We have already calculated at 13.12, that is approximate 13. However, just read the notes properly. However, if X is strong enough, it can demand a price of 22 which Y will be paying to outside suppliers. By this, Y will not incur transport of 150. Still, at 22 also, Y will not incur transport because that will be favorable. If X can choose, X will supply 64,000 units for external demand and supply 36,000 to Y. For the simple reason, because 64 is more beneficial to X. Y will have to incur the transport cost of 14,000 units. Hence, it will not pay anything above 22. X will not accept anything below 13. Below 13, he won't accept. Benefits to be shared equally, they have given it, and therefore 4.5 benefits equal. Transfer price for 36,000 units will be 13 plus 4.5, which is 17.5. Next. For a company as a whole, the best strategy will be transfer 50,000 to buy and 50,000 units to external sales. As I said, the contribution lost was 68,000. This is the losing game, and the gain is 6 lakh. The net gain will be 5,32,000. I have given the entire solution in this. I have also explained. I hope the point is clear, because transfer pricing is all about the opportunity lost. I will again solve one of the question on transfer pricing itself. This is a very basic question for 8 marks MOS. So I'm not looking at this question. Okay, I'll come back to this question. I first want to calculate the transfer price questions. This is again basic, very simple one. Again basic. Okay, so here it is, a transfer price. A very big question for transfer pricing. Fine. Since transfer pricing is difficult part for you all, we'll just go through this question. I'm just reading out. Most of the sentence are of no use, but still we'll read it completely. X Limited is a diversified corporation with separate and distinct operation divisions. Each division's performance is evaluated on the basis of total profits and return on division investment. The Division A manufactures and sells tabletop air cooler units. Division A currently sells 15,000 units. Division A's manager believes that sales can be increased if the unit selling price of the tabletop air cooler is reduced. So Division A, the manager of the Division A is telling, if we reduce the selling price, the units can be increased. A market research study conducted by an independent firm on the request of the manager indicates that a 15% reduction in the selling price by rupees 60 would increase volume by 16% or 2,400 units. So what are they telling? If you reduce the selling price by 15%, the demand will increase by 2,400 units. Okay. The reduced price applying to all the units. Division A has sufficient production capacity to manage the increased volume with no increase in fixed cost. So it has a sufficient capacity, that means no fixed cost will be incurred. They can easily sell 70,400. At present, Division A uses a filter in each of its units that it purchases from an outside supplier at a cost of 70 per filter. As of now, he is purchasing a filter at rupees 70. The manager of Division A has approached the manager of Division B regarding the sale of filter unit to Division A. So what did Division A manager do? He approached Division B and asked to supply the filter. The Division B currently manufactures and sells exclusively to outside firms the filter that is similar to the one used by Division A. And as of now, Division B is already into that filters. The specification of Division A filter are slightly different, which will reduce the cost of Division B's material cost by rupees 5 per unit. And since it is a bit different, it will in fact reduce the cost by rupees 5 if it gets supplied by B. In addition, the Division B will not incur any variable selling cost in the units sold to Division A. Clearly they have said they will not incur variable selling cost. There are two savings in this. What is the first saving? The material cost will get reduced and there will be no variable selling cost. Moving ahead. The manager of Division A wants all the filters it uses to come from one supplier and has offered to pay rupees 50 for each unit filter of B. What is this saying? If I purchase from outside, I have to pay 70. So whatever requirement is of A, he has asked B to supply at rupees 50. So he has already set the transfer price that I will pay you 50, just supply me the product. Division B has the capacity of 75,000 units and currently sells 64,000 units in the market. What is it telling? As of now, 75,000 units can be produced, right? And 64,000 he is already selling. What is the extra capacity he is given? Extra capacity, extra. The extra capacity is 11,000 units. That means we will say 11,000 I can provide you, but obviously at a variable cost, right? The cost, whatever the variable cost is. But if you demand anything extra from 11,000, I will have to reduce my outside sales. That means there will be contribution lost. I will also add this to your bill, that is to the transfer price. Next. Selling price of Division A and Division B is given. Filter cost is 70, variable manufacturing cost and variable marketing cost. 30 and 6 they have given us. Should A go for the increased volume of sales from the financial perspective? Just justify your recommendation with appropriate figures. Okay. Now, what is first point? First point they are telling from here. As of now, division A is selling 15,000. They've asked that if you reduce 15%, the volume will increase to 2,400 units. Right, 2,400 units. The selling price is 400, and if they reduce by 60, the selling price will be 340. Let's check. So if I ask you, what is the present sales? What is the present sales? You will say, my present sales is 15,000 units and at 400. At 400. And new sales, revised sales, I will say. Revised sales. Revised sales. They are telling you can sell 17,400 units. 17,400, but at a reduced price. Reduced price is 15%, that is 60. That means reduce 60 by this, 340. 340. Just check which is more beneficial for you. Which one is more beneficial? Let's go for it. 15,000 into 400. This will give you 60 lakhs. And 17,400 into 340 will give you 59.16 lakhs. Which is more beneficial for you? Should you go with the present sales or will you go with the revised sales? Please give me the answer. They have asked you, as a cost accountant, they have asked you, should you go with the reduced price and increased demand or should you go with the present sales? Which is beneficial for you? Please tell me. Yes, the present sales is the best one because I haven't earned anything because 15,000 I'm selling at 60 lakhs. What is the use to reduce the price and lower my sales itself? If I check the sales volume, in fact, by increasing demand also and by reducing price also, my total sales are reducing, and therefore I should not go with the increased sales. You just have to show this to me. That's it. And the result is, don't go for the revised sales, don't go for the decrease in the selling price because it makes no sense reducing the prices unnecessarily, and moreover there is no demand, no more demand for that. Next one. B point. If B should supply the entire requirement of A after considering A above, what is the minimum transfer price that B will agree to, given that the single transfer applies to all units transferred to A? Is B likely to accept A's proposal transfer price? Okay. So A gave a proposal to supply at 50. A gave a proposal to supply at 50. Now please tell me, what is the variable cost? What is the variable cost for B? For supply, okay, for supply to A. There were two reductions, okay. There were two reductions. The reductions were clearly given above. I'll just mark the reductions. This is first thing. This is and this. Yes, please tell me. This is again the basic question. Just check the highlighted points, whatever I have highlighted, and you will be able to answer. The rule is I will charge variable cost plus whatever I am losing. The rule is I will charge variable cost plus whatever I am losing. Well, Unnati, I have no idea about this. Maybe you did policies, I don't know. Okay, I'll ask the question once again, just in case you left. I'm asking what is the variable cost for of B to supply to A? Just check the B column. Okay, so I'll just explain the concept. Just look at this. Now the rule is the variable cost. Okay, I'll just go with division B. I'll just go with division B. How much is division B earning right now? Division B. The selling price is 100. The variable cost is given to two parts. First is 30 and second is 6. And second is 6. That means I'm earning a contribution. I'm earning a contribution of 64 rupees. I'm earning a contribution of 64 rupees. A very simple one. Right? Presently, how much am I selling? Presently, how much am I selling? I'm selling 64,000. Right? I'm selling 64,000 and I have a capacity of 11,000. I have a capacity of 11,000. But what is the extra capacity you have? Extra capacity. So the extra capacity which you have is 11,000 units. Right? Obviously, I will say that 11,000 I will supply to you. 11,000 I will supply to you at my variable cost. At my variable cost. Plus, I will surely add my opportunity lost. Opportunity lost. Now please tell me, what is the requirement of, okay, what is the requirement of A? The requirement is 15,000. 15,000 chahiye usko, right? 15,000. But I have only 11,000. That means 4,000 I have to take out from the market sales. That means I will surely lose on something. I will lose 64 rupees on 4,000 units. So I will say, I will also add 4,000 units into 64. This is what I am teaching you since a lot of time. Transfer price. I will charge variable cost plus all the opportunity lost. So this lost opportunity is 4,000, is 2,56,000 plus. Now what is the variable cost for to supply? If you closely check, they have clearly stated that the material cost is getting reduced by 5 and there will be no selling cost. That means this 30 will be 25 only, 5 reduced, and this 6 will no more incur. Marketing cost is selling cost, this will not incur. Means the variable cost to supply is only 25. The variable cost to supply is only 25. And therefore 25 into 11 will give me 2,75,000 plus my opportunity. Now you can easily calculate the minimum price. How much is it? 256 divided by 15,000 units, 35.4. Right? So the minimum price which we are getting is 35.4. And how much has A offered? A has offered 50 rupees. 50 rupees. If you are the manager, will you accept? Obviously you will accept. You will say yes, 35.4 is the minimum transfer price which you are looking for. But he is offering 50 rupees. Why will I not accept them? मोहित 42.06 कैसे है बेटा आपका? How are you getting 42.06? Please check everyone. If the variable cost is 25 and this is 275 plus 256, 531 and 15,000 units divided by 15,000. 35.4 I am getting. Sir, opportunity cost 4,000 units out. Okay. See. 75,000 and 64,000. I'll just explain the concept once again. See, we are division B. Okay. We are division B. And division A is asking for one of the filter. They want a filter. Okay. They want a filter. Presently, the maximum capacity is okay, 15,000. Did I say 11? Yes, Geeta, it's my mistake. It is 15,000. Yes, you are correct. Okay, I'll just change the answer. 75,000. Maximum capacity is 75,000, right? Present sales is 64,000. Present sales is 64. That means whatever the balance is, I will give you 11,000 units at variable cost. Perfect. 11,000 I will be giving at variable cost, right? But I have to provide 15,000 units because initially it was clearly given that 15,000 units are there of A. A needs 15,000 filters, right? If A needs 15,000 filters, that means I have to take out 4,000 from here. 4,000 from present sales. That means now I will ask division A that just because of you, I am losing out on something. I have lost contribution on this 4,000 units. You need to compensate that, right? So the variable cost is 15,000 into 25. I made a mistake in the previous case. I took it 11,000. That was my mistake. 15,000 because it is the total transfer plus the opportunity lost. And opportunity lost is for 4,000. Raki, I hope you got how we got to 4,000. 4,000 units, right? And the opportunity lost is 4,000 units into 64 rupees. That is the contribution. And this will give you the answer as, yes, 42.06 is the correct answer. Mohit, I'm so sorry. 42.06 is the correct answer. Yes, everyone, is the point clear? Next. In the interest of X as a whole, what should be the best strategy in terms of sourcing and selling the filters? Work out a suitable transfer price for the management to convince A and B, assuming that X limit is not considered about avoiding partial supply. X is telling that if you need to supply, obviously you should supply completely and not partial, right? Okay. Now, I'm thinking of the company as a whole. Okay. I'm thinking of the company as a whole. What is the variable cost to supply? What is the variable cost to supply? Can I say variable cost is just 25? And the purchase price is 70 if I purchase from the outside market. Which will be beneficial? The home transfers, that is the division transfers, or the purchase from outside? Obviously, the answer will be the 25 one. That is, I should purchase from my division itself at 25 and not at 70, because if I purchase from outside, that will not be beneficial for me. It will incur a loss of 45 rupees. Mega, I'll be giving a small tea break after 10 to 15 minutes, and after that around 2 hours more for seminar costing. Okay. So I have given the complete solution. We'll just have a look at the solution. Okay. So the C point. For every unit of B sold, the company earns a contribution of 64, where if it earns to A, the contribution is, the sale is 45 rupees. For X Limited, the best strategy would be supply 11,000 units to A out of its spare capacity and not divert from the market. X Limited should convince A to accept partial order from B. A also stands to gain since instead of paying 70 from outside for the entire requirement of 15,000, A will incur only 50, which is also acceptable by B to its spare capacity. A should buy 4,000 from the open market and 11,000 from B at rupees 50, which is offered early. B will now sell 25 per unit its variable cost to A even from its spare capacity. Is the entire solution. So as a company, the rule is division A and division B. Division A and division B. Division B will charge only the variable cost, is the first thing, plus opportunity lost is the second thing. These are the only 2 points which you should consider at the time of transfer price. This is the only rule. There is nothing more than that in transfer pricing. What you are always looking for is the opportunity lost. That's it. If I'm losing out something, I will add to the transfer price. This is the only criteria. There is nothing else after transfer pricing. Okay. Just one more question and then we are done. Yes, this is the question. Question number 31, because it has two rankings in this, ranking 1 and ranking 2. That means I have to rank twice. Why is it so? We'll just have a look. An agro-based farm is planning its production for next year. The following is relating to the current year. Area occupied in acres: 125, 100, 150 and 125. So there are 4 crops, I can say M and OP, and the area is occurring in acres. Yield per acre, the answer is given in ton. The answer is given in ton. In 1 acre, how many tons are produced? Into 50 will give me the total tons, right? Into 50 will give me the total tons. Next, selling price per ton. Again, the answer is in per ton. Next, variable cost per acre. The answer is given in acres. Seeds, pesticides, fertilizers, cultivation, direct wages. Everything is given in acres. Now, please make sure you are not mixing out on anything. Not the acres, not the tons. Acres is different, tons is different. Just take the base properly. Moving ahead. Fixed overhead is given as 13,44,000. The land that is being used for production of O and P, the last 2 crops, can be used for either crop. Means O and P can be interchanged. O and P can be interchanged. But not for M and N. But in that area, M and cannot be produced. The land that is being utilized for the production of M and N, the other 2, can be used for either crop but not for O and P. That means they are telling that this 225 can only be utilized for M and N, and this 275 can only be utilized for P and O. They are telling the same. Moving ahead. In order to provide adequate market service, the company must produce each year at least 1,000 tons of M and N, 900 tons of O and P. What they are telling, they have a minimum requirement. Now, go back and just study that. I have already explained that is minimum. If the minimum is given, at least is the minimum, right? We always keep aside for minimum and then we move ahead for the maximum part, right? So they have given 1,000 and 900. So for M and N, the minimum is 1,000 tons, and for O and P, the minimum is 900 tons. Obviously, they are individual, 900 tons each. Moving ahead. Determine the profit for the production mix fulfilling market commitment. So you need to calculate which to produce. As of now, they are using 125 and 100. I'll just directly scroll to the solution. They have given yield per acre and they have given selling price per ton. So what I have done is I have just multiplied it to get it acres. 1 ton they are selling, and per ton per acre they are making 50 tons. So selling price per acre, since everything was given in acres, I converted everything in acres. So I got the selling price, I got the variable cost. How did I get the variable cost? By adding this. All these are variable cost per acre, right? All these are variable cost. So selling price minus variable cost will give me contribution. I got the contribution. Selling price minus variable cost will give me the contribution. And since M and N are different and O and P are different, if you closely watch, M and N are different and O and P are different. Consider this. This is not one question. This is two different questions. These are two different questions. Just check. Contribution per acre, which is the maximum? Obviously, it is for M. I will give first rank to M and second rank to N. And if I check, go for O and P, the maximum contribution is P. I will give first rank to P and 3775 to 2. That is O. I hope the point is clear. I gave two rankings, different rankings, because they cannot be interchanged. M and N, the land for M and N can only be utilized for M and N only. Now please tell me, the minimum requirement was 1000, right? The minimum requirement was 1000. Obviously, I will keep aside, since N is second priority, I will say make only 1000 tons for N and whatever the capacity is utilized for M. Similarly, if O and P are to be used, I will say minimum 900 is for O and whatever the balance capacity is, go for P. That's it. So I have given the question. I just took this question because it is nothing but two different parts. That's it. Okay. Acres available for M and N. Just check. M and acres. M and N acres are 225. 225. So I wrote that 225. Minimum requirement for N. Since it is 1000 tons, 1 acre produces 40 tons. It is given in the above question. That means 25 acres I will give for N and 200 acres I will give for M. That's it. Similarly, O and P 275 is given. I will keep aside O for 900 units. 900 divided by 45 will give me 20. Why 45? Because it is per acre. Acres per ton. Sorry, tons per acre. Next available is 245, 255. So I got the answers as, I got the answer as M 200, N 25, O 255, sorry, O 20 and P 255. That's it. And now you can multiply the contribution and get the answers. So if it is clearly seen, visible, 200, 25, 20 and 255. In short, this was a very basic question which we have already learned. The only criteria was in this one question there were two different parts. So I consider it as M and N are different question and O and P are different question and I went with the flow. And here it is, I got the profit as 546,750. Now, in the second part, what they have asked, assuming that the land could be cultivated to produce any of the four products, there was no market commitment, calculate the profit amount of most profitable crop and break even for most profitable crop in terms of acres and sales value. They are telling there is no market commitment, that means there is no minimum requirement. Produce anything which you want. I will say, I will produce everything which will give me the highest contribution. The highest contribution is given by P, 48, right? And total tons, how many I am having? Total tons. Total tons. Total tons is this one. 225 and 270, 500 tons. 500 acres, sorry. I will say produce only P because there was no market commitment. Produce only and only P. And you already know how to calculate the break even. Break even is nothing but fixed cost divided by PV ratio. Fixed cost is clearly given. And PV ratio you can easily calculate by calculating this. That is, we have already calculated right now. Contribution is already there. Contribution is already there. That is 4,800. And you can easily calculate the break even. Right? You can easily calculate the break even. 22 lakh 68,000 is the break even. And I will go only with P because it is giving me the maximum contribution of 4,800 rupees per acre. I hope the point is clear. And with this, I have taken a lot of questions. Still, I am waiting. If you have any queries in marginal costing, may it be your scanner, may it be your any exam question, may it be your study material. If you have any queries in marginal costing, feel free to ask. I'll just open up the module or the scanner, whatever you say, and I'll solve that question. Please let me know. And if not, then we'll take a small tea break and then we'll start with standard costing. On a quick break. Okay. Okay, so I'm declaring a break over here right now. If at all you feel कि इसके बाद भी अगर कोई query रहती है, feel free to ask. You can surely text. Okay, so we'll take a tea break of like 20 minutes. Okay, I'll give a long break. And next topic will be standard costing. Yes, Europe students, good evening once again, and please let me know, am I audible? Okay, Vani. Okay, so Aluri and Jyoti, you have one questions each in query. Okay. For each of the question, please get in touch personally. आप मुझे text कर सकते हैं. I'll surely help you on that. Okay. Okay. So let's start with standard costing. Let's start with standard costing. Okay. So basically, if I ask you what you know about this chapter, so we'll say, sir, this chapter is all about formulas, and we just have to calculate the variances, right? This is what we have done in this chapter. But if I ask you, why are you doing this exactly? Can any one of you tell me? Or else, can anyone tell me when are the standards set and when to calculate the variances? When are the standards set? जो notes आपको provide किए जाएंगे, the notes which I'll be providing has my number on it. You can directly get in touch with, or else you can also contact Hgpa office. All the details will be in there in description box. Okay, standard costing. When are the standards set and when are the variances calculated? When are the variances calculated? Okay, standards are set at the beginning of the year, yes. And when are the variances calculated? Yes, please tell me. Everything you know about this chapter, please tell me. These are set on the first day itself. Yes, these are set on the first day itself, and variances are calculated on the last day of the year. On the last day of the year. Obviously, the word is variance. Variance means the results are varying. That means whatever standard I set, the actual results are not getting matched with it. For example, I asked for sales, that my standard sales will be 10,000 this year. I just made a standard that I have to sell 10,000 this year, right? But at the end of the year, the sales, it is higher chance that the sale will not be 10,000, it will be greater or less than, but it will not be 10,000. Most of the answers, right? Most of the cases are the sale might be 12,000, right? The sale might be 12,000. It may be possible, right? The sale may be 12,000. Now, there might be a reason, right? There might be a reason why my sale is getting more. Why is the sale 12,000 and why not 10,000 when the standard was set as 10,000? Why is it 12,000? There might be a reason, right? There might be a reason. As of now, in standard costing, you are least interested in the reason because the reason department is for audit department. What we are going to study in this case in standard costing is how much is the difference. That is how much my standard result is not getting matched with the actual result. That's it. You just need to calculate. There's a difference, right? There's a difference between the standard and the difference between the actuals. And this difference we need to calculate. This basic is known as standard costing. I need to compare my actual results with my standard set on the first day, and if at all there is a difference, I need to note down that. Now, the difference may be favorable or the difference may be adverse. The difference may be favorable or the difference may be adverse. For example, in this question itself, I asked you to sell 10,000, but at the end of the year, the sales were 12,000. Is it favorable? Yes, the answer is favorable. I asked you for to sell 10,000, but you have sold at something extra, 12,000. Obviously, this 2,000 is favorable for me. But what if the actual sale was 9,000 only? I asked you to make a sale of 10,000, but actually you made a sale of 9,000 only. That means this is a loss for me, right? This is loss for me. This is not favorable act for me. This is adverse act for me, and this 1,000 is just adverse. You just need to note down this. This is the only criteria for standard costing, right? We just need to know the differences. We just need to know the differences. Okay. To start with standard costing, and I don't know, actually, standard costing can be taught by various methods. First is learning the formulas. Second is all the calculations, and then what your study material goes 1 minus 2, 2 minus 3, 3 minus 4, 4 minus 5, and so on. It gives something like this. What I believe is a standard table. What I believe is the standard table. I'll teach you how to make a table. If you know how to make this table, all the variances, that is material, labor, variable overhead, sales variances, everything depends upon the same table and are all related to each other. The only thing that will be changed is the name, nothing else. The concept will be the same for each one of it except for fixed overhead. That means you need to learn only two things. First is the standard table. If you are good at the standard table, you are done with this. And fixed overhead separately you need to understand. Okay. I'll just teach you the standard table. Okay. Before starting, I'll just say one thing. Okay. I'll just say one thing. If you are good at this chapter, and you have already learned something different, right? You have learned the formulas. You are taking 1 minus 2, 2 minus 3, 3 minus 4 as it is stated in your module, in your study material. If you are good at that, I will say you don't need to learn this concept, because that will create a lot of confusion for you all, that you have learned something extra, something new, and now you are learning something new at the exam point of time, which obviously is not a favorable one for you. But if you think that, no sir, we are at par at this chapter, we are not at great at this chapter, only then I will suggest you to learn this method, okay? Because this is a high time now to learn something new. It is not tough, but what happens is we are actually habituated to one method, and changing a method at the last moment is not a good idea. Okay, so I'll just start with the normal question. Now, if I ask you material, right? I asked you to make 1 unit of finished products to include 3 kgs in that at rupees 20 per kg. At rupees 20 per kg. That means the product should use 60 rupees material, right? I asked you to make 1 unit, for example, let's say this pen. Use 3 kg of plastic in this pen, and the plastic is 20 per kg. How much material should you use? You should use 60 rupees in this material to you. This 60 rupees material for this one pen, right? This is the given standard. I gave you this standard. Actually, 1 unit was made by using 4 kgs and it was purchased at 22 rupees. That means you totally spent rupees 88. Now you can clearly feel the difference, that I asked you to use 60 rupees material, but you actually used 88 rupees material. Right? I asked you to complete this one pen by using plastic of 60 rupees, but actually what happened is you used 88 rupees material in this pen. Now, my simple question to you is, whose mistake is this? Because while purchasing and while producing, there are 2 managers with me. First is the production manager, and the second is the purchase manager. Please tell me, whom should I catch for this 28 rupees loss? I have incurred a loss of 28 rupees, right? I have incurred a loss of 28 rupees that can be clearly seen. That can be clearly seen. I asked you to make it at 60. You have done it at 88. That means you have spent rupees 28 extra. That is not favorable for me. That is adverse for me. My question to you is, whose fault is this? Is it production manager or is it purchase manager or both? And if both, then how much should I held responsible to each one of them? Yes, I want the answer. I want the answer. I incurred a loss of 28, right? This can be clearly seen. Whose fault is this? Is it production or is it purchase? Whom should I catch? Whom should I held responsible for this loss of 28 rupees? Yes, I need an answer and a quick answer. Production manager 20, okay. And purchase manager 8. Is everyone getting the same answer? 20 and 8. Okay, so main thing is, why is the purchase manager? Purchase manager will purchase from outside, right? Purchase manager will purchase from outside. That means he can be held responsible for the price. I asked him to purchase at 20, but he purchased at 22. That means he can be held for that difference of 2 rupees. Purchase manager is responsible for the price. He can be held responsible for that 2 rupees. But production manager is held responsible for the quantity, right? For the quantity. How much should have been used in this? 3 kg. But how much did he actually use? He used 4 kg. That means using the quantity, consuming a much more quantity is the mistake made by the production manager. He should have done this in 3 kg. Why did he use 4 kg then? He should be held responsible for the quantity. And here comes the concept. Here comes the concept, right? This 28 was the total loss. This 28 was the total loss, right? 28 rupees. So I can say this is adverse fault. Production manager will say, I will be held responsible for the quantity. I will be held responsible for the quantity. How much extra quantity did he use? So you say 3 kg I asked him, but he used actually 4 kg. How much extra did he use? You will say 1 kg extra did he used. 1 kg. That means 1 kg into what was the price? What was the price? He should have used at 20. Now if I say you have incurred at 22, he will say no sir. I accept my mistake. I have used 1 kg extra, but purchasing at 22 was not my decision. It was the decision of the purchase manager, not mine. I will pay only 20. You make me responsible for only this 20, not the 22. And purchase manager will say, I am completely responsible for the price I purchased, not the quantity he used, because my work was to purchase from outside market. Yes, I accept I have purchased it at 22, that means extra, but quantity I haven't purchased, I haven't done. That means 2 rupees was the loss by me, and I purchased 4 kgs into 4, that means 8 rupees is my loss. And from this we can start with standard costing. 28 was the total loss. One was held responsible for the quantity and the other manager was held responsible for the price. This is the core concept of this chapter, right? That means if I make the formula, also, although I'm writing the formula right now, I will suggest that always make the standard table first and then we will go line by line, right? So what is the concept? First is material cost variance. Material cost variance. Focus on the center parts. The word is cost. What is the name of the chapter? Standard costing. As the name indicates, standard costing. Standard always comes first. The name of the chapter is standard costing. The rule is standard always comes first, and whatever is there in the center should come over there. That means it will always be standard minus actual. If it is cost, then you have to write cost. If it is price, you have to write price. If it is quantity, you have to write quantity. Since it is cost, I will say standard cost minus actual cost. Standard cost minus actual cost. Now, if I ask, what is standard cost? Standard cost was 60, right? Standard cost was 60. And what was actual cost? It was nothing but 88. Did I incur 28 loss? Negative indicates a loss, right? Negative indicates a loss. I incurred 28 extra. Now, this cost This 28 is responsible for two parts. First is the price and second is the quantity. Quantity here we say usage because we use quantity over there, right? Quantity we say usage, and therefore here comes the two different variances, that is material price variance and material usage variance. As I said, focus on the center words. Price, focus on the center word. Usage, usage means quantity, right? Standard always comes first, so the rule is standard price minus actual price into something. I don't know what is something, we'll just try to understand. And usage is standard quantity minus actual quantity into something. Obviously, we have to multiply quantity and price, right? We have to multiply quantity and price. Now, here it is price, so obviously I need to multiply quantity. Let's check price. If I say purchase department was held responsible, which quantity did you multiply? Did you multiply 2 or did you multiply, did you multiply 3 or 4? You multiplied by 4. 4 was the actual quantity, right? 4 was the actual quantity, and therefore I'll say here it is actual quantity. Again, how to memorize this? I will also give the technique by the table. And here you use 20, right? Here you use 20. 20 was the standard price, and therefore it is standard price. So this becomes the entire formula for material cost variance. Material cost is, the name indicates, cost, standard cost minus actual cost. Price, standard price minus actual price. Usage, standard quantity minus actual quantity. Standard always comes first. Standard always comes first. Now if you check, standard price was 3, actual price was 4, actual quantity was 4. Sorry. Standard price over here was 20 and 22. So this was minus 2 into 4 is 8 adverse, negative. And standard quantity was 3 kg, actual quantity was 4 kg, and standard price was 20. The answer is 20 adverse. So if you closely watch, this 28 has two parts. First is 8 and the other is 20. So cost is divided into two parts, the price and the usage. The price and the usage. Some of you might feel, sir, you are going very slow on this. We already have learned this formula in our intermediate. I'm just trying to build up the concept and then I'll go with the pace. Okay. Cost is divided into two parts, price and usage. Actually, this quantity can again be divided into two parts. But this can only be done when there is more than one material used. When there is more than one material used. Right? Okay. So this is mix and this is yield. How to calculate, I will surely explain. But before that, I just need to make a few concepts clear. The first one, I said given standard. Given standard. Given standard is 1 unit takes 4 kgs at rupees 10 per kg. Okay. I gave you that 1 unit requires 4 kg at rupees 10 per kg. And I'm giving you the actuals, okay? I'm giving you the actuals. Actually, what happened? I asked you use 4 kg for 1 unit and use it at rupees 10 per kg. Actually, what happened is, 3000 units were made. 3000 units were produced. And raw material was 13,000 kgs at rupees 12, and therefore 13,000 into 12 will give me 1,56,000. Now this data most of the times is given to you. The given standard is given to you, the actuals is always given to you. But the main problem over here is the students are not able to bifurcate. Now please tell me, how much did I ask you? Use 4 kg into 10, that is 40. Will you say now that I asked you only spend only 40, but you spent only 1,56,000, a huge variance? The answer is no. The answer will be a big no. You cannot compare 40 and 156. Why? Because this is for 1 unit and this is for 3,000 units. You have set a standard for 1 unit, right? For 1 unit, you should have spent rupees 40 per kg, 40 per unit, right? How much should you spend on 3,000 then? Obviously, you should spend 1,20,000. 3,000 into 40 will give you 1,20,000. That means you should have spent rupees 1,20,000 and now you have spent rupees 1,56,000. I can clearly say you have spent rupees 36,000 extra. But in no case I can say that I have asked you to spend rupees 40. Why are you spending 1,56,000? This is not the comparison, right? This is not the comparison. The comparison should be with 3,000 units itself. The comparison should be 3,000 units itself and not by 1 unit. And therefore, what we use is a standard table. And standard table is what is required to be made in the first position. Now, what is it? So, I make a given standard. Okay, I make a given standard. Given standard, I write over here. Given standard, I write over here. This is raw material, this is quantity, and this is one unit, and this is price. May it be raw material A example. Use 4 kg of it and use at rupees 40. Use at rupees 40. Now what I do is I make another table for actuals. This data will almost be given each and every time. Okay. What actually happened? Please tell me. What actually happened? Actually, 3,000 units were made, right? 3,000 units were made, and this was quantity, this was price, and this was rupees. How much was used? 13,000 kgs were used. At what price? At 12 rupees. What was the total cost? 1,56,000. This was actual. But this is not important. This is the given data which I have copied pasted, right? The important point is the center table. Now the rule is standard comparable. Actuals is given, but from where to compare? I cannot compare 1 unit with 3,000 unit. So I need to compare 3,000 with 3,000. That means you have spent rupees 1,56,000 for 3,000, but how much should have been spent actually as per my standards? So what I do is I take 3,000 over here also. 3,000 units. What is the standard comparable? Actuals is what is done, and standard comparable is what should have been done. Kitna hona chahiye? So it is 3,000 into 4. 3,000 into 4. How much is the quantity? How much is the quantity? That means you should have used 12,000 kgs. Exactly how it came? So I'll ask you. 1 kg you should have used 1 unit you should have used 4 kg. For 3,000 units, how many kgs? So it goes something like this. Cross multiply, which is 3,000 into 4. You should have used 12,000, and the standard price which I gave you was 40. Standard price I gave you was 40. That means you should have spent rupees. Sorry. Standard price is 10. I'm so sorry. 10. That means you should have spent rupees 1,20,000. Right? You should have spent rupees 1,20,000. Now comes the rule. Everything is added in this comparative table, right? Once you make this now, this is very important. Once you make this, everything is done. And how to make this table also I'll show you when there is more than one quantity. Okay. Now the difference of this is the cost. I'll start with material cost variance. Material cost variance. It is standard cost minus actual cost. It is 1,20,000 minus 1,56,000. That means negative 36. You have spent rupees 36,000 extra, which can be clearly seen. 36,000 is the cost variance. I asked you to complete the entire work in 120, but you actually spent 156. That means 36,000 extra you have paid for. This should be divided into 2 parts. First is the price variance, and second is the usage variance. Material price and material usage. As the name indicates, price. It is standard price minus actual price into actual quantity. And usage, it indicates quantity, standard quantity minus actual quantity into standard price. Again, if you forget this, look, the main thing is price. So the difference of price. Standard always comes first is the key point. Standard price minus actual price. Usage, the quantity. Standard quantity minus actual quantity. Now, if you forget which price or which quantity you use, the rule is go like this. A small d, go like this. What is it? What is it? I'll start with price, right? I'll start with price. So I'll just mark the price over there. I'll just mark the price over there like this. This is the price and this is the price. I'll go like this and come back. Price से start किया, quantity पे land किया. I started with price and I landed at quantity. That's 10 minus 12 into 13,000. I again repeat. If it is price, go with the price. It is standard price minus actual price and come back to it. There is 13,000. That is actual quantity. And therefore, the answer is 10 minus 12 into 13,000. This will give you 26,000 adverse. Negative answer, right? 10 minus 12 is negative 2 into 13,000 will give me 26 adverse. Now, without even calculating, I know the answer for the third one. Why? Because this is 36,000, this is 26,000. The other has to be 10,000 adverse because this is a combination of both of them. This is a combination of both of them. The other has to be 10. If it is not 10, then you have made a mistake. It has to be 10. Let's go with the formula. Standard quantity minus actual quantity. As the name indicates, usage. Usage means quantity you are using. You will start with standard. Again the same rule. Go like this and come back. How is it? I'll just mark the points. Just look at the arrows. This is standard quantity. This is standard quantity. This is actual quantity. I'll go with quantity to quantity and end at price. I'll go quantity to quantity and end at price. The price you are looking for is the standard price, right? And therefore the answer will be 12,000 minus 13,000 into 10. The answer will be 12,000 minus 13,000 into 10. If you closely check, you will get 10,000 negative figure. And I hope with this table, you are easily able to understand. The point was, actuals is, if I say in Hindi, actuals is, actual mein kya hua? Actual mein kya hua? That is what actually happened. Standard comparative is, actual mein kya hona chahiye tha? What should have been done? What should have been happened? वहां पे 120 में exactly क्या होना चाहिए था? और अभी क्या हुआ exactly? The difference is the variance. The difference is the variance. So difference is of price and the difference is of quantity. I hope the point is very clear how to use the table. Once this table is set, every value can be easily calculated. Now coming to the key points. Coming to the key points. Please make sure this is always the input. I repeat again. This is always the input because we input the raw material and what we get is the finished product. Over here, I write always the output. I always write the output. That means 4 kg was the input, but output was 1 kg. Right? And now, heading ahead, I will now introduce more than one material, that is more than two or three materials. And I will explain you how to calculate all the 5 material balances. Please make sure, stay focused on material because if you know material, labor is automatically done, variable overhead is automatically done, sales variance is automatically done. All of them are done, completely done. Focus on material only. Everything is similar to that one, right? Everything depends upon the table. Every formula you will be able to make. Every formula I am telling, okay? So, I am giving you a standard, okay? I am giving you a standard. This is a given standard. This is a given standard for 5 units. For 5 units, there are 2 types of raw material. There are 2 types of raw material A and raw material B. The quantity to be consumed should be 6 kgs and 4 kgs. The quantity to be consumed is 6 kg and 4 kg, and the price should be 5 and 3, that is total of 10 kg should be consumed. This is the given standard which I asked you, right? This is the given standard. What actually happened? Actuals. 2000 units were made. 2000 units were made and were produced. And raw material A was used 2500 kgs total spent was 14,400 on it. And on B, 2000 kgs were used and total spent was rupees 5,000 on it. That means you totally spent rupees 19,400 by using 4,500 kgs. This is what is given in the question. You have produced 2000 units and the raw material which you used actual basis is 2,500 at 14,400 and 2,000 at 5,000. This is the given, right? Now what you have to do is you have to make it in one table. Please look at the table very carefully. I'm just using it properly. Okay, so if you can see, I have made an empty column at the last. Why is it the last empty column? I'll explain it later, right? I'm just jotting the entire information. Just have a look what I'm using. Okay, what I'm using. I'll just copy this. Okay. So, what is the given standard? What is the given standard? To produce 5 units, as I said, the upper part considers output, not the input. What is the raw material used? Raw material A and B are used. What is the quantity to be used? The quantity is 6 kg and the quantity is 4 kg. Total of 10 kgs should be used. Right? And what is the price? The price is set to be 5 and 3. Right? The price is set to be 5 and 3. Actual data is already given to you. The actual data is already given to you. Again, as I said, actuals mein, on the above line, you have to write 2000 units. The output, 2000 units. Quantity, price and rupees. The quantity is individually given to you. It's 2500 and 2000, 14,400 and 5,000. This is individually given to you, giving me a total of 4,500 and 19,400. Now, this is what was given actually in the question, right? This is what was given actually in the question. Now, pay attention. First of all, I will use these two rates, okay? I need these two rates. Can you please calculate these two rates for me? Obviously, the rate is 14,400 divided by 2,500. That means 5.76. Is it 4,400? Right. And 5,000 divided by 2,000 will give me 2.5. Right, will give me 2.5. This is the answer. And now, what I have to do is I have to make a standard comparable. I have to make a standard comparable. How will I make this? So please make sure whatever you are writing over here should come over here. And this is known as standard comparable. Standard comparable. How to calculate this standard comparable? For 2000 units, how much material should have been used? What you have used is actual. How much should have been used is standard comparable. Now, how to calculate this? Please have a look. I asked you for 5 units. For 5 units, how much A should be used? 6 kgs. So for 2000 units, how much should be used? So obviously you will cross multiply and give an answer. You will say, sir, I will make it 2000 into 6 divided by 5, right? You will say it like this, right? What I am telling is, do something like this. Just pay at the arrows, attention at the arrows. It is 2000 divided by 5 into 6. 2000 divided by 5 into 6. You have done the same thing. See, 2000 divided by into 6 divided by 5. I am asking you to divide first and then multiply. It's one and the same thing. एक यूनिट के लिए या फिर 5 यूनिट्स के लिए 6 किलो लगना चाहिए था, तो 2000 के लिए कितना लगना चाहिए? That is, if you are spending, if you are using 6 kgs for 5 units, how much you should spend on 2000 kgs? So obviously, this is the quantity. It's 2000 divided by 5 into 6. So if you say 2000 divided by 5 into 6, you should have used 2400 kgs. Right? And B, similarly for B, just look at the arrow, what I am doing. It's 2000 divided by 5 into 4. 2000 divided by 5 into 4. So 2000 divided by 5 into 4 will give me 1600. You should have used 1600 kgs of that. And in total, you should have used 4000. In total, you should have used 4000 is the criteria, is the standard comparison. Copy the price from the left hand side at 5 and 3. That means you should have used 2400 of A and 1600 of B in order to make this 2000 units and multiply by the answer. This should have been 12,000 and this should be 4,800. That means you should have used the total material of 16,800, but actually you used for 19,400. This is the answer. And this we always take the actual production. या फिर actual output you can say. The below ratio is input and the above we say output. Now once this table is set, everything is hidden in this table itself. Just follow the concept, huh? Just follow the rules. It is only this D. Go like this and come back. Go price to price, come back to quantity, or go by quantity to quantity, come by per price. Now you can clearly see what is cost. Cost compares the final amounts, that is this. What is the cost variance? 16,800 minus 19,400, as the name indicates, standard cost variance. I'll just write over here, okay. Material cost variance. Material cost variance, it is standard cost minus actual cost. Standard cost minus actual cost. Now, I can take it in totality also, 16,800 minus 19,400, or else I can go with individuals also, like for A and B. Cost and cost. Cost and cost. If I go with A and B, what is the standard cost for A? 12,000. What is the actual cost of A? 14,400. That means 2,400 adverse is it's the answer for A. And for B, 4,800 should have been done, but actually spent 5,000, and therefore 200 extra is for this one. That means total of 2,600 extra you paid. Total of 2,600 extra you paid. Now if you closely watch, 16,800 minus 19,400 is exactly, Inca difference is 2,600. Right? The cost difference. Okay. I'll go with another difference. Now, this is divided into two parts. As I said, this is divided into two parts. What are the two parts? First is price and second is usage. As the name indicates price, material price variance. Standard price minus actual price, the difference of prices. As the name indicates usage, the difference is of quantity, it is standard quantity minus actual quantity. Into actual quantity and into standard price. The formula is with you. A. If I ask you the price, again, just go on the table and compare only the prices. If I am asking the price variance, compare the prices, that is the difference of price, like this and this. We go like this and come back over here. So what is the answer? 5 minus 5.76 into 2,500. 5 minus 5.76 into 2,500. So I'll go with like this. 5 minus 5.76 into 2,500. And for B, just check. Same rule. The same D I'm copying each and everywhere. It's 3 and 2.5. 3 minus 2.5 into 2000. 3 minus 2.5 into 2000. At first instance, you might find, sir, yeah, this is a bit difficult, but believe me, this is the easiest method to understand standard costing. Price and quantity difference और कुछ भी नहीं है. Multiply it. Yes, 5 minus 5.76, the answer is negative, into 2,500. This will give you 1,900 adverse. Negative आ रहा है, that means adverse. And if it is positive, 3 minus 2.5 into 2000, this is 1000 favorable. The answer is positive. Negative into negative and positive, the answer is 900 adverse. The answer is 900 adverse. Now, if I closely watch, above answer is 2600 and the below answer is 900. That means this should be divided into two parts. This should have been 1700 adverse because 26 should be divided into two parts, 900 and 700. So I know the answer. Usage का answer 700 आना ही है. I want the answer of usage as 700 adverse. Let's check 700 comes or not. Formula for A and for B. I'll take individual. Okay, quantity. The quantity difference. The quantity difference. As the name indicates, quantity. Just go on the quantity column. I'll mark the two quantities. Okay, and it goes something like this and come back. Standard quantity minus actual quantity into standard price. So 2500 minus 2500 into 5. So it goes something like this. 2400 minus 2500 into 5. And similarly, with this 1600 and 2000. 1600 minus 2000 into 3. 1600 minus 2000 into 3. 1600 minus 2000 into 3. Let's multiply it. So this is negative 100, 500 adverse. And this is 4 into 3, 1200 adverse. If you closely watch, it is 1700 adverse, which was my required answer. You can clearly see automatically the amounts get matched, the price variance and the usage variance. Now, since there was more than one material used, this usage is again divided into two subparts. First is the mix, that is material mix variance, and second is the yield. Yield means output. That means, are you wasting the products or not? Material yield variance. Now, how to remember the formula? What is basically mix? So I will say copy paste the same formula above. Copy the same formula. Same, no change. Copy the same formula. I'm using the same formula. It is standard quantity minus actual quantity into standard price. I just copy pasted the formula. The only change in this is I will use R. R is the revised standard quantity. What I have done is I just copy pasted the above formula. Usage was again divided into two parts, mix and yield, and the mix part is the same formula as of usage. The only change in this is instead of standard quantity, I used revised standard quantity. Now, what do you mean by the revised standard quantity? Again, I will go to the table. Everything is in the table itself. The table will need 4 to 5 minutes to complete. Once you are set with the table, everything depends upon the table. Now, what does the table say? What is basically revised standard quantity? I'll just say what is revised standard quantity. What is RSQ? It is total actual quantity in standard mix. What is the word? It is total actual quantity in standard mix. Now, what do you mean by this? RSQ is total actual quantity in standard mix. What is total actual quantity? Just go on the actual column. Look at the total. This is the total. 4500, right? Total actual quantity in standard mix. That means this ratio. This is what is RSQ. Now, what basically does RSQ mean? Listen. This is standard quantity, right? This is standard quantity. That means you should have used 2400 and 1600. But what is mixing? That means you have not used my product. That is, you have actually made the quality as below the par level. I asked you to mix in the ratio of 6:4. By using 4500 kgs, you should have mixed it in the ratio of 6:4. That means if you are using an input, if you are using raw material 4500 kg, you should have mixed in 6:4. Why have you used 2500 and 2000 then? That means you are not using my ratio. What is the standard set by me? You are not at all following what I asked you to do. You have used your brains and you have mixed the product by your way. That is, you have actually exploited the quality of my products. This is mixing. That means how much should you have mixed? आपने क्या मिक्स करना चाहिए था? If you are using 4,500, you should have mixed in the ratio of 6:4. This is mix once. So यहाँ पे RSQ, that is nothing but total actual quantity in standard mix. So you just need to divide 4,500 in 6:4. So 4,500 divided by 10 into 6. That means you should have mixed in 2,700 and 4 is equals to and 1,800. So if at all you are using a quantity of 4,500, you should have used 2,700 of A and 1,800 of B. Why did you use 2,500 and 2,000 then? That means you are not following my mixture, what the standard I have set for you. Actually, you are mixing it as per your way, which should not have been done. That means you have actually changed the mixture. That is the mix which I suggested you. This is RSQ. I again repeat, what is revised standard quantity? It is the total actual quantity in standard mix. I again repeat, total actual quantity in standard mix. Okay. That means you should have used 2,700 and 1,800. Okay. What I'll do is I'll just copy the same amounts from above. I'll copy the same amounts from above. Instead of RSQ, I'll copy the same. There is 2,500. This is 2,000. Into 5 into 3 and revised standard quantity I have already calculated. I have calculated 2,700 and 1,800. Yes, let's calculate this. So this is 200 into 5, 1,000 favorable, positive answer favorable, and 200 into 3, 600 adverse. That means this is giving me a 400 favorable answer. I hope the point is very clear. That means you have used revised standard quantity. You should have mixed in this quantity, right? And now, how to calculate yield? So basically, yield has got two formulas. I repeat, yield has got two formulas. First is on individual basis. Individual basis means all standards. All standards means like how to check the standards. All first values. There is standard quantity into revised standard quantity into standard price. Standard quantity into revised standard quantity into standard price. So what is the rule? For A, formula क्या? It is standard quantity minus revised standard quantity into standard price. All standards. Now, if I don't calculate also, I know the answer. How? This is 700 adverse. This is 400 favorable. That means this has to be 2,100 adverse. 2,100 negative plus 400 positive will give me 700 negative. The 700 adverse should be divided into two parts. First is favorable, the other has to be adverse. That means I already know the answer. That is, the answer should come to 2,100 adverse. The answer should come to 2,100 adverse. Now, how will I calculate? Just copy the values. Okay, the first values. Standard standard quantity is already given to you, A and B. The standard quantity is 2,400. The revised standard quantity is 2,700. Standard quantity is 1,600 and revised standard quantity is 1,800. What I am doing, I am just copy pasting the numbers from above and the side. Standard price is 5. Standard price is 3. Just calculate this. 300 into 5 will give me 1,500 adverse, and 200 into 3, 600 adverse. If you closely watch, it is 2,100 adverse, as I already told you. Now this was on individual basis. Now what exactly yield means? The actual meaning of yield is in totality. The actual meaning of yield is in totality. Means you should go with total, not with individual. If I go directly total, I will get directly answer as 2,100, not individual answers. I don't want for A and B. I directly want the total as 2,100. How to calculate this? Again, the rule is same. It goes something like this. Now, what do you mean by this? Again, yield means output, means quantity. So I'll use the total standard quantity minus total actual quantity. Again, as I said, the standard always comes first. The name is total. Yield means total. So total standard quantity minus total actual quantity into this price. Again, I will go to the table. Just look at the table what values I am taking. I said total. Just 1 second. Yes. This is the total standard quantity minus the total actual quantity into this rate. Into this rate. Now this rate is missing. This rate is known as the average rate. How to calculate average rate? It is simple. 16,800 divided by 4,000. Just calculate 16,800 divided by 4,000. This will give you 4.2. This will give you 4.2 as the average rate. 16,800 divided by 4,000 will give you the average rate as 4.2. Now what I asked you to do is, again, I'll make this T again. I asked you use in totality. So 4,000 standard quantity, 4,500 actual quantity, and into the average rate, that is 4.2. Just check answer आ रहा है क्या? Answer check करता हूं. So it is 4,000 minus 4,500 into average standard rate, standard price, that is 4.2. So यहाँ पे 4,000 minus 4,500 into 4.2 will exactly give me 2,100 adverse, which I already said you can get the answer by totality. Is the point clear to everyone how to use the table? If at all you are not able to understand that table, feel free to ask. I'll explain again and again because this table is very important. 4 types of variances depend completely upon this table. And the rule is very simple. I'm using this T. I'm using this D. Just go like this, come back. That's it. Every formula you will be able to make by yourself. Every formula you'll be able to make by yourself. Please tell me, have you understood the standard table? Yes, UDEP students, please reply quickly so that I can proceed further. Okay, moving ahead. Now, the last point in material. What is the last point in material? I actually took the entire revision of the formulas. I gave you the shortcuts of the formulas, right? What is the last point in material? Yes, Vedanti, everything is ready. Everything is ready. Okay. Just as I said, the last point. The last point is, I'm just making a table over here, right? Okay. The table again. This was the table. Okay. The last thing which you should know about this table, the last thing is, here we write output. Very important. And यहाँ पर जो mixing होता है, this is the raw material, right? This is the raw material, this is the quantity. The quantity is always the input. And input is mixed, not the output. Input is mixed, not the output. We should always mix the input. How to know how to get the mixed? So please pay attention. Please pay attention. Okay. What I'll do is, I'll just open up a sheet and we'll understand the concept on the sheet itself. Okay. Instead of making a question and wasting time in that. Okay. So here's one of the question. Okay, here's one of the question. This is not the sheet which I'm actually going to share with you. This is the question which is there in your sheet which I'll be sharing. Okay. This is the complete sheet. You do not need this entire sheet. I'll be sharing a few questions which are actually important from the exam point of view. Okay. So here, the standard cost of the chemical mixture is 40% of A and 60% of B. 40% of A and 60% of B. And the important point over here is, just one sec. Yeah. A standard loss of 10% in input is expected in the production. What do you mean by this? That means a 10% normal loss is expected, means if you input 100, 10% will be lost. That means the output you will be getting is 90. The output you will be getting is 90. This is the only point which you should understand. Now I'll make a table. Again, making a table, then it will be very easy for you to get the answers if you know the concept now. The cost records for the period showed that 90 kg of A at a cost of 18 per kg you have used, and 110 kg of B at a cost of 130 to 34 per kg. The quantity produced was 182 kg of good product, means final product. So this is what is actual production. This is what is actual production. Now, if we only read the question, we can understand nothing. Jot it on paper, you will get each and every point. What are they telling? So I'll just make the input, make the totals over here. What are they exactly trying to say? So here's the table. I'll again repeat the table for you. Okay. So here's the given standard. Okay. Here's the given standard. They have given us raw material A and B. Quantity they have mixed in 40-60. How did I come to know this? They have given this. See, the standard cost of mixture, first line. The standard cost of mixture is 40% of A and 60% of B. And the price they have given is 20 and 30. This is the given standard, right? This is the given standard. This is price 20 and 30. That means total of 100. Just as I said, here we take input. Here we take input. Is there a standard loss? The answer is yes. There is a standard loss of 10, means the output you are getting is 90 units or 90 kgs, whatever you can say. The output you are getting is of 90 units. If you understand this concept, material is done. If you understand this concept, material is done. That means to mix 100, you should have output of 90. Again, if you closely watch, I did not say 90 to be mixed in 40-60. No. Mixture is always of the input. If input is 100, input ka 40% is A and 60% is B. The mixing is always of the input and not the output is the given standard. So if you can understand this, the entire concept is very easy. Input is what is the down arrow, that is the mixed material, and output is what we actually get, the units, finished product. Now if I compare the actual results with me. Actual, they gave 182 kgs, that is 182 units. This I always take as the actual output. And I'll compare with 182 itself. Are you getting this point? I'll compare with 182 itself. 182 के लिए एक्चुअल इस कितना हुआ, 182 के लिए कितना होना चाहिए था, इज द टू डिफरेंस. एंड उन दोनों के डिफरेंस को ही वेरिएंस बोलता है, राइट? इन दोनों के डिफरेंस को ही वेरिएंस कहा जाता है. सो यहां पे क्वांटिटी इज देयर, प्राइस इज देयर एंड रुपीस इज देयर. क्वांटिटी, प्राइस एंड रुपीस. जस्ट चेक व्हाट हैव दे गिवन. They have given us actual results. Just as I said, they always give you the actual results. They have given you use 90 kg of A and 110 kg of B. Okay, I'll write over there. Quantity you have used is 90 of A and 110 of B. Just 1 second. Yeah. And at what price? You have used at, what the problem is, just give me 1 second. Yes, and you have used at 18 and 34. You have used at 18 and 34. I'll write over here. 18, 34. Just get it multiplied. 90 into 18 is 1620. And 110 into 34 is 3740. Total of 200. Total of 1620 is 5360. Right? They're giving you the axis. Now what I have to do is I just need to make a center table which is known as the standard comparable. From where to compare? This is, yes, thank you, Unnati. Okay, standard comparable. Standard comparable. How to compare? I'll make it only for 182 units. Again, how to make this table I have also stated. Right? You will start with 182 divided by 90 into 40. If the answer in point, then also it is okay, no problem. Just check. It is 182 divided by 90 into 40. If you closely watch, the answer is 80.89, 8888, that means 89. Again, we'll move on to the next part. It is 182 divided by 90 into 60. It is 182 divided by 90 into 60. This will be 121.33. So, what is the total? 202.22. Price you can copy directly. Price you can copy directly, which is 20 and 30. Just get it multiplied. Just get it multiplied while using, please take 80.8888. 80.8888 into 20. This will give me 1617.78 and 121.3333 into 30. This will give me 3640, giving me a total of 5257.78. Right, giving me a total of 5257.78. Now the picture is very, very clear. If I ask you cost difference, make it cost. Just compare the rupees column, standard cost minus actual cost for A also, for B also, right? If I ask you the price variance, if I ask you give me the price variance of A, just look at the prices, go like this, and quantity. It's 20 minus 18 into 90. This is the price variance for A. If I ask you the usage variance, usage means what? Quantity. Usage means what? Quantity. Quantity का difference लेंगे 121 and 110. It goes something like this. It is 121.33 into minus 110 into 30. Direct quantity variance. Directly you can get the answers. Okay. What about the RSQ? The revised standard quantity. How did I teach you? What is revised standard quantity? It is the total actual quantity in standard mix. I repeat, it is the total actual quantity in standard mix. That means you have to find 200 in 40:60. 200 in 40:60, which is nothing but 80 and 120. This is the answer. This is RSQ. Everything you get it now. Everything is in the table. If I directly ask you, give me yield answer. Yield. The name indicates yield. Yield means in totality. In totality. Again, the follow the D. This like this. Yield means in totality. So how to understand in totality? I will take total standard quantity. Unnati, is it not revised actual quantity? We always say standard quantity because we are making it at the standard mix, and therefore we use the words revised standard quantity. Yes, you can name it as revised actual quantity also, but the institute gives the name as revised standard quantity because we are using the actual quantity in standard mix. Okay, 202 minus 200 into this rate. I want the average rate, right? I want the average rate. How to calculate the average rate? It is 5257.78 divided by 202.22. The average rate is 26. The average rate is 26. You can directly calculate the yield one. How to calculate the yield? It is like this. 202 total standard quantity minus total actual quantity in 26. Check. 202.2222 minus 200 into 26. This will give you the answer as 57.78. So everything is in the table itself. Nothing more to follow. Everything is in the table itself. I hope everyone is understanding this concept of the standard table. If you know this table, everything is very, very, very simple. Okay. So this is the simple rule. This is the simple rule, that is getting the material. So in short, I start with material cost variance. Again, as the name indicates, cost, difference of cost. Standard always comes first. Standard cost minus actual cost. This is divided into two parts. First is price and second is usage. Usage means quantity. As the name indicates, price. Standard price minus actual price. Standard always comes first. As the name is usage, quantity. Standard quantity minus actual quantity. Into actual quantity into standard price. Right? We use this way. Again, this usage can be divided into two parts. First is copy paste the formula. Mix. First is copy paste the formula. That means standard quantity minus actual quantity into standard price. But we use the word R over here. What is R? R is the revised standard quantity. And the second is yield. The second is yield. Yield, as I said, you can go in totality, or if you want individuals, take the first values. Standard quantity minus RSQ into standard price. So what is it? It is standard quantity minus revised standard quantity into standard price. This is the answer. This is the answer. Right? So you got what is material variances. Again, I'll say input and output. Don't mix them. If the below part is input, the above part is output. If the below part is input, the above part is output. Okay. Moving ahead. The second type of variance. The second type of variance is labor variance. Labor variances. Now labor variances, again, the exact dicto same rule, since it is variable. Material was also variable, it was per unit. Again, labor is also variable, but the only change in material and labor is, in material, we used quantity and price. In labor, we use hours and rate. That is the only difference. This is the only difference, nothing else. Quantity is replaced by hours because we don't pay labor's quantity, we pay them by hour basis. And price, we don't pay price, we pay rate, the labor rate, that is the hourly rate to them. Not is the hourly price, but the hourly rate. It's one and the same thing, only the name changes. The quantity is shifted to hours, the price is shifted to rate. That is the only change. Now how to find these values, labor variances? Again, if I go with first one, cost, labor cost variance. Right, labor cost variance. I'll again use the formulas जैसे हमने पहले किया था. It is standard cost minus actual cost. Standard cost minus actual cost. Okay. Again, this cost is divided into two parts. Price was replaced by rate, and therefore I'm using rate, labor rate variance. It was initially price, but now it is rate. So I'll use the word rate. Second was usage. Using a labor is not the proper word, right? I'm using a labor. I'm using a quantity is a proper word. That's why we use usage. But here, usage will turn out to be efficiency. Usage will turn out to be efficiency. How efficient is the labor? How much labor we are using is not a proper word. How efficient is the labor is a proper word. And therefore, usage is shifted with efficiency. It is replaced by efficiency, and therefore labor efficiency variance. Again, how to check the efficiency? Obviously, by comparing the hours. Like usage, we use the quantity. Efficiency, we check the hours. This is the only difference. Again, formula, labor rate. As the name is, center one is rate, difference of rate, standard rate minus actual rate. Standard always comes first. Into, it was actual quantity over here, we'll take actual hours over here. Quantity is replaced by hours. Again, efficiency, hours wise compare करेंगे. Standard always comes first, standard hours minus actual hours. Into standard price. Into standard price. Same rule, nothing extra. Again, this can again be divided into two parts, but when can it be divided? Obviously, when there is more than one labor used, like skilled labor, unskilled labor, men, women, and so on, right? Again, labor mix variance, also known as gang variance, mix. Now, labor mix, again, I said you that copy paste the formula. As it is, copy paste करो, कुछ change नहीं करना. Labor mix. Formula क्या था? It was standard hours minus actual hours into standard price. Again, I'll use the word R. What is R? R is the revised standard hours. कैसे निकालना है? How to calculate? I already explained it for earlier. Again, yield, same. You can make it in individual, you can make it in totals. If you are making it individual, use the first values. How to go with it? It is standard hours minus revised standard hours into standard price, standard rate. I hope the point is very clear. Same using. Okay. What is the extra thing in labor then? What is extra? Extra thing is over here. Idle time variance. Idle time variance. Extra is idle time variance. That means sometimes a laborer can sit idle because of my fault. Not normally, but abnormally. For example, laborers are sitting but they don't have the material on time. The material got delayed. Obviously, I need to pay them. Because they are sitting idle. If I say I won't pay, then the laborers will say, sir, this is not our fault. If there is no material, this is not our fault. We have come over here, right? We are sitting in front of you. If you don't have material, this is not our fault. You have to pay. That means this is my loss. This is my loss. And idle time will always be adverse. Always adverse. How to calculate it? It is idle time into standard rate. Idle time into standard rate, right? And efficiency. This hours is actually worked, not paid. This hours is actually worked, not paid. One question and you'll understand the entire concept, what I'm talking about. It is standard hours minus actual hours, but not actual hours because I'm checking the efficiency, okay? Now, if I say you were sitting in front of me for 10 hours, obviously I will pay for 10 hours. But during these 10 hours, the 3 hours, there was no electricity, there was no power. That means you did not work on any machinery. You were sitting idle. This 3 hours is lost. But to compare the efficiency, I will say, how much did you actually work? I paid for 10, right? I paid for 10. But did you work for 10? The answer is no. You worked only for 7 hours. You were working only for 7 hours. That means I should check your efficiency on 7 hours and not on 10 hours. Because it wasn't your fault that you were sitting idle. This was my fault. There was no power. I should have backed up with inverters, right? If there was no material, I should have provided the material to you on time. You were sitting idle. It was my fault, not your fault. But to check your efficiency, I will say actual hours worked. Right? Let's understand this concept with the help of one example. Just give me 1 second. It got hanged. Okay. Just refer question 17. Okay. I'll explain you the entire concept. If you understand this concept, again, the labor is done. इतना ही labor में ज़्यादा कुछ नहीं. NPS Limited has standard costing system for manufacturing of its product X. Following is the budget data in relation to labor hours for manufactured 1 unit of product. That means, can I say the given standard? The given standard for producing 1 unit, skilled labor should be used for 2 hours. Semi-skilled should work for 3 hours, and unskilled should work for 5 hours. This is the given. That means to produce 1 unit, you should work for 10 hours, 2 hours skilled, 3 hours semi-skilled, and 5 hours unskilled. And the labor rate you are paying is 6 per hour, 4 per hour, and 3 per hour. So can I say this table is the given standard for us? This table is the given standard for us. Okay. In the month of January, total 10,000 units were produced. Can I say produce means actual output? Produce means actual output, which we use in the first line. Okay, moving ahead. Were produced following other details. Skilled 18,726. Can I say this is the actual data they have provided us, the table which we used to make? They have already readily given to us. Ours is given, rate is given, amount is given. In fact, the totals are also given. What more we can ask for from the question? Everything is given in the question itself. Everything is given in the question itself. Okay, moving ahead. Moving ahead. So this is actual data, right? This is actual data. And now, actual idle hours abnormal during the month. Not normal, but abnormal. Skilled 500. That means, if you closely watch, skilled was 18,000 above, but 500 he was actually idle. 500 was idle, that means he was not working. Can you please tell me how much did he actually work? Actual work was 17,500, right? Because although he was present in front of me for 18,000 hours, 500 hours he was idle. That means he actually worked for 17,500. Efficiency should be compared on this 17,500 and not on 18,000. Next, 33,000. 33,000 and 700. So 700 he was idle. That means he actually worked for 32,300. And again 58,000 and 800. That means he actually worked for 57,200. That means the total time is 1,07,000. Total time is 1,07,000, which they actually work. Now what we have to do is we just have to make this data into our standard table. Once the standard table is done, every formula which will be compared with that standard form table. Now how to make the table? I have changed a bit of this table. Just have a look at this table. Just give me 1 second. Okay, I'll just add up 2 more columns to this. Okay, I'll just add up 2 more columns to this. That will be more beneficial to you. And what are these 2 columns? I'll just explain further. First of all, I'll just make the given data, given standard. Given standard is for 1 unit. If it will be given for 2 units, I'll get 2 over there. The given standard. I'll just copy paste from that. Labors are skilled, semi-skilled, and unskilled. Hours to be used is 2, 3, 5. Rate is given as 6, 4, and 3. Right? This is the given standard tools. Okay, moving ahead. Total was 10,000 units. I'll move to the actual data now. Actual. It was 10,000 units. Actual was 10,000 units. And hours, rate, and rupees is entirely given to you. You don't need to calculate the total also. Everything is to be copied. 18,726. Okay, I'll write over there. 18,007 and 126. Next, 33,000, 3.5, 115, 500. 33,000, 3.5, 115, 500. Next, 58, 4 and 232. 58, 4 and 232. In fact, the totals are also given. The totals are 109 and 473 500. 109 and 473 500. Right? This is the actual data given. Okay. Now what my concept is, I will make this table. Okay. This is known as standard comparable. This is known as standard comparable. That means for 10,000 units, how much labor hours must have been required? Again, using the same rules, hours, rate and rupees. Since it is 1, you can directly say 10,000 divided by 1 into 2. Divided by 1 into 2 will give me 20,000. Similarly, divided by 1 into 3 will give me 30,000. And divided by 1 into 5 will give me 50,000. That means a total of 1 lakh hours must have been used. Rate, copy karo bazu se 6, 4 and 3. Just multiply 120, 120 and 150. Total of 240, 390. Total of 390. Right? A total of 390. Now, if you closely watch, work has been done. Most of the work has been done. If I ask you, give me the cost variance. Cost. As the name indicates cost, you will say 390 minus 473 500 in totality. If I ask you individually, just 1 second. थोड़ा सा ऊपर नीचे हो गया ये. Okay. If I ask you individually, you will say, sir, not a big issue. I will just compare individually. If the answer is positive, it is favorable. If the answer is negative, it is adverse. Right? It is adverse. Okay, fine. This is the first one. Second is rate variance. The answer is rate. Rate कैसे compare करेंगे? Rate. It is rate 6, rate 7. Again the same procedure. 6 minus 7 into 18,000. Again इसका rate करना है तो 3 and 4. 3 minus 4 into 58,000. Same thing. Everything is the same. The rate variance. Okay. The rate variance. But what I am doing is I am adding a column which is known as idle time. Which is known as idle time. Is it given? Yes, idle time is given. 500, 700 and 800. 500, 700 and 800. So I'm adding actual hours worked. Actually, how much did you work? Actually, presently, efficiently. 18,000 I asked you, but 500 you were sitting idle. That means you just worked for 17,500 hours. Right? You worked for 17,500 hours. Again, I asked you for 33,000. I asked you for 33,000, but 700 you were sitting idle. That means you actually worked for 32,300. And similarly, 57,200. That means you actually worked for 1,07,000 hours only. Right? You actually worked for 1,07,000 hours only. This is the table. Idle time I have also added. Actually, you would have made another table also, but I have added in continuation itself. Easy to understand, right? Okay. Let's start with cost variance. Let's start with cost variance. Okay. Labor cost variance. You can go with individual ABC also, that is semi-skilled, skilled. I am going with the totals directly. Totals is 390 and 473 500. 390 minus 473 500 will give me extra of 83,500 adverse. Right? 83,500 as adverse. Check. Is it adverse? 390 minus 473,500 adverse. Perfect. 83,500 adverse. This is divided into two parts, right? This is basically divided into two parts. First is the rate and second is the efficiency. First is the rate and second is the efficiency. The rate, as the name indicates, standard rate minus actual rate. If in case you forget, just remember this D. We have to go back. We have to go back means it is 6, 7 like this. So it is 18,000. 18,000 means actual hours. You know the formula now, actual hours. Right? You know this. I don't want to teach this. I want to teach this. Idle. Do you have the idle time? Yes. Idle time variance is idle time into standard rate. for A, for B, for C. Idle time. Idle time is 500, 700, 800. The rate which they have given standard rate is 643. Right? Whatever the multiplication is. Important point is here. Efficiency. Efficiency means hours, right? Efficiency means hours. As the name indicates, standard hours minus actual hours into standard rate. This is the formula. Standard hours minus actual hours into standard rate. Like this. Right? But now if you closely watch. I want hours, right? I want hours. So I should go like this. 20,000 minus 18,000 into 6. I should go like this. But I won't use 18,000 because I am checking the efficiency. That means over here will be hours worked. I'm checking the efficiency, right? You were present in front of me for 18,000, but did you actually work for 18,000? The answer is no. You were actually working only for 7,500. Then why to compare with 18,000? And therefore, it is a big D over here. It goes something like this. It is 20,000. Instead of 18, go for 7,500 and come back. A longer D. Actually, I would have stopped with 18,000. But since I'm checking the efficiency, it should be actual hours worked and not paid. Although I paid for 18,000. You were sitting idle, that's my fault. But efficiently, you worked only for 7,500. I will check only for 7,500 and not for 18,000. I hope the point is clear. Now, the last one is RSH. RSH. जैसे मैंने आपको बताया था, I told you, it is total actual in standard mix. What is RSH? It is total actual hours in standard mix. But which one? Is it 1,09,000 or is it 1,07,000? So the answer is worked, not the paid. So it is 1,07,000 in standard mix in 2:3:5. 1,07,000 in 2:3:5. This is the rule. So this is 1,07,000 in 2:3:5. Let's say 1,07,000 divided by 10 into 2 is equals to, so it comes to 21,400. 3 is equals to, it comes to 32,100, and 5 is equals to, it comes to 53,500. Total of 107. Total of 107. इस तरह हम करते हैं. Like this, we solve each and every question. If you closely watch, there is no difference between material and labor. The only change was idle time. This is the only change. I just increased my table with 2 more columns just for our understanding. If you don't do this, then also it is okay. You can write directly. But this is the pure table. This is pure table. Everything is dependent on this table. Right? Everything is dependent on this table. Okay. So I hope this point is very clear now. Next. Next is variable overheads. Variable overheads. As the name indicates, it is variable. As the name indicates, it is variable. Yes, it is variable. It has to be variable. Now, how to check the variable cost? How to check the variable cost variances? The example. First is variable overhead cost variance. As the name indicates, the difference is cost. So it is always standard cost minus actual cost. Again, this is divided into 2 parts. In material, we used to use the price. In labor, we used to say rate. In variable, we say expenditure. In variable, we say expenditure. And expenditure means the difference of the rate. कितना आप रेट में फर्क कर रहे हो, right? And here it is efficiency. Here it is efficiency. Again, it is hours. So in short, everything is the same table. Everything is same table. Nothing is changed. Nothing means nothing. Same as of labor. The same thing which you used to go for labor, it is the same thing for variable overheads also. For example, for 10,000 units, this was standard, okay, budgeted or standard, 10,000 units, the variable overheads were 5 lakh. For 10,000 units, The variable overheads was 5 lakh. Actually, what happened? Actual units were 12,000 and actual overheads went up to 6,50,000. Went up to 6,50,000. Okay. My simple, very basic question to you is, if you know absorption, that is in your intermediate absorption costing overheads, is this the case of under absorption or is this the case of over absorption? If it is under or over absorption, then by how much? I need the rate. I need the answer. Under absorption or over absorption, and how much? इंटरमीडिएट का कुछ याद है या नहीं, चेक करना था मुझे. अंडर एब्जॉर्प्शन 50K. ओके, यस. अदर्स कुछ और आंसर आ रहा है बेटे किसी का, या ये भी नहीं आ रहा है? ओके, सो बेसिकली जो वेरिएंसेस रहता है, the variances, these are actually under and over absorption itself, nothing more than that, nothing more than that. Okay, so basically जो cost variance है over here, it is under or over absorption itself. How do we check? So in your intermediate, okay, one is telling under and one is telling over. Fine, I'll just check what exactly is this. So what we say over here is the budgeted rate. Budgeted rate. We also said recovery rate, absorption rate, overhead charge, या overhead recover. How to calculate is 5 lakh divided by 10,000. It's the budgeted overheads divided by budgeted base. Since it is units, I took units. It can be in K. The base can be anything. It can be machine hours, it can be labor hours, it can be units also, it can be prime cost also, anything. Since units was given, I will say it is 5 per unit. Okay. Sorry, 50 per unit. I'm so sorry. 50 per unit. Right. The budgeted rate is 50 per unit. That means this is the recovery rate. Recovery rate. Now, what do you mean by recovery rate exactly? This is an expense which we have already considered that yes, this expense has to be incurred. This expense is already charged to the product. We also say this is the overheads charged, overheads recovered, or overheads absorbed. We have absorbed or charged it at rupees 50. That means 50 per unit has to be the expense, confirm. Right? 50 per unit has to be the expense. For 12,000 units, what would have been the expense? For 12,000 units, what have been the expense? It would have been 6 lakh. This is known as recovered. This is known as overheads recovered. This much have been recovered. That means is the standard cost, standard variable, standard cost for variances, 6 lakh. But actually you incurred 650. Actually you incurred 650, and this 50,000 you have paid extra. That means you have recovered it under. You have recovered only 6 lakh, but actually it is 650, and therefore it is nothing but a loss, and the loss is known as under absorption. Under absorption is nothing but the loss for the company. In short, adverse. In short, adverse. So this is basically under absorption. This is the case of under absorption, and this under absorption itself is known as the cost variance. Under absorption itself is known to be the cost variance. Now, how to make it in the same table? Although if I give you the answer like this only, cost variance is this itself. Under or over absorption is the cost variance. Under absorption is adverse, over absorption is favorable. Right? Now, how to go with the standard? How to make it in this table itself? So again, the given standard. The given standard. Right? Given standard was for 10,000 units. Given standard was for 10,000 units, and I don't know how many hours, I don't know how many rate, but yes, variance, that is rupees में उन्होंने आंसर 5 लाख दिया था. Rupees they gave you 5 lakh for 10,000 units, right? That means unit rate was 50. This is known as the recovery rate. This is known as the recovery rate. Given standard. I'll go with actuals. I'll go with actuals. Actually, we write over here 12,000. Right? Making the comparison of 12,000 itself. Rupees, it was given 650, and rate will use 650 divided by 12,000. It is 54.166666. Right? 54.166 is the rate. This is actuals. As I said, we always take the actuals over here. Standard comparable, we always compare for 12,000. So for 12,000, how much should have been done? So obviously, it is 12,000 divided by 10 into 10 will give me 12,000 as hours. Rate is 50 and rupees is 6 lakh. This is the table. Now you know everything. Now you know clearly everything. 6 lakh minus 650 is the cost variance. 6 lakh minus 650 is the cost variance, which comes to, cost variance should come to 50,000 adverse. Right? This is because of two parts. First is expenditure. Expenditure means rate ka difference of rate, and the next is efficiency. Efficiency means hours difference. Let's say you can also take units also. Efficiency can also be compared by units. I've considered 1 unit as 1 hour. Okay. Expenditure, as the name it is, standard rate minus actual rate into actual hours. You can also say actual units. Efficiency is always on hours. Standard hours minus actual hours into standard rate. Same procedure. Okay. Let's go with the same D. The D we used to make. Rate 54 minus 12,000. So it is 50 minus 54.166666 into 12,000. And standard hours. Again, the next one will be standard hours, actual hours. 50 minus 54.166666 into 12,000. This will give you the exact answer as 50,000 adverse. So obviously, this has to be 0. Because 50,000 into 2 parts, efficiency is 0 in this case. Since I have taken as 1 unit as 1 hour, and therefore efficiency will become 0. So if you cross check also, 12,000 minus 12,000 into 50, 12,000 minus 12,000 is 0. Into 50 will give you the answer as 0. So this is done. This is completely done. I hope the point is clear. How to check? So basically cost is under or over absorption. Cost is under or over absorption. Right? Okay. I know fixed overhead is pending. Fixed overhead is pending. But I will shift to sales variance first. Why is the reason? Because similar table. It is similar table. Okay. I'll give you one example first for sales variances. I'll give you one example for sales variances. Okay. Now what do you mean by sales variance over here? I asked you the standard one. I asked you to sell 8,000 units at a selling price of rupees 40, that means my total sale would have been 3,20,000. Okay. This is on the first day. The sales manager came into me and I asked him, you have to sell 8,000 units during the entire period at rupees 40. That means the sales value should be 3,20,000. Actually, something another happened. The quantity was sold as 10,000. 10,000 units was sold and at a price of rupees 35 and rupees 3,50,000. Again, everything is same. Everything, okay. Standard. What was the standard? I asked you to sell 8,000 units at rupees 40 on the very first day. But actually what happened is you sold 10,000 units, extra units, but you reduced the price to 35 and the sales value was 3,50,000. Right? The only thing in sales and cost is, I will not change any rule, okay? I will not change any rule. Standard always comes first. The only thing in sales is, here negative means favorable and positive means adverse. Reverse. Cost and sales are opposites of each other, right? Negative means favorable, but positive means adverse for the simple reason. I'll explain you how. What is the sales value? I asked you sales value. Sales value. Sales value one answer. I asked you my total sales should have been 3,20,000, but actually it happened to be 350. Is it favorable for you? Sales are more, right? Is it favorable? Well, the answer is yes. I asked you to make a sale of 320 in totality, but you made a total sale of 350. Obviously, that is favorable for me. And therefore, it is nothing but standard minus actual. Standard sales value minus actual sales value. It is 320 minus 350. And I'm getting a negative answer, but I will still say 30,000 is favorable for me. 30,000 is favorable for me for the simple reason I asked you 320, but you gave me a sale of 350. That means it is favorable for me. Okay, moving ahead. Second point. Now, obviously, 2 points are depend on that. The first is the price, and second is quantity. Quantity over here is referred to as volume. Quantity over here is referred to as volume. Quantity over here is referred to as volume. So now, sales value variance is 30,000. As the name indicates, price. The full form is sales price variance. Again, same table. Again, same D's. Everything is same. Please tell me, how do I calculate it? The formula. It is standard price minus actual price. Price is there. Stand always comes first into actual quantity. The same formula I use for material, the same formula I use for labor, the same formula I use for variable overheads, the same formula I'm using for sales price also. Okay, what is the standard price? I'll go up over there. I'll just compare the prices, price and 10,000. Price and 10,000, that is 40 minus 35 into 10,000 comes to 50,000. Positive figure, but I will say this is not at all favorable for me. This is adverse. Why? For a simple reason, just understand the concept. How much did I ask you to sell at 40? Then why did you sell at 35? Obviously, it is a loss for me, right? I asked you to sell at 40. Why are you selling at 35 then? You have incurred a loss of 5 rupees per unit. Is my loss, right? Is my loss. Obviously, the answer is positive, but I will write adverse because this is not at all adverse, not all favorable for me. I asked you to sell at 40. Why are you selling at 35 then? That means there is a mistake of 5 rupees per unit. You sold 10,000, 50,000, you incurred a loss. Okay. As the name indicates, volume. Sales volume variance. Volume means output, the quantity, right? Volume means what? The output, the quantity. As the name is quantity, the difference will be standard quantity minus actual quantity into standard price. Again, the same thing. We'll go up. We'll take the quantity, okay, we'll just take the quantity. 8,000, 10,000, like this and go back. 8,000 minus 10,000 into 40. 8,000 minus 10,000 into 40. Now if you say, sir, यहाँ पे 2,000 negative आ रहा है, 2,000 into 40. 80,000 negative आ रहा है, 80,000 negative comes, right? But negative is actually favorable for me. How come? How come? Just look at the logic. How much did I ask you to sell? 8,000. But how much did you actually sell? 10,000. This is obviously a good news for me, right? I asked you to sell only 8,000, but actually you are selling 10,000, which is actually more than what I actually expected from you. That means 2,000 units you have sold extra, which is actually favorable for me. Just cross check. 30,000 favorable is divided into two parts, 50 adverse and 80 favorable. 80 plus में है और 50 is minus. Total net figure is 30 favorable, which is the answer. Which is the answer. That means I am again and again using the same table each and every time I am getting the variable cost. Sales obviously depends upon the units, variable. Direct material variable, direct labor variable, variable overheads variable. Only the fixed overhead is remaining. Rest everything depends upon the same table, and how to compare, how to remember the formulas is to understand the center meaning. Right? Is to understand the center meaning. We'll just sum up quickly. हमने अब तक क्या क्या पढ़ा? What have we studied till now? So material. What are the variances we use in material? We use cost variance. Cost is divided into two parts, is price and usage. Usage is quantity, right? Usage is quantity. Usage is again divided into two parts, mix and yield. Simple. Labor, only the name changed. Concept does not change, only the name changed. Labor cost, yes, cost is difference. Price we don't use price. What do we use? We use rate. Usage we don't use, we use efficiency. Mix, same as it is. Yield, same as it is. How to remember the formulas? I gave you the shortcut. Okay. Variable overheads. First is again the cost. We don't say price, we don't say rate, we say expenditure. And efficiency. No more further answers. And sales. We don't say cost, we say value. Expenditure we don't say, we say price. And efficiency we don't say, we say volume. Again, the data is reversible over from here. The data is reversed, that is the negative. If you get the negative answer, it is favorable. If you get a positive answer, the answer is adverse. Right? This is the logic. This is the entire logic we have learned about this. Right? Only one overhead is remaining, and that is fixed overhead. I'll explain you, but before that, I want to explain you the reconciliation statement. Why reconciliation statement? Because that is the only new part. You understand all this, right? Every material, every labor variable, everything you got the point. But now I want you to give the concept of the reconciliation. What is exactly reconciliation? Right? What do you mean by to reconcile? Reconcile means to just to cross check. मेरा इतना आया, आपका कितना आया? How much did I ask and how much actually happened? The difference is nothing but reconciliation. We just need to note down the reasons why my balance is not getting tallied. Right? Why my balance is not getting tallied. So exactly what happens is on the very first day, what I thought of, just understand the concept. What I thought of on the very first day. On the very first day, I set a standard that I need to earn a profit of 1 lakh rupees in this year. On the very first day, I gave you the logic that I want to earn rupees 1 lakh in this complete year. Obviously, how will I earn profit? I need to sell something and I need to purchase something. This profit will completely depend upon the sales and the cost. So I set a standard for sales and I set a standard for cost also on the very first day, right? So in that case, I asked you that the total sales in this year should be 8 lakh, and the total cost should in this year should be 7 lakh, and 8 lakh sales minus cost will give me the profit as 1 lakh. This was the budget on the very first day. Then I divided my budget of the cost in four different parts. Four different parts on the very first day. Okay. Material, labor, variable overheads, and fixed overhead. I asked you to use material of 3 lakh. I'll use zeros over here. I asked you to use the material of 3 lakh. I asked you to use the labor for 2 lakh, that is to pay labors 2 lakh. Variable overhead 50,000 and fixed overhead 1,50,000. Check whether it is 7 lakh. The answer is yes. So this was the standard set by me on the very first day, right? That you have to make a sales of 8 lakh during this year and you should incur a cost of 7 lakh. How 7 lakh? You should use material of 3 lakh, you should pay labors 2 lakh, variable overheads 50,000 and you should pay for fixed overheads as 1,50,000. Totally you have to spend 7 lakhs, and by spending 7 lakh and by selling at 8 lakh, you will earn a profit of 1 lakh rupees. Now, actual data obviously will differ. Actual data will obviously differ. Actually, what happened is I earned a profit of only 80,000. I earned a profit of only 80,000. Why is this so? Obviously, whatever I thought of doesn't seem to have happened. ऐसा हुआ नहीं exactly. What happened exactly? The sales, it went up to 9 lakh. The sales got rose and it went up to 9 lakh. I thought of 8 lakh, but I actually went 9 lakh. But the sales also increased and the cost also increased. The cost went up by 8,20,000. The cost went up by 8,20,000. And then I further checked where was the mistake. So material was used for rupees 4 lakh. I paid the labor rupees 2,30,000. Variable overheads were 80,000. I'll just check the totals. 230 plus 80 plus 4 lakh plus 1 lakh. And fixed overhead was 1,10,000. Actually, this happened, right? Actually, what I thought of and what actually happened is the data in front of you. Now, I want to reconcile. What do we reconcile? We always reconcile the profits. What I thought of and what actually happened. I need to reconcile. What are the reasons of difference? Reconciliation means only the point of difference is what went wrong actually. What went wrong actually. So how to reconcile? I'll just give you the shortcut idea. You have to start with standard profit. Add all the favorable points and subtract all the adverse points. And you will land at actual profit. Is the rule. Start with standard profit. Add all the favorable points. Subtract all the actual points and you will end at the actual profit. Right? Okay. Let's see how it goes. I asked you to make a standard profit. To start with standard profit. Okay. What is the standard profit you were looking for? I was looking for 1 lakh rupees. I was looking for 1 lakh. Let's check. Sales variance. Compare the sales value. Compare the sales value. I asked you to sell 8 lakh. But you actually made a sale of 9 lakh. Is it favorable for me? Well, the answer is yes. I asked you to sell 8 lakh, but you actually sold 9 lakh. Is it favorable for me? Yes, the answer is favorable. And therefore, add sales variance. Favorable, right? Favorable, so add 1 lakh. Obviously, it was favorable and that's why I added it. Okay, fine. What went wrong with material? I asked you to use a material of 3 lakh, but actually you used 4 lakh. Is it favorable or is it adverse? You will say, sir, definitely it is adverse because we were asked to use 3 lakh rupees material. We used actually 4 lakh rupees material. Is it 1 lakh rupees material variance? Yes, subtract it. Adverse, less material variance. 1 lakh adverse, subtract it. Okay, go for labor. How much did I use for labor? I asked you to use 2 lakh, but actually you used 230. Did you use 30,000 extra? The answer is yes, and therefore 30,000 is still adverse. Less labor variance. Less labor variance. How much? 30,000. Okay, fine. 30,000. Okay. Next. Variable. I asked you to spend 50,000, but you actually spent rupees 80,000. I asked you to spend rupees 50,000, but you spent actually 80,000. 30,000 is extra paid by you. That means again adverse. Variable overhead adverse. 30,000 again. 30,000 again. And lastly, I asked you to spend 1,50,000, 1,50,000 on fixed overhead, but you actually spent only 1,10,000 on that. Is it favorable for me? Well, the answer is yes. I asked you to spend 150, but you spent only 110. Is it favorable? The answer is yes. So if it is favorable, add back. Add fixed overhead. Favorable 40,000, and you will land at actual profit. You will land at actual profit, which is 80,000. You can cross check. You can cross check. 1 lakh, 1 lakh nullifies. 60 and 40. Yes, you are getting the 80,000, and this is known as the statement of reconciliation. Is the point clear to everyone? The concept of reconciliation? Yes, please let me know. Okay. So the concept is clear. Now, how to present it exactly. Sales variance, I asked you, it is divided into three parts. It is divided into three parts. First is the value. The second is the price, and the third is the volume, right? Value is the total 1 lakh. But how to write is this 1 lakh favorable, it may be 20,000 because of price and 80,000 because of volume. So you need to write over here sales variance underline, price variance and volume variance. Maybe price is 20,000 favorable and volume is 80,000 favorable, total of 1 lakh, like this. You have to write individual. Like material variance. Material is divided to 5 parts. First is the cost. Obviously, this is the cost I am writing over here. But this cost is divided into 2 or 3 parts. Like first is price, usage, mix, yield, everything. So you need to write over this. You have to write all these and then make a total. Make sure over here the outer columns are always cost. That is the first part which we calculate. For sales, it is sales value. For others, it is always cost. Like labor cost, material cost, variable overhead cost variance. Whatever the cost variance is, outer column is always that total. Individual figures can be varied. Individual figures can be varied, which needs to be written in the inner column. Okay. So this table is all set. Table बन चुका है आपका. You now know how to get the formulas like this, right? You are all set for formulas. What are the names? I already told you. These are the names. These are the names: the material, the labor, the variable overhead, the sales. Right? What is left is fixed overhead. Left out part is fixed overhead. Okay. So before moving ahead, I'll just take a 10 minutes break because I know morning se baithe hum. We are sitting since morning and all of you might have been tired right now. So we'll take a 10 minutes break and then we'll continue. Okay. Just take a rest for 10 minutes. Maximum time we will be sitting is 1 hour. 1 hour from here. Maximum. Maybe we'll complete it before only, but maximum is 1 hour. Okay. Uh, Rakhi, can you please tell me which bit question you are talking about? Number 14, as in your institute bit questions. Okay, no issues. I need to download that first. So what we'll do is, first I'll explain you the fixed overhead concept and then I'll solve your query. Okay. Okay, so the last concept in standard costing is the fixed overhead variance. Now, why I kept it at the last? Because this does not follow that table which we actually learned, the standard comparables table, right? It does not follow because as the name indicates, it is fixed. As the name indicates, it is fixed, right? So I'll just keep on adding the data to this question, okay? To make a clear view of this question, I'll just keep on adding the question, okay? Just have a look. What I'm telling you. I always start with OUDH. Now, what is OUDNH? What is OUDH? So, OUDH is overheads, units, days, and hours. Right? First of all, I'll just remove this days and hours for now. Because for first three variances, you need only overheads and units. For first three variances, you need only overheads and units. I'll say standard, actual, and RR. What is RR? RR is the recovery rate. RR is the recovery rate. Okay. Now, how to proceed with this question? I'll give you one standard. Okay. I asked you that is the standard overheads which was spent was 50,000. But actually 60,000 was spent. Okay. I asked you to spend rupees 50,000 as fixed overheads, but actually you spent rupees 60,000. This is the actual expenditure. Okay, this is the actual expenditure. But 1,000 units. I asked you to make 1,000 units, but actually you made 1,500 units. You made 1,500 units, right? This is the first term. My very first question to every one of you, is this the case of under absorption or over absorption, and by how much? My first question. Under absorption, over absorption, and by how much? Yes, everyone. Under absorption, over absorption, and whatever the case is, under or over, and by how much? Over 15K, over absorption. Okay. Okay. So basically, whatever you calculated is the first variance is from both and cost variance. Okay. How did you calculate that? How did you calculate that? Okay. So I'll give you the simple solution. First of all, you always calculate a recovery rate. Point to be noted, recovery rate is always on the budgeted, that is the standard, not on actual. Recovery rates are always set for budgeted rate, right? So how to calculate standard rate? It is nothing but 50,000 divided by 1,000. And just write over here. 50,000 divided by 1,000. And the budgeted rate is 50 rupees. Can I say 50 per unit is your recovery rate? Right? 50 per unit is your recovery rate. That is the budgeted rate. That means you should have spent rupees 50 per unit. That was the assumed figure. That was the recovered figure which I actually thought. कि 1500 हो जाएगा, right? 50 rupees हो जाएगा. Okay. Now how do we calculate? How do you calculate? You always calculate like this. 1500 पे 50 rupees कितना खर्चा होना चाहिए था? 1500 into 50 is 75,000 should have actually been spent. But you actually spent only 60,000. That means this is a favorable act for you. You saved rupees 15,000, right? So how did you calculate? If I write the formula, actually you multiplied 1500 into 50 and then you subtracted 60,000 from it. This is known as overheads recovered and this is actual overheads, right? Overheads recovered minus actual overheads. The difference is FOH cost. FOH cost variance. Fixed overhead cost variance. As the name indicates, cost. Now what cost? The cost recovered and the cost actual. Actual cost is 60, but recovered is not 50. Recovered is not 50. Recovered is as per your convenience. आप जो निकालते हो, recovered is for 1500 units and not for 1000 units. I hope the point is clear. So if I give you the formula, how did you calculate the cost variance? It is nothing but under or over absorption. Under or over absorption. Obviously, if it is negative, it is under absorption. Loss है, तो over है, so it is positive. That means profit. How do you calculate this? So you used recovery rate per unit into actual output या फिर actual units minus actual overheads. You use something like this. Preferably, I never use this formula. I actually never use this formula because students get confused. Sir, actual लेना है, recovery rate लेना है, क्या लेना है, समझ में नहीं आता. Exactly, the case is for under and over absorption. So I got the answer as 15,000 favorable. 15,000 favorable, right? 15,000 favorable. Okay, fine. Now, I divide this into two parts. First is expenditure. And the second is volume. FOH expenditure. And second is FOH volume. FOH expenditure and FOH volume. Now, what is expenditure? Expenditure is the simplest thing. Simplest. It is the difference of these two. कितना खर्चा होना चाहिए था, कितना हुआ? I asked you to spend only 50,000. Why did you spend 60,000? This is the expenditure. This is expenditure. So it is nothing but standard overheads minus actual overheads. That's it. I asked you to spend rupees 50,000. Then why did you spend rupees 60,000? This is spending, right? This is spending. That is expenditure. How much you are actually spending? So I will say you have spent rupees 10,000 extra. I won't see whether you have made any number of units or not. I will say the difference of the overheads is nothing but the expenditure variance, which is very simple. Expenditure means what? The difference of the overheads. 50,000 minus 60,000, it is 10,000 advance. Okay. Now, if I ask you what should be this answer, you should be able to answer this. The upper answer is 15,000 favorable. This is 10,000 adverse. So obviously, this has to be 25,000 favorable because plus 25 minus 10 will give you upper 15. This has to be 25,000 favorable. If it doesn't comes, then you are making one mistake. Okay. Now please ध्यान देना. Please pay attention. Volume. As the name indicates, volume. यहां से आपकी गाड़ी चेंज हो जाएगी. यहां से आपकी गाड़ी चेंज हो जाएगी. That means you will completely reverse as in sales. Since I am using the word volume, the game will change now. That is, negative will become favorable for you and positive will become adverse for you. From here, actually, the game changes. Now, what is the exact rule? The volume. Volume means what? Means units, right? Now, I'll use my basic concepts. Standard always comes first. So, can I say it is standard units minus actual units? Standard units minus actual units into recovery rate per unit. What was the standard units? Please check. Units was 10,000. Sorry, 1,000. Actual units was 1,500. Into recovery rate was 50. Just check. Are you getting the answer as negative? The answer is yes. 500 into 50. You are getting the answer as 25,000 negative, but I will say favorable and not adverse. Why is this so? See, how many units you should have made? You should have made 1,000. But did you make extra units? You will say yes. You have made extra units, 1,500. Is this favorable act for me? The answer is yes. It is favorable because 1,000 was the units which you should have made. But actually you have made 1,500, which is actually good for me. Now this is good for me because you are making extra units. I will obviously earn more on that, right? And this is favorable for me, and therefore the game changes from here. The negative becomes the favorable and the positive becomes the adverse. Again, the same basic rules. Standard always comes first. Volume means units, so it is standard units minus actual units into the recovery rate per unit. I hope the point is clear. So cost means under absorption or over absorption. कैसे निकालना है, how to calculate under and over is very clear. It is recovery rate into actual units. उसको हम बोलते हैं, ये वाला part है. This part is actually known as overheads recovered. This is actually known as overheads recovered. How much did we recover and how much is the actual overheads? If we have recovered extra, that is known as over, मतलब favorable. And if it is less, then it is under, that is loss, right? This is the answer. Expenditure, very simple, the difference of the expenditure. I asked you to spend 50, why you spend 60, that is the adverse, right? And volume, the game changes. Volume, as the name indicates, volume means units. Standard always comes first. Standard unit minus actual unit into the recovery rate. These are the three basic fixed overhead cost variances and expenditure variance and volume variance. Right? Okay. Moving ahead. As I said, I will keep on changing the question, or not changing the question, I'll keep on adding the question. Fine. So first three variances, I only calculated three steps. O and U. Standard, actual, RR. RR is recovery rate. Right? Recovery rate. How to calculate the recovery rate? It is 50,000 divided by 1,000 and I'll write over here. So recovery rate are always on budgeted, not on actual. So please keep this thing in mind. Never use 60,000 divided by 1,500. Always use 50,000 into 1,000. That means 50 rupees, 50 rupees should have been spent on each and every unit. Okay. This is the first case. Now is the time to make a division. The volume into three major parts. Actually 4 रहता है, but I'll use only 3. Fourth क्या रहता है? I'll introduce it later. First one is the calendar variance. Calendar. As the name indicates, calendar. Obviously, it is always looking for days. Calendar में days होते हैं, right? Calendar में days होते हैं. It is always looking for days. Now, if you check which I am dividing, subdividing is volume. And volume पे मेरा game change हो गया था, right? Volume, the game changed. Negative will become favorable and positive will become adverse. This will continue from here itself. This will continue, right? Okay. As the name indicates, standard costing. Standard always comes first. So इसका formula क्या रहेगा बेटा? It is standard days minus actual days. Now the problem is, since I am taking day, I cannot take recovery rate per unit. I have to take recovery rate per day. Simple rule. Standard always comes first. Calendar means days. So it is always standard days minus actual days. Since I am using days, I need a recovery rate per day. Okay. Now what is it? I'll introduce days over here. Just as I said, I work on OUDH. D stands for days. What are the standard days and what are the actual days? So I'll tell you, standard days were 20. I asked you to work 20 days in a month. 10 days off रहता है, right? 2 days मेरा छुट्टी रहता है हमेशा. 2 दिन हमेशा छुट्टी रहता है, as in Saturday, Sunday is completely off. Okay. And one or two might be other holidays or something. So I work only for 20 days. This is the standard set by me. That come to the office, only work for 20 days. But actually what happened is, you worked for like 18 days. you worked only for 18 days. Obviously, this is not a good act for me, right? I asked you to work for 20 days. Why did you work only for 18 days? Obviously, this is adverse for me. Okay. Now, how to rate the recovery rate? It is 50,000 divided by 20. And go ahead over here. 50,000 divided by 20 will give me the recovery rate per day. इसके पहले हमने क्या निकाला था? Recovery rate per unit. And now we are calculating recovery rate per day. So how to calculate? It is 50,000 divided by 20. This will give me 2,500 per day. 2,500 as my recovery rate per day. Now, it is very simple to understand the concept now. So, I asked you standard days. What are the standard days? You were actually used to work 20, but actually you worked only for 18 hours, 18 days. Into 2,500. Now, you only tell me, is it favorable act for you? I asked you to work for 20 days. Why did you work only for 18 days now? That means the labor are not working for 2 days. That is my complete loss. 1 day loss is equal to 2,500. Per day, I am spending rupees 2,500 recovery rate per day. This is my expense, right? If you won't come for 2 days, then there is a clear loss for me. That means I can say 2 into 2,500. Although the answer is positive, I will say it is adverse for me. Although the answer is positive, I will say it is completely adverse for me, and therefore 5,000 is completely adverse. 5,000 is completely adverse, right? Again, the rule is very simple. The game changed from volume. Calendar. The word is calendar. It completely depends upon days. Standard always comes first. Standard days minus actual days. Since I am taking the days, I use recovery rate per day. Okay, fine. यहाँ तक भी हो गया. We have completed till here. Time for another a point, and that is H. H stands for hours. Just as I said, I will complete the table with OUDH. And I never write a complete one. I introduce step by step always. I will suggest entire students also to go step by step. First 3 variances, I only calculate this thing. Only the upper two rows, that's it. Then I go on with the introduction. Okay, fine. Next one. I asked you to work, let's say 8 hours into this. I asked you to work for 200 hours. But you actually work for 240 hours. What is the recovery rate? Again, it is 50,000 divided by 200. 50,000 divided by 200. This will give me 250 as my recovery rate per hour. This was recovery rate per unit. This was recovery rate per day. And this is recovery rate per hour. I hope the point is very clear. Why I don't calculate all of them together? It is because the students will get confused. Sir, which recovery rate to take? And therefore, for the first three variances, it is only unit. And therefore, I do not calculate days and hours below that. Okay. So, this is the fourth variance, right? Hours and days. Now, next point. Next point is capacity. It is FOH capacity variance. The word is capacity. Now, actually, truly speaking, these are the only two variances which you should be very careful of. FOH, efficiency. These are the only two variances which you should be very careful of. You should be very careful, okay? How to calculate this? Now, just 1 second. I got a message. Okay, capacity. I just read one thing over here. I'll write hours and days. Why did I write? I'll just explain. I just wrote hours and days. And as the name indicates, hours and days, if I need to check your capacity, right, how much you should have worked for, and now I will say standard hours in actual days. What I've written is standard hours in actual days, and that's why I wrote like this, hours and days. The answer should be standard minus actual, right? But I will not take standard. I will take standard hours in actual days. How to do that? How to do the calculation? Please pay attention. This is standard and this is actual. Right? You should be very careful. Everyone will understand in the first go is not possible. I'll explain it twice or thrice. Right? Please pay attention. Standard and actual. You have to go reverse. Okay. You have to go reverse. Like I'll write over here days and I'll write over here hours. I'll write days and hours. How many standard days and how many hours are there? Please check. Days are 20 and 200. I'll write over there. I'll write 20 and 200. Actual days are how many? Actual days are how many? 18. Actual days are 18 and therefore this is question mark. This is known as the standard hours in actual days. How many hours you should have worked, that is the rule. आपने कितना काम करना चाहिए था. तो मैं आपको सिंपल से बोल रहा हूं. I'm just clearly telling that in 20 days you should work for 200 hours. In 20 days you should work for 200 hours. So in 18 days, how many hours you should work? You should have worked. So 20, that is 200 into 18 divided by 20. You should have worked for 180 hours. You should have worked for 180 hours. बहुत सीधी सी बात है. देखो 20 दिन में आपने 200 घंटे काम करना है, मतलब एक दिन में 10 घंटे काम करना है आप. तो 18 दिन में आपने कितने घंटे काम करना चाहिए था? कितना करना चाहिए था is 180 hours, right? How many hours you should have worked in actual days? This is 180. That means you should have worked for 180 hours. But what actually happened? Actually, how many hours did you work? You worked for 240 hours. You worked for 240 hours minus actual hours. 240 hours. That means, can I say 60 hours you were working actually extra for me? Now you only tell me. Is the answer negative? The answer is yes, negative. If the answer is negative, right? But think from the company point of view. You should have worked for 180 hours. But actually you work for 240 hours. Is this favorable for me? The answer is yes. You're working extra hours for me, right? I asked you that if you're coming 18 days, one day you have to work for 10 hours. But you actually worked for 240 hours in 18 days itself. That means 60 hours you have worked extra for me, right? And this is into recovery rate per hour. Since it is hours, recovery rate कितना था बेटा आपका? It was 250 into 250 into 250. This will give me 60 into 250. This is 15,000. Is this favorable? I will obviously say the answer is favorable for me. I will obviously say the answer is favorable for me. So if I am checking the capacity, okay, one thing is accepted. I asked you to come for 20 days. Okay, take example लेना. Before the exams, I asked you to come here and right in front of me for 20 days, and I asked you to study 10 days on daily basis. 10 hours on daily basis. For 20 days, you should be in front of me 200 hours, right? This was the standard given by me. You have to come over here. You have to sit right in front of me for 10 hours, right? Now I'm checking the capacity. 2 दिन आपने छुट्टी मार ली, 2 दिन आए नहीं आप. You did not came for 2 days, but for the 18 days you came, you worked, you showed more than your capacity. You sat in front of me for 240 hours in 18 days, right? Although I gave you a standard of 10 hours per day, that means you should have spent only 180 hours. You should have come to the class for 180 hours, but actually you worked more than your capacity. You work more than your capacity, and that's why it is known as the capacity variance. You are working more than the capacity. You work for 240 hours. You work for 240 hours, right? And therefore 15,000 is favorable for me. This is the capacity. So capacity we compare hours and days. What do we compare? Hours and days. इतने दिन में इतना तो इतने दिन में कितना, right? Hours and days. Okay, I hope the point is clear. Next one, the last one, efficiency. Peter, does it mean you were sitting 240 hours in front of me? You were sitting 240 hours in front of me. Does that mean you have worked efficiently? आप मेरे सामने बैठे हो 240 घंटे, बट आपको लगता है आपने 240 घंटे सच में पढ़ाई की होगी? तो आंसर इज नो. हो सकता है ज्यादा भी किया होगा. आई एम नॉट against it, but yes, it is quite possible that you were sitting right in front of me for 240 hours, but actually you did not work efficiently for 240 hours, and therefore efficiency is compared by units and hours. Again, the rule is go reverse. How to check? I will say it is standard units in actual hours. Again, standard actual. Go reverse means आपको ऊपर hours लिखना है और नीचे units लिखना है. Okay, and this is always a question mark, right? Let's check hours. Hours कितने दिन? How many hours were there? Check. It was 200 and 240. It was 200 and 240. I'll check. 200 and 240. And how many units were there? Just go to the table and check units. How many units were there? It was 1000. It was 1000. That means if you are working for 200 hours, you should make 1000 units. By working for 240 hours, how many units should have been manufactured? 240 into 1000 divided by 200. That means you should have made 1200 units, right? देखो रूल बहुत सिंपल सा है. 200 घंटे आपने मेरे सामने काम करना है और वो 200 घंटे में आपने 1000 यूनिट बना के देना मुझे. In that 200 hours, you should make 1000 units in front of me, right? You have to show your efficiency. That means if you are studying for 200 hours, I should say you have to solve 1000 MCQs right in front of me, right? But you actually were sitting right in front of me for 240 hours. 240 hours. So how many MCQs you should solve? You should solve 1200 MCQs, right? You should solve 1200 MCQs. But actually, you showed your efficiency more than that. How many units did you manufacture? How many units did you manufacture? Actually, it is 1500, right? That means इतने टाइम में आपने 1200 क्वेश्चन सॉल्व कर लेने चाहिए थे, but you showed more than your efficiency and you solved 1500 units. Or else I can say you solve 1500 MCQs, yeah, you produce 1500 units. Actual units. Actual units. That means 300 units you made extra for me. Again, the answer is negative, but I will not say this is adverse. This is still favorable. This is still favorable, and therefore this is into. Since I am taking unit, I will say recovery rate per unit. Recovery rate per unit हमने starting में निकाला था. We already calculated recovery rate per unit is 50. It is 50 into 50 into 50. This will again give me 300 into 50 will give me 15,000 as favorable. Although the answer is negative, I will put in favorable. Now just check आपका तीनों मिला के ऊपर का आंसर आ रहा है क्या? Check. 5,000 adverse, 15 favorable, 15 favorable. 15, 15 positive, 30, 30 minus 5 is 25. You are getting the same answer. You are getting the same answer. So how to compare? How to compare? Just write each and everything which I have written over here. Okay. You need to go reverse. You need to go reverse over here. I have written hours and days, so I write days and hours over here. I have written units and hours, I write hours and units over here. उल्टा लिखता हूं, I write reverse over there. Standard actual. Always the last point is question. And with this we actually calculate each and everything. With this we actually calculate each and everything. Right? Sum up. क्या करता है? First is cost. FOH cost variance. Cost variance is nothing but the under absorption or the over absorption. Next is expenditure. Expenditure is the simplest thing. Simplest means very simple. Simple, how come simple? It is the simple point that it is the difference of expenditures. Budgeted minus actual. Next is volume. Volume means output, right? Volume means output, the units. It depends units, and here the game changes. Reversal. Standard always comes first. It is units, so it will be standard units minus actual units into recovery rate per unit. So with this, these three are very simple. Next, when we come down over here, we have calendar. As the name indicates days. As the name indicates days, it's time to introduce days now. It is standard days minus actual days into, since we are taking day, it will be recovery rate per day. Next is capacity. आपकी बैठने की कैपेसिटी, कितने दिन में कितने घंटे काम कर सकते हो, कितने दिन में कितने घंटे बैठ सकते हो. कैपेसिटी इज आवर्स एंड डेज. इफ आई नीड टू चेक योर कैपेसिटी, आई विल चेक एक दिन में कितने घंटे बैठ सकते हो, इसलिए आई कंपेयर आवर्स एंड डेज. हाउ मेनी आवर्स कैन यू सिट इन अ डे, दैट इज योर कैपेसिटी. बट by sitting that many hours, are you more efficient? And we check efficiency. How will I check the efficiency? Obviously, you were sitting in front of me. Have you made any units in that? So check efficiency, units and hours. Units and hours. And how do I compare? This is standard, this is actual. ऊपर क्या लिखना है? Go reverse. It is days and hours. This is question mark. And again, reverse. Hours लिखना है and units लिखना है. Again, standard, actual, this is question mark. We go like this, minus actual. This is what we do in this point, right? Okay, so since it is not the only concept, fixed overheads, yes, I know a lot of students face difficulty in this point. एक क्वेश्चन हम साथ में करेंगे. We'll solve one question together, and I want everyone to be active in the comment section, right? एंड का टाइम है. ये मत फीलिंग आने दो कि मैं बहुत बोर कर रहा हूं आप लोगों को, राइट? आई वांट एवरीवन टू बी एक्टिव. यस, थैंक यू आरती. सो आई वांट एवरीवन टू बी एक्टिव एंड आई वांट एवरीवन टू सॉल्व वन प्रॉब्लम विद. ओके, सो यहां पर आई एम गिविंग ए सर्टेन डेटा. दिस इज स्टैंडर्ड, दिस इज एक्चुअल एंड दिस इज रिकवरी रेट. ओके, दिस इज ओवरहेड्स, दिस इज यूनिट्स. O and U, right? O and U. I always write O. They will give you days, they will give you hours. I will not write initially. I will write only O and U, overheads and rates. Okay. 80,000 and 1,10,000. Mm. 1,250. And 1,500. Okay, I want the first three variances. First three are very simple. Okay, first three are very simple. I don't think इसमें problem आना चाहिए. I don't think you have any problem in the first three variances. First three are cost, expenditure, volume. Okay, 14K under absorption. That means adverse. Check. Others, I also need answers. Come on, be quick. Perfect. 30K adverse is perfect. Okay, Raki. Okay, keep on solving. I'm also solving with you. First of all, calculate the recovery rate per unit. It is 80,000 divided by 1250. It is 64 rupees per unit, right? It is per unit. And now, how do I calculate? Yes, perfect answers. How do I calculate this? First is under or over absorption, that is the cost variance, right? FOH cost variance. You should have spent rupees 64 into 1500. So 1500 into 64 इसको हम बोलते हैं recover minus the actual expenditure 1,10,000. This is cost variance. So this is 14,000 negative answers and therefore it is adverse. This is divided into two parts. This is actually divided into two parts. What are the two parts? First is expenditure. Expenditure is very simple. That is the difference of the overheads. That is the difference of the overheads, which is standard overhead या फिर budgeted overheads minus actual overheads. Okay, Rakhi, it's Satrasala Saikiran. Okay, I'll use the word Saikiran is better. I'm so sorry, I did not pronounce the complete name. Okay, it is 80,000 minus 1,10,000. 30,000 adverse. 30,000 adverse, right? And I go with volume. By not solving also, we can clearly say this has to be 16 favorable, right? This has to be 16 favorable for the clear concept. 14,000 ऊपर above answer है, 30,000 adverse नीचे है, तो यहाँ पे 16 favorable आना ही चाहिए. Okay, volume. Just as I said, volume is dependent upon units and it is complete reversal. Volume is dependent upon units and it is complete reversal. Right? As the name indicates, standard always comes first. It is standard units minus actual units into recovery rate per unit. Since I am taking units, I will take units only. Okay. Standard units कितना था? 1250 minus 1500 into recovery rate is 64, and you will find 16,000 as the negative answer, but I will write as favorable. Right? Okay. I'll write as favorable. Fine. I introduce one more row in dash. This is days. I asked you to work for 20 days, but actually you worked for 21 days. हो सकता है एक दिन छुट्टी भी काम किया हुआ आपने, जैसे हम आज काम कर रहे हैं. We are working on Sunday also, right? We are working on Sunday. ठीक उसी तरह. You were asked to work 20 days, but you actually worked for 21 days. Yes, I'll introduce slowly, beta. I gave you the days. Yes. How much is the calendar variance? Calendar. It is 4,000 per day. Recovery rate per day. Please check. Okay. What I want from you is it favorable or is it adverse? Please tell. Is it favorable or is it adverse? 4,000 favorable. Perfect. Favorable. Why favorable? For a simple reason here. I asked you to work for 20 days, but the laborers are working for 21 days. Obviously, if they are working extra for me, this is favorable act for me. This is favorable act for me, and therefore, this volume is divided into three parts. The first part is calendar. The first part is calendar. Calendar means days, standard days minus actual days. Into I want a recovery rate per day. So it is 20 minus 21 into 4,000. Although the answer is negative, I will say 4,000 positive because in any ways you are working extra for me. This is completely favorable act for me. Fine. Second, capacity. Hours. Hours. 1600 hours. 1800 hours. Yes, 1600 and 1800. Try to calculate the capacity and the efficiency. I'll give you 2 minutes for that. Just try to solve the answer. Okay. Only few of you are very active on the comment section. Rakhi, what answer is this? 8,400. Is it capacity or is it efficiency? Okay. I'm waiting for the others. Come on, do participate, everyone. I'm teaching to everyone, not to specific students. And yes, if you're not getting the concept, you can feel free to ask. Okay, both are 6,000 favorable. Okay, so I'll just explain you once again. Please check. It is 80,000 divided by 1600. So you get 50 rupees as the recovery rate for what? For per hour basis. Right? 80,000 divided by 1600. It is per hour. Okay. Now how to check the capacity? आपकी कैपेसिटी कैसे मालूम पड़ेगी? आप कितने घंटे बैठे कितने दिन में? So it is always hours and days. How do we write? It is standard hours in actual days. It is standard hours in actual days. How to write? Standard actual. This is always question mark. What do we write? Hours and days? No. It is reverse. Days and hours. Just write it this way. So days were 20, days were 21, hours was 1600, and that is question mark. So 21 into 1600 divided by 20. That means you should have worked for 1680 hours. Right? आपने 1680 घंटे मेरे सामने बैठना चाहिए था. You should have worked for 1680 hours, but actual hours was 1800. Actual hours was 1800. That means you were actually sitting more than your capacity. Actually, you should have been here in the office for 1680 hours, but you are actually working for 1800 hours. Obviously, it is favorable for me, although the answer is negative. 120 is the answer. What is the recovery rate per hour? Because this is hours, right? This is hours. Recovery rate per hour is 50. This will give me 6,000 as favorable. Now, if I do not calculate the other one also, I can get the answer. How much? 16,000 is the total answer. 4,000 I got this, 6,000 I got this. 6 and 4 is 10. The other has to be 6. It is for sure. How to calculate? It is efficiency. And efficiency हम कैसे चेक करते हैं? देखो, घंटे आगे बैठ जाओ उससे कुछ मतलब नहीं पड़ता है, आपने वो घंटे में कितना काम किया, कितने यूनिट्स बनाए, उससे हम एफिशिएंसी चेक करता है. हाउ मेनी आवर्स डिड यू वर्क डज नॉट मैटर, but how many hours did you work effectively by making the units does matters, and therefore we compare units and hours by going reverse. So I write over here standard units in actual hours. This is standard, this is actual. We write hours over here and we write units over here. This is question mark. 1600, 1800 यूनिट्स स्टार्टिंग में दिए थे, स्टार्टिंग में यूनिट्स थे 1250, 1250. यस, तो हाउ मच शुड इट बी? इट इज 1800 इंटू 1250 डिवाइड बाय 1600. 1800 into 1250 divided by 1600. Okay, the answer is in points. Actually, point में नहीं आना चाहिए. It should not come in point because it is units. But still, since I made the question by myself, answer is expected. So it is point. Although the answer will not come in point, never in point. Units minus actual units. Actual units were 1500, right? Again negative. That means it is favorable for you. Minus 1500 will give 93.75 units into recovery rate per unit. Since you have taken unit over here, you have to take the unit rate. Unit rate was already calculated in the initial beginning 64 into 64, and the answer is 6000 favorable, which should come as it is. I hope everyone got the concept of fixed overhead and how to memorize it, how to keep that alive. I gave every shortcut for it. Please let me know if you are not able to understand any specific concept. And Raki, you gave me the wrong answer initially. Is the point clear now? And others also. Please let me know. If it is all clear, say all clear or give a thumbs up so that we can conclude. If you have any query, feel free to ask. Okay, so I feel everything's clear till here, right? Everything is clear till here, right from the table, right from the reconciliation statement, the material, labor, or everything. Okay, no issues. No issues. Yes, cycle ABC. I guess अभी हो नहीं पाएगा. It won't be possible for me to take ABC right now because it is I guess 8 o'clock right now, and we have already exceeded the time. So what I can do is I'll just try. If at all possible, I just try to record a lecture on ABC and I'll try to upload. I'm not committing right now, but I'll try as per my schedules. If time permits, I will definitely go for it. Okay. Yes. And some of you were asking how to contact. So this is my contact number. It's 9145 321 312. Right. You can WhatsApp me on this number if you have any query. Yes, Jyoti, thank you. Yes, beta. Rathi, question number 14, right? Okay, I'll just check. Let me download the paper first. Just give me a minute. Okay. So I'm just writing a question over here. Please tell me, is it the complete question? The following are the details for product P1. Product P1. Level of activity. Level of activity is 1000 and 2000 units. Right. Cost per unit. Material, it is 4000 and 4000. Direct labor, 3600 and 7200. Production overheads, it's 3240 and 12960. And selling overheads, it's 2916 and 23328. Okay, and they have asked us find the total fixed cost and variable cost per unit. Unnati, I'll provide the link for the notes. ABC and TQM. Okay, Jyoti. Yes, this question. Okay, I find this question has a misprint. The reason is this is basically a question for your budget. It's not depend on the margin or something. It is actually a budget question, which you used to learn in the budget in your intermediate. Actually, I feel this is incorrect. This should not be 4000. This should be 8000. The simple reason, material and direct labor are always variable. Always variable. Always. Always means always. They have to be variable. Material cannot be fixed, right? Material cannot be fixed. As soon as the units changes, it gets changed. Now, if you closely check, variable overheads changed, right? Variable overhead changed. So, how to check whether it is variable or fixed or semi-variable, right? How to check? So, basically, what you do is 1000 divided by 32, that is 3240 divided by 1000. This will give you 3.24, and 12960 divided by 2000. This will not give you 3.24. That means the answer is not getting matched, and therefore this is semi-variable cost. This is actually taught in intermediate first group. How to check it is a fixed cost, a variable cost, or semi-variable cost. I'll just make for production overheads. Variable cost per unit is change in cost upon change in units. Right. So changing cost, how much is the cost changing? It is 12960 minus 3240. 12960 minus 3240. And how much units are changing from 2000 to 1000? Right. So this is 9720 divided by 1000, which is 9.72. So the variable production overheads is 9.72. How to check what is fixed then? How to check what is fixed? So take any level, say 1000 level and 3240, right? 1000 level and 3240. How much is fixed to understand the concept? So here 1000 units, the total expense, total was 3240, minus variable will give you fixed. Variable 1000 units into 9.72. Yes, there's a misprint. 12960 minus 3240 is 9720 divided by 1000 is 9.72. No, the question has a misprint. Confirm. The answer is in negative. 1000 into 9.72 is 9720. Unnati, sorry. whose question was this? Raki. Raki, this question has definitely a misprint in it. Confirm misprint. The reason is, to check the variable cost per unit, we use this formula. That means they are telling 9.72 is variable. 9.72 is variable. So, but I'm not getting any answer as 9.72. 12960 minus 3240 divided by 1000. 9.72 should be variable, but if we take 9.72, the answer is not getting matched. 9540. That means I'm having a negative answer of almost 6000 or something for the fixed cost, negative fixed cost, which is actually not the case. This question is definitely a misprint. What I'll do is, I'll just go through this question once. Right? And I'll post the entire solution in the comment section. Or else you can contact me on WhatsApp. I'll give you the solution for this by making a few changes, because this is the only concept. The concept was this only. The concept is this only. You need to bifurcate the fixed and the variable cost individually. That's it. First misprint was this one. Material cannot be fixed. Material has to be variable. First misprint. And there is also a misprint because there is a huge difference between production and selling. Right? Okay. So I hope you all liked the marathon and all your queries, and all your queries have been solved. And also I have explained you every concept, right? If at all you have any queries, you can reach me up on my WhatsApp number. I gave you this number, right? I'll be happy to help, and all the very best. Just stay calm and try to attempt the complete paper. Okay. Well, that's